up from around 30,000 contracts, it went to around 1.15 lakh contracts. And they got that right because the market saw a cut of close to around 1,200 points. But take a look at what happened in the next two trading sessions. In the last two trading sessions, the FI net short positions have come down by close to around 25%. Let's get that graphic up for you on the screen yet again. The FI net short positions are down by close to around 25%. And you have the markets that have seen a rally of close to around 1,000 points. So that's the power of short covering. And that's exactly the way it's played out. Keep in mind that the FI net short positions are still at around 85,000 contracts on the short side. But the FIs, they covered shorts both on index futures, even on stock futures. There was a bounce, short covering bounce that played out. The FI net buy number on stock futures was huge yesterday. And that perfectly tallies in because on the stock futures, there was 45,000 contracts that they added on the long side. Moving to the options data, the called writing seems to have moved up. Some of those lower level called writers, well, they got stumped out yesterday. But now the action has shifted to around the 23,300 to 23,400 calls in yesterday's trade, which brings us to the levels. The near-term resistance on the Nifty will be at around this 23,500, going by the options data. You'll see a further breakout once we get past the recent high, which is at around the 23,900 odd mark. But the 20 DMA, that becomes the level you don't want to break on the downside. But the Nifty Bank will have to lead the way. It's been showing strength for the last couple of trading sessions, and even from here on, it'll have to do well because it's only around 4% away from the 52-week high, while the Nifty is close to around 11% away. So that's telling you that that one's got the momentum. Finally, the stock that I'm looking at is Havells. Yesterday, there was some news flow with regard to them buying a minority stake in a solar company. Some sell-side analysts didn't like it. The stock initially did see a bit of a dip, but it's now trading above the 20 DMA. And from yesterday's lows, in fact, it did see a recovery and ended at the high point of the day. And there was delivery-based buying on Havells as well. So I'll keep an eye out on this stock.
Okay, all right. Got that. Nigel, thanks for that. Let's get started then with the equity call of the morning. Jonathan Garner of Morgan Stanley says that their top-down earnings forecasts are cut to well below consensus, mainly on meaningfully lower house economic growth numbers. He stays defensive, waiting for an improvement in their through signposts. Among the larger markets, he says they're keeping their core recommendation of overweight domestic India, domestic Japan, Singapore and UAE, equal weight on China and underweight on Taiwan as well as South Korea. Jonathan says on the sector side, they're underweight on global cyclicals and in particular remain cautious on semiconductors, IT, as well as autos.
Okay, well, let's get in. William Lee, Chief Economist and Executive Director at the Milken Institute. He's with us now. Lee, good morning. Great to have you with us here. Appreciate it. Good morning, Prashant here. So there are the two big blocks. Talks are continuing, trade negotiations, etc. But the two big blocks which matter for global markets is China and EU. With EU, the big headline overnight was, and I'm quoting this, EU says, expect US tariff talks to make little progress. And of course, with China, apparently both leaders are waiting for the other person to call. So how is this? Is this going to be, in your opinion, how is this going to proceed? Is it going to be protracted? What's your sense?
I would have been stunned if anybody expected that offer of, zero tariffs for zero tariffs to be treated seriously. Ever since I think WTO has focused in on tariffs and tried to eliminate those tariffs as trade restrictions, the way that most countries have been trying to protect their domestic sectors has been through non-tariff barriers, whether it's explicit quotas or incredible regulatory restrictions and at high standards, whether it's health or safety or some other such thing, legal hurdles that American companies are asked to go through. And the Europeans are masters at doing those sorts of non-tariff barriers. And so that really is the heart of the discussion that has to start. So I think President Trump regarded that zero tariff for zero tariff offer as not even an opening salvo. It was a joke. So I don't think that was to be taken seriously. And I think once the Europeans get serious about wanting to open up their markets for U.S. products, then the serious discussions will continue. As you say, the big elephant in the room is China. China has been the focal point of President Trump ever since his first administration. And China is really in a situation where it recognizes that U.S. and China, the two largest economies in the world, the global trade system, as WTO is today, was formed after World War II, set up by the United States to try to help the development and recovery of economies around the world. the U.S. was the only healthy economy at the time. Now we have incredibly strong and powerful emerging countries, India, Brazil, a lot of countries coming out of not just developing stages, but into the middle class. And these middle class emerging countries require things that WTO is not able to do. So I think the key for China and the U.S. is to set a pattern, to really take apart the WTO system as it exists today, arrive at a mutually beneficial trading system for the 21st century, the needs of the 21st century, where you have huge blocks of European, Asian, Middle Eastern and Latin American countries that really have very different needs. Probably will have more bilateral agreements, much more in the way of regional agreements, and that's, I think, going to be the trend going forward. But China has to move with the U.S. Right now, we have a big face-off. There's just no way that President Xi is going to look to anyone like he's being pushed around by an American president. His domestic audience will not allow that. So I think we're going to have quite a bit of, face-saving, belligerence and a lot of tough talk until we start to see movement, and that may take a while.
Yeah, okay, so it will take a while. William, hi, morning. Great to have you on the show today. So the thing is that usually markets ignore a lot of, real economy talk, and trade talk and tariff talk until it starts getting real in terms of corporate profits, corporate expansion plans. And look at the example today. NVIDIA's, stock is sliding lower. It's taken, U.S. futures down with it. Generally, there's a risk-off sense in the market again because it's getting real. When you have to spend $5.5 billion in a charge because you can't export a certain number of chips to China or to other countries, it's a straight business hit. From a market perspective, should we believe that the worst of the market volatility, this 7-8% swings in a day, is that over? Can we hope for some calm, or would that be, a little maybe foolish?
That's a brilliant question, because that really is the point of this show, isn't it? Your audience doesn't care about what people like me have to say. They really care about what it is that you were just talking about earlier. Where can you make short-term trades and medium-term trades in order to benefit from the economic environment? And as you say, the volatility has been incredibly high, I think, because the discussion has been misplaced. Everyone is focused on the uncertainty due to tariffs. Oh my God, what are tariffs going to be doing? For me, it's really the big uncertainty is whether or not President Trump is going to be able to achieve the kind of economic restructuring for the United States and, as I just mentioned, for the global trading system. The Make America Great agenda involves quite a bit of restructuring. And the key policies that will be put in place would be smaller government to release resources for the private sector, lower taxes, fewer regulations, and a tariff barrier, a protective barrier for investors who come into the United States and set up shop. They'll be protected from unfair competition from abroad. Those are the key elements, and the tariffs are but a minor player in those elements. And President Trump is right now dissipating so much political capital. I think the big worry and the source of this volatility are nagging sense of he may not get this agenda through before the midterm elections. And if he doesn't, then game over. So I think that is where the real worry should be, and that has not been talked about enough.
All right, William, good to hear your thoughts as always. This is Nigel on this side. Before we wind down this conversation, I recall a couple of months back when we had a chat, US was the only game in town and the dollar index was getting stronger as well. Things have changed since then. The hope is that there'll be some outflows from the US equities and it could find its way into emerging markets like India. Do you agree?
I think one of the things that would feed that would be diversification. But right now, everyone's afraid about to diversify because the standard tricks for diversification, go to fixed income assets, go to treasuries, safe havens, those don't work anymore. But as I think to follow up what I just said earlier, I think your audience would be interested to know that the dollar weakness and the kerfuffle in the treasury market is not so much due to the loss of the status of the US dollar and lack of confidence in the US exceptionalism, but rather something simple. A lot of leveraged traders out there bought a lot of equities on margin, and now with the crash of stock prices, there are huge margin calls. So what do you do when you have a margin call? You sell the most liquid assets you have on hand, namely U.S. Treasuries and dollar-denominated assets and dollars themselves. So I think that really has been the source of this huge amount of volatility in the bond market, dollar market, which has frozen up any movement anybody has to diversify their portfolios to international equities. So right now, the proof of the pudding of what I just said is that you see that the U.S. Treasury market has come back to more normal status. The dollar, is moving around a bit, but it's still higher than it's been in the last 4 years. So I think one of the things that you should continue to look for would be more signs of deleveraging and more signs of imbalances within institutional portfolios and a lot of the hedge funds out there.
All right. By the way, there's a great background, Lee, behind you. I mean, is that a map or is that there's a painting?
That's a painting.
It's a painting.
That's a painting. It's something my uncle. Those are peach blossoms.
Oh, lovely, lovely. Great background and good to sort of, see this in the morning. Thanks very much, William, and we'll speak again soon.
Thank you so much for having me.
Appreciate your time here. Thank you. Well, I think while the global story continues to pan out, there is, disinflation here. Which is very much the case. Lata is here with the latest CPI numbers which came out and why we should pay attention to it. Lata, over to you.
Oh, absolutely. We have to pay attention to this inflation number. 3.34 is a 5.5-year low. And 3.34 is way below what the street was expecting as well. Our own poll was 3.59. I'll give you another level of surprise. If you take Jan, Feb, March, 4.26, 3.6 and 3.34, the average is 3.7. You know what the Reserve Bank had forecast back in February when they were giving you the quarterly forecast? 4.4. So look at the level to which inflation has surprised on the downside for 3 months in a row, even the Reserve Bank. Now, why was the number so low? Primarily because the big bugbear, food inflation, fell to a low of 2.69%, something like a 3.5 or a 4-year low as far as food prices are concerned. And we must know that we are coming from 18 months of 6 to 11% food inflation, ending January 2025. It's only then that it has started falling. The fall is across the board. Vegetables, minus 7% year on year. Of course, last year was really high. So these look really good. Eggs have fallen both month on month and year on year, about 3% year on year. Pulses, again, down year on year, that and month on month. So all these are, heavy protein items. So it's very important, the kind of things that are falling. Edible oils and fruit were the only ones that are still resisting. The core CPI we should come to, which is the non-food, non-fuel, that's gone up a bit to 4.1, but no worries here. If you deduct gold, gold is included as personal services and therefore works its way into core. If you deduct gold, it is 3.2. The point I'm trying to make is, across the board, the inflation number is way below the MPC's mandate of 4%. In fact, Goldman Sachs has said that even their April number is 3.1. Now, why am I bringing that number? Because when the RBI and the MPC go into their meeting on June 6th, the last number they will have is April. May numbers will come only by the 14th of June. The last number they have is April, which will be 3.1. April, Jan, Feb, March, April, the average is something like 3.5, if it indeed comes at 3.1, the April number. Now, you have a mandate of 4, and the last 4 months are an average of 3.5. Who is to say the MPC will not say, actually cut by 50 basis? Let me tell you, all the economists I asked said, no, that would be panic. But, the governor can still communicate and say, I'm advancing the August cut to June. My point is that we are in a serious disinflationary situation. China is not going to be able to export as much to the United States. Those goods will be sloshing around in Asia somewhere. They will have a disinflationary impact on Asia as well. So we have to be prepared for pretty disinflationary times. And we don't have a very good growth number. IIP number came in at 2.9. So, every reason for the MPC to argue that growth needs a much bigger helping hand. In any case, the consensus has clearly moved now to 5 rate cuts in this cycle. We began with 2 or 3. 5 would mean you take the repo rate down all the way to 5.25. So seriously, we are expecting big rate cuts.
For once, at least for now, I'm not complaining. It was almost unbelievable to see that disinflation in vegetables and, in the food product prices, which have been pinching so hard for many, many months. In fact, almost feels like years. Lata, thank you so much for that. So good news on inflation.
You've gone, as they say, bhaji shopping recently?
Even if you're don't
yeah?
physically going, the apps keep you updated, And when the apps, your weekly bill goes down, it's a great feeling. Why not?
I used to try to, because you really get a sense of where prices
the
are.
real world, yeah.
But
it's feeling much better, I can tell you that.
Not cheap. I mean, that's what you want in summer. What you want most is not very cheap.
We'll take what we've got. And I think, minus 7% on vegetable inflation, it's a great number to have. Lata, thank you so much for joining in with the analysis today. Well, let's tell you what's lined up on the show ahead. Lots of interactions and conversations coming up. At 8:35, Adrian Moat joins in. He's, of course, a veteran of emerging markets, has been watching India as well for many, many years and decades. He talks about the tariff impact on Asia as well as global markets. At 9:20, Manishi Ray Chaudhary of MR Capital Partners joins in. He's the market master of the day. At 9:30, we will have with us the Steel Secretary of the country, Mr. Sandeep Poundrik, joins in. Lots to discuss, including, of course, some of the protectionist measures that the Indian steel industry has enjoyed recently and whether more is needed given the tariff uncertainties. Following that, Shantanu Chakrabarti of BNP Paribas joins in. We talk to him about the key expectations from the banking sector as far as the Q4 earnings are concerned. A little later at 9:50, Gopal Balachandran of ICICI Lombard joins in to talk about the Q4 earnings fine print. And towards the end of the show, in our special segment, it's the economy. Lata today speaks with Samir Goel of Deutsche Bank on Indian and global interest rates as well as currencies.
Well, time to slip into a quick break. Got a lot of stock-specific action lined up for you in our top 10 segment on the other side. For the time being, I'll run you through the list. ICICI Pru Life, ICICI Lombard, IRDA, Oil India and Vedanta. They'll be reacting to positive news flow. We have 5 apiece. IndusInd Bank, IGL, MGL, Adani Total Gas and Gensol will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names.
Like it happened with Southeast Asia and China. Unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth. Because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own.
Welcome back. You're with us on Bazaar Morning Call, and as we've been telling you, cues across global markets have turned a little challenging because of the slide that we're seeing on Wall Street futures. And most of the Asian markets are also in the red. Hong Kong down about 2% now, Japan's down about 1% or so. Let's pull up the implied open. The last time we checked, it was suggesting that we'll start probably 60 to 65 points lower. Still around that level, 53 points, actually a little better off. So let's see. Promises to be slightly more volatile than yesterday, at least at the start. Now, what about individual stocks? Well, let's straight away get to our team, which is standing by with the CNBC-TV18 list of top stocks to watch for the day. Guys, morning to all of you. Ritu, let's kick it off with IndusInd Bank. So this external committee has finally, given its sense on the derivative discrepancies. What's the latest?
Well, yes, Surabhi, good morning. IndusInd Bank has finally received that PwC report on discrepancies, and that pegs the hit at 1979 crores, which is actually slightly below street estimates, and we understand broadly in line with RBI's initial assessment as well. And the bank has now revised the impact to 2.27% of its December net worth post-tax and will reflect it in its FY25 financials. So no ugly surprises on that front, which is positive. But the concern is the delay in disclosure on accounting discrepancies that may have larger consequences, because we understand at least 3 senior level exits are likely, including the CEO and the deputy CEO who oversaw global markets, including the derivatives portfolio. Now, the RBI, we understand, has also asked the board to submit the shortlisted CEO names 4 to 6 months before Katpalia's term end next year. IndusInd Bank, however, has denied receiving any such communication or any management shakeup.
Okay, all right. Thanks a lot for that, Ritu. Well, let's hop across to Yash. He's tracking ICICI Pru as well as ICICI Lombard. Yash?
Well, Nigel, good morning. So I'm going with green as far as ICICI Prudential is concerned, and that is because there has been a very strong beat and improvement which has come on the margin front, though on one hand the growth has been a little bit slow. So new business premium, that grew at 14%, coming in at about 7,444 crore rupees. Total APE was down 3%, retail APE was down 2%. This is the slow growth on the top line that I'm talking about. Value of new business grew by about 2%, and margins, as I said, a strong beat and improvement coming there. Up 120 basis points at 22.7% versus 21.5%. Street was anticipating a number of 21.8%. It's managed to beat that also with that number of 22.7%. Also, the stock is down 14% in the last 3 months. Because of these two reasons, I'm going with green on ICICI Prudential Life Insurance. ICICI Lombard, again, I'm going green. And that is because the strong performance which has come overall in their earnings. As far as net earned premium is concerned, that grew by 20%. Underwriting loss was down 11% at 210 crore rupees. Operating profit, that was down 26%. That was largely because the investment income saw a contraction in the quarter. Nothing apart from that. Combined ratio was up just about 20 basis points at 102.5 versus 102.3. So no major damage being done on the combined ratio level also, and the protection continues there. Hence, I'm going with green as far as ICICI Lombard is concerned.
All right. Actually, we have the management coming up at 9:50. You'll hear from the Yash. Thank you for that. The management Gopal Balachandran will be with us to talk about those numbers that Yash pointed out. So, conversation a little later. IGL, MGL, and Adani Total are in focus as well. Sud is here with details. Good morning.
Morning, Prashant. So first, APM gas price increase and now the APM gas allocation cut. While the APM gas price increase announced on 1st of April was as expected, but this allocation cut has come as a surprise. Government has announced that APM gas, that is administered price mechanism gas, allocation has been cut by 18%, and now total allocation would reduce to 40% from the current level of 51%. Remember, in the last 1 year, the reduction has been almost at 50%. If you remember, in 2024, in the beginning of 2024, the allocation used to be around 80%. Now it's going to be 40%. What do these companies say? Companies say that this allocation cut will have an adverse impact on profitability, and that's the reason I'm going with red for all the three companies.
Okay, all right. Got that, Sudarshan. So we'll keep all of these stocks on our radar as well. IRDA reported numbers yesterday. Let's go back to Abhishek to figure out how they were. Abhishek.
Well, IRDA reported a good set of numbers in Q4 FY25, but we need to watch out for their exposure in Gensol Engineering, which will be in the minds of investors in trade today. So disbursements are up 0.5% YOY, but they are up 73.6% sequentially. The AUM growth is healthy at about 27.8% YOY and about 10.5% sequentially. So the yield has actually worked very well for them. They have got higher yields in this quarter, which has helped the NII growth at about 57.3% YOY and about 22% on a sequential basis. So provisions are up 24.5% quarter on quarter, but they have reported strong bottom line growth of about 49% YOY and about 18% sequentially. The spreads have improved. So for FY25, the spreads are at 2.42% versus 2.16% on a year-on-year basis and about 2.28% that they recorded in Q3 FY25. Their asset quality also improved. Gross NPA ratio is down to 2.45% versus 2.68% in the previous quarter. So based on numbers, the numbers look really good, but sentiments that will weigh on investors' mind is the exposure that they have to Gensol Engineering. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's hop across to Sudarshan. He's here to tell us about Oil India and Vedanta. Sud?
So in the latest round of auction that has been done under open areas licensing policy, Vedanta's Kane Oil and Gas has received total 7 new blocks, and Oil India has secured 9 blocks. For Kane India, new blocks comprise of 4 onshore and 3 shallow water in Saurashtra and Mumbai, and with this Kane's portfolio increases to total 69 blocks. For Oil India, 6 blocks secured as sole operator and 3 has come in as consortium partner, and with this Oil India's total exploration areas increases to 1.1 lakh square kilometer, and that is an increase of almost 85% if you compare against the same level of last year. So it's going to be positive for both these companies, Vedanta and Oil India.
All right, so thank you very much for that. I mean, the other story, of course, which I guess was really dominating headlines last evening was the story of Gensol. Absolutely shocking details coming through in that SEBI order. Yash is here to quickly recap some of the findings. Yash, take it away.
Well, Prashant, the stock's already seen a damage of as much as 90% in the last 1 year. SEBI's come out with an interim order yesterday. Though it's an interim order, but the allegations which have been made and the explanation of the allegation pretty serious at this point of time. Just to summarize the allegation, misutilization and diversion of funds of Gensol in a fraudulent manner by the promoters of the company. The promoters of Gensol benefiting from these diverted funds out of the company and misleading market regulators, SEBI, the credit rating agencies, lenders and investors, all through this entire process of doing all these violations. As far as the order is concerned, what SEBI said is that Anmol Singh Jaggi and Puneet Singh Jaggi, the 2 promoters of the company, will be restrained from holding any position of a director or KMP in Gensol Engineering. Gensol Engineering, Anmol Singh Jaggi and Puneet Singh Jaggi will be restrained from buying, selling or trading in securities directly or indirectly. Also, market regulator will appoint a forensic audit committee which will conduct this forensic audit, and the report will be submitted within 6 months of this committee being appointed. Importantly, a stock split was also announced very recently as far as Gensol is concerned. That will be put on hold immediately.
Okay, all right, got it. So, yeah, not such great news and pretty, scathing observations and comments coming in that SEBI order. Thank you for that, Yash. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them are ICICI Pru Life Insurance, ICICI Lombard, Irida, Oil India and Vedanta. Stocks with negative news flow around them would be IGL, MGL, Adani, Total Gas and Gensol Engineering. All right, that's the stock list. Let's go across to Manisha Gupta with the latest commodity market action. Manisha, good morning.
Morning, and thank you for that, Suvi. Well, the safe haven buying clearly continuing in case of gold, with the dollar index now trading below 100. Gold continues to see further gains here. We are trading at an all-time highs yet again, above $3,275 an ounce at this point in time. There is strong buying, whether it's by ETFs or from the central banks as well, and that clearly has been supportive. So while gold continues to do very well, the other commodities not so well in the Asian markets right now. You have the crude oil prices, which have slipped yet again to near 4-year lows. The metal prices after those initial gains also seem to be now consolidating, and some marginal losses as well. Copper, aluminum, 0.25% on a weaker side at this point in time, as the markets continue to deal with a lot of uncertainty when it comes to the tariffs there. I also want to talk about rubber, which is also trading lower. It's down 4% on a week. And the biggest of declines, when you look at industrial agriculture commodities, that clearly comes in from sugar. That one is trading at a 30-month low. Sugar prices have declined by 12% in last 1 month. So apart from gold, everything is in a bit of a profit-taking.
Okay, all right. Got that, Manisha. Thanks very much. We'll take a very quick break on that note. On the other side, we'll connect with Adrian Moat, who's an investor at Hong Kong SAR and an expert in emerging markets, to talk about the volatility and how to navigate it.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबर्बन रेलवे है, लोकल ट्रेन, हमारी
Welcome back. We continue to ask that question, is the worst behind us in terms of the financial market impact of what has been, a mini storm in the first half of April? Adrian Moat, investor at Hong Kong SAR, is with us for some perspective. Adrian, always a pleasure to speak with you. And you've seen these periods several times on one pretext or the other. Now it's this whole US tariff conundrum. So we don't know how these deals are going to happen, whether China is going to blink or not. But what's your sense? I mean, is the worst of the price damage in financial markets, is that over?
Sure it is. I think we're moving into a period where we're going to see the highest level of US tariffs, arguably in history, and certainly in terms of the more modern trading history. So we're looking for an average level of US tariffs just above 20%. Now, remember that Trump did remove those very extreme reciprocal tariffs in most countries, with the exception of China, but he left in place a 10% tariff. And I think the outlook for the summer is going to be very volatile economic data. We'll have strong data as inventories were built, as companies tried to get ahead of the tariffs. And then you're going to get very weak data. People are going to be very reluctant to ship to the United States for fear that there is a deal done and tariff rates are reduced and they end up with expensive inventory. I think for the outlook for earnings, looks very troubled in the United States. And I'd expect initially companies just to say they're not giving any guidance, they're removing guidance, but eventually that will move into earnings revisions going down. They're going to go down both because demand will weaken as the consumer purchasing power in the United States weakens, and as margins are under pressure because of these tariffs. I think that all leads to what's going to be quite a difficult summer for US equities. And unfortunately, if US equities are having a hard time, it tends to be difficult for other equities to do well.
Hi, Adrian. Good morning and good to see you. When the US equities, but to be fair, they ran ahead, like no other global market. And they were the big outperformers. There was a rush of capital towards the US. Now, with this kind of uncertainty, what we've seen in the last couple of months or so is that India has come back because we underperformed. Valuation became a little better. And, that entire reversal of that trade, that buy China and sell India, that seems to be reversing in the last month or so. From emerging markets, do you think India is better placed at current reckoning?
So there's a couple of parts to that story. I think actually India and China are quite well placed in this dynamic that's going on here. Both countries have, an ability in China to stimulate. Indian economic growth has been relatively robust. India's exposure to traded goods to the United States is quite limited. It's obviously much greater if we look at the sale of software services, etc., to the United States. So I would agree that India has some defensive qualities. The issue that investors are having is that Indian valuations remain very high, and we're in a process of derating the US equity market. And I think that PE compression that's occurring, which is a very sensible PE compression because we're concerned that the economic outlook is very difficult to predict, so you have less confidence to pay up for high valuations. And secondly, we don't believe that discount rates are going to come down to try and compensate for that level of uncertainty. So I think at a fundamental economic level, India looks good, but it still seems to be incredibly well priced. And if you look at the dispersion in the Indian market, the likes of like a Bajaj Finance that's done incredibly well year to date, you're paying very, very high multiples for that growth and for that type of business. And I think investors are continuing to sort of be cautious about paying high prices in what's a very uncertain environment. and why China has been looking more attractive to them is that the Chinese tech names are relatively inexpensive and have actually been benefiting from positive earnings revisions. So if you think about, how does China respond to weakness in its external sector due to US tariffs, it has to stimulate domestic demand more. And so if the equity market is led by domestic demand stocks, which is what is listed in China, then they can actually do quite well. I think a lot of the damage from these trade wars is not going to be felt by listed China names. It's going to be felt by the large US multinationals, with Apple being, the poster child to how damaging these tariff wars can be.
Adrian, we'll leave it there for now. Thank you very much for joining us. Good conversation and really sharp points you make. And this is a story which we will continue to track with you over the next many weeks, depending, of course, on the pace of how this proceeds. Thank you very much for joining us. That's Adrian Mowat with quick perspective on things. Well, let's just quickly take a look at the markets, of course, on the GIFT Nifty is doing. I think we're still down about 50 or 60 points, so not very much by way of change. Actually, a little bit of recovery, if anything. At 8 o'clock, we were down 65. Now we're down about 40. Devin Chokshi is with us, managing partner at DR Chokshi FinServ. Devin, good to have you with us here. Thank you for your time. Yesterday, the top gaining sectors were what? I mean, actually, all sectors were in the green. Top of the list were sectors like autos, which have been beaten down because of that sort of, possible exemption, etc. Tata Motors and so many auto-anked names, which did very well. Metals, of course, interest is starting to come back. Stocks have gotten smashed. So let's just start with those two. What do you like there, Devin?
Good morning, Prashant. Well, certainly, I think the internal fundamentals of these companies, they remain absolutely convincing and strong. For most of the auto companies, the domestic demand scenario remains, I think, relatively more comfortable. The exports, yes, of course, I think in a way, if the tariff-related issues come in the way, some part of the impact could come, but which I believe that it could last only for 3 to 6 months, after which it could probably get normalized. That's what our take would be. But let's not calculate that part now, because we are still 90 days away from that activity, if at all the tariff is implemented. So we remain relatively more confident about the domestic story of Indian auto companies. And particularly, we believe that electric vehicles are the ones, I think, which are shaping up the new demand scenario in the country. So companies with the portfolio of electric vehicles are expected to relatively do well. Some of the ancillary companies are expected to do well on two counts. On one side, the input cost, I think, remaining under control, thanks to the lower gold oil price, lower commodity price, and the lower impact of the currency as well. I think that is basically working well for some of the input costs for the auto ancillary companies. And that's where you like to position the companies like Minda, Minda or Minda Power, for that matter, I think, in your portfolio. We believe that I think overall environment should remain relatively positive for both metals as well as for the auto ancillary sector in general.
Okay, all right. Hi, Devin. Good morning. Good to see you in. What about banks? Phenomenal run is what we've seen out there. And the big boy HDFC Bank, massive delivery-based buying is what we saw. They've cut their savings rate as well yesterday, and they had some room to do that. So the cost of funds will fall, and that's why, most brokerages are estimating 5 to around 7 basis points increase in their NIMs in the first quarter of FY26. Your view on this one? It didn't perform on the way up, but now, in fact, that's fine, coming back into its own. HDFC Bank.
Yes, Nigel, good morning. Well, it's catching up well. I think on one side, the liability cost, I think, is coming down, which is a good point. And at the same time, the prospects of improvement in the NII, NIM, particularly, I think, is more important. We believe that the larger banks like HDFC and SBI would be relatively in a better position, also because of the fact that the credit growth is remaining in the vicinity of around 16 to 18% in general for these banks. And that's where probably I think you are likely to see the better profit performance coming in. We do like, I think, the likes of Kotak in the portfolio, or even for that matter, ICICI, because I think they're positioning well with their different lending portfolios, be it retail or the corporate side of the activity. I think they're well balanced. So we believe that I think there is an opportunity to make money into these companies, close to around 10-15% kind of upside can be ruled out, including some of the larger NBFCs like Bajaj Finance. I think the conviction is relatively on higher side.
Devin, good morning. I also have a bank question for you today. IndusInd Bank, because now the numbers are finally official and the hit is just less than, just a little south of 2,000 crores. So the uncertainty in that sense is out of the way, though our colleagues are reporting that there could be some senior level management exits as the RBI continues to take stock of what happened. The stock is obviously at a very, very deep discount. It's just 20% off its 52-week low. What would you advise on IndusInd?
Yes, good morning. Well, maybe some kind of re-rating is not ruled out in this kind of a scenario, given the fact that the liability part is known already now, so that is getting discounted into the price. And that's where probably some contra buying, some amount of support buying can take place in the portfolio of funds who have been holding onto this particular stock. Maybe adding extra time to trade in, trade out, where you are buying at lows and probably selling it out at higher level. As I see it, I think the stock could get re-rated, but at the same time would trade in a range. And it could possibly, I think, fluctuate in that particular range for some longer period of time.
Okay, all right. Point taken there on IndusInd. I mean, big move, right? And by the way, the stock opened just 10 rupees higher. So unlike, and yesterday was a big gap up for the market. Yesterday it opened 10 rupees higher, and then, I mean, everything else came later. And the high was made at about 12 or so in the afternoon. About 7% up is what we finally closed at on IndusInd Bank yesterday. What else? Devin, I don't know. I'm not sure if you track some of these mid-cap names which saw very large moves. I'm just going to throw these names and come in if you have a view. Fino Payment was a big volume-led mover yesterday. There was Intellect Design, which went up very sharply. Mazgaon from the defense space was a sharp mover.
Yeah, Prashant, I believe that I think some of these names probably will have the tendency to go up largely because of the follow-up buying taking place into the portfolios of the investors. Not completely sure about the valuation at this point of time in these cases. But yes, I do agree on one aspect that when the market punished some of the quality mid-caps in the price fall, I guess I think with the confidence coming back into the market, they are likely to find a buying into these counters. And that's where I think we remain selective about the quality of the companies, the fundamentals of the companies, by adding them to the portfolio in the mid-cap space. We are not typically going after the momentum at this point of time because we believe that there are too many moving parts currently floating around, which probably I think would create some part of the risk in the portfolio to chase momentum at this point of time. So we stay with the quality fundamentals, even mid-caps that we have in the portfolios.
All right, Devin, stay with us. We're going to take a quick commercial break here. We're going to come back with some technical trading ideas. Sudarshan and Mitesh are going to help us with that in just a bit from now. Stay tuned.
हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
Welcome back. Well, let's get a quick technical check on the markets. The last couple of trading sessions have been very, very beautiful because we have started off in the green and we are built onto those gains. How do you trade today? Because we're going to see a 40-50 point downtake. Sudarshan and Mitesh are joining us on the show. Good morning, gentlemen. Well, yesterday, both of you all had the view you need to buy any kind of dip and play it on the upside. And that's played out for the last couple of trading sessions. What do you do today, though? We are likely to start off with a cut of around 50 points. Do you buy the dip? Mitesh, you go first.
Morning, Ajit. I would want to buy the dip. The idea is that with yesterday's gap up and the closing near the day's high, I think we will see continuation on the upside in coming few days. 23,400 was one of the target areas. We got a high of around 23,370 yesterday. And now anything closer to about 23,250, 200 zones would be a welcome buying opportunity, though the gap down is still smaller. But in case you see about 100 point kind of a cut, I would want to get into long positions on the index. Having said that, despite this gap down, I think on the stock side, we are positively biased and looking at identifying stocks where long positions or long positions can be taken with a good risk-reward equation. And that's how we are doing.
Okay. Gentlemen, morning. Sudarshan, how are you looking at the setup this morning?
Yeah, good morning. Well, it's always a better setup when I can say, let's buy on a dip. See, the market trend, the short-term trend is now up. Within this uptrend, we will see small setbacks as we are going to see in the morning today, and that's fine. That allows the trader to enter at a lower price. The trade still is look for intraday dips and go long there. Now, the dip could be at least 100 points from the open. That would be ideal. Or during the day, a sideways move, which suggests that the market is now going sideways rather than sharply down. In either case, look to buy the Nifty.
Okay, look to buy the Nifty. Sudarshan, what would your picks be?
Well, it's an all-buy list. And of course, markets can do something very different. That's a separate point. Dr. Reddy is a buying opportunity with a stop under 1133. Bharat Forge is a buy, stop under 1050. Chola Finance is the preferred buy. Let's say that it's a positional buy also. Keep a stop under 1528. And Overall Reality, another stock which should do rather well, is a buy with a stop under 1598. These positional buys can be taken, although for the Nifty, I would suggest keeping it intraday. But stocks you can carry when you find good quality stocks.
Okay, got it. So we have got those picks up on the screen as well. Sudarshan's picks out of the way. Mitesh, what about you?
Yeah. I have all my ones. Buy on Dixon Tech with a stop at 14,600 for targets of 15,500. Buy on BHL with a stop at 217 for targets of 230. Adani Solutions is also buy. It's a conditional buy. It's closed at about 887. So the level to buy above is 890. That's the pivot. So buy above 891, 892. Keep a stop at 870. Look for targets of 945. And on a mild decline, Geo Financials is a buy for around 236. Buy with a stop at 231 for a target of 248.
Okay, Adani Energy, Geo Financial, and what was the third one, Mitesh?
So I had Adani Solutions, Energy Solutions, Geo Financial, Dixon, and BHL.
BHL. Okay, got it. Thanks a lot for that, gentlemen. Well, for the time being, we'll slip in a short break. We'll be back. We'll get you pre-opening rates. We'll also be joined by Sumit of Kotak Securities. He'll talk about the APM gas allocation. Stay with us.
Okay, welcome back. There's a minute to go for the pre-open session. I sat down with Manish Chokhani, director at Enam Holdings, for a conversation on the changing and shifting macros around the world. Trump tariffs, of course, are the prime mover, but there's so much else which has been happening. So we spoke about what will do well. Manish believes that hard assets will do very well and emerging markets will do well. Gold in hard assets is the go-to according to him. I also sort of asked him what the equity market here in India is likely to do. He thinks for the next few months at least, we are likely to be in a bit of a holding pattern. Listen in.
I mean, on balance, we are in good shape as a country. 6% band hai GDP ka. So you're not going to go to 8 suddenly, you're not going to collapse to 4. It's a holding pattern. Until we get this new stimulus coming in, that catalyst is required to kickstart. The government's played its part. You've got the fiscal stimulus.
Last time we spoke, you said you need this exact thing. I mean, you need a new source of wealth effect.
Yeah.
And maybe precious metals, I don't know. I mean, is that...
Well, one sector takes off and then that animal spirit spreads. Today...
that is missing.
It's like, the average industrialist is like, should I go in this direction? Should I go in that direction? Will policy change? What will happen? Will I get the support? I think stars are aligning. We just have to be patient, I guess. We can't have a bull market every single day of the year. Sometimes it's good to just pause and reflect after a good meal. 4 years you've had a good meal. Just do a detox for a while and then take it from there. This market wants to go up. We're not giving them enough reasons because that has to come from earnings. When you're doing a single-digit earning growth, you can't say at 20 P we're like okay market. Some earnings come and then we're off to the races. And it'll still be very specific. I don't think the tidal move across sectors happen. Because in typical periods like this, you separate the men and boys as well. Look, the US has 30% holding of treasuries by foreign governments. And with unfortunately the way they have gone and kind of rubbed all governments of the world the wrong way, do you think 30% of all the refinancing which is coming up over the next 12-15 months is going to be attractive to foreigners to come in? At 4.5%, maybe you'll be tempted, but then you'll think, what if this guy confiscates my holding of treasuries? Because they've done that to other countries, which is why you've seen not just the bond yields here, but the flight of capital away this time. Number one has been gold, but it's also gone to euro. The Swiss franc is 1.2 to the dollar or thereabouts, which the Swiss central bank, I remember, was trying to hold it within parity for the longest time. The euro, which is actually, we used to call them the sick man. And Larry Summers had this thing of Europe being the museum of the world. The euro is strengthening because that capital is going back because they've clearly rubbed the Europeans also the wrong way. So I don't see an alternative for the US government, whenever this refinancing now starts coming up, to go back to anything other than printing. And that's the reason for what you're seeing is happening to gold and why we think there is endemic inflation in hard assets. So when we talk about markets, the normal trend has been US weakens, money goes to emerging markets and hard assets. What Trump is doing is only accelerating a lot of these trends, which he also does want a slightly more competitive dollar. But if you get this rise in gold, silver, uranium, copper, whatever at one end, and real assets like factories and real estate, it's a decadal move. It's not a 2-month, 3-month kind of move. And I think you'll see substantially higher gold and silver prices.
Okay, so that's a big view coming in on the market and what this volatility, the whole tariff conundrum, what it really means for Indian equities. Let's move on and put the spotlight once again on the city gas distribution space. We told you earlier, so let's revisit that story. APM gas allocation for these companies is down by anywhere between 18 to 20% effective today, which is why in the pre-open session, you're seeing those kind of deep cuts on many of the stocks. So Darshan's here again to recap the details. So big cuts there.
So within 15 days of APM gas price increase, government has today announced APM gas allocation cut. While the gas price increase was as expected because it was as per the recommendations made by Crete Parikh panel, 2 years ago. But this gas allocation cut has come as a surprise. Government has announced that APM gas allocation, which is cheaper source of gas compared to other gas because it's used for the priority regions, and it has been cut by 18 to 20%. In last 1 year, the allocation has been cut by almost 50%. In the beginning of 2024, total APM gas allocation used to be somewhere around in the range of 70 to 80%. Now it's reduced to 40%. What do brokerages say? CLSA feels that shortfall will be replaced with allocation of new well gas, which is priced 20% higher than the APM gas, and companies like IGL and MGL will have to take price hike that would be less than ₹1 to offset the higher gas cost. Jefferies believe that full extent of cost increase will unlikely to be passed on to consumers, and as per Jefferies, it builds in flat EPS over FY 25-27.
Okay, all right. Well, thanks a lot for that, Sir. Well, let's discuss more on the impact with regard to this lower APM allocation to the gas distribution companies. We have Sumit Pokarna, the Vice President, Fundamental Research at Kotak Securities, who joins in. Hi, Sumit. Good morning, and thanks a lot for joining in. Well, how does the news flow compare with what you were factoring in? Lower allocation, they'll have to source gas now at a premium of around 20 to around 30%. Your reading?
Yeah, thanks for a very good morning to all the viewers. Definitely, the domestic gas supply, or particularly APM gas supply, is reducing, and around 3 MMSCMD of gas of ONGC has been nominated as a new well gas. So from APM gas, so that means that much pricing will increase. Particularly if I talk what was happening, the APM gas is priced as $6.75 per MMBTU. However, new well gas is linked with crude oil price, which is 12% of the crude oil price. So the gas supply from APM to new well gas, and that will be supplied to city gas distribution companies. So this is a new normal according to us. You will see further cuts going forward from the APM to and moving to new well gas. So these companies have to adjust with the new gas allocation, and at the same time they need to increase the price. As per our calculation, they need to increase the price by ₹1.50 to ₹2 per kg for CNG. Going forward, given the threat from EVs plus the Delhi policy, EV policy which has come, we believe it will be difficult for these companies to maintain these high margins, and they will. That's why we have been negative on city gas distribution companies, particularly IGL and MGL, who has got a higher weightage in this segment on the APM side. So we have been negative for last more than 1 year, and we have been recommending investors to move away from these two companies.
Okay, get your sense of caution. Sumit, what is the kind of margin hit that you're right now penciling in because of this lower share of APM? And then, like you're saying, they've not taken commensurate price hikes to offset the impact of the more costly gas that they're getting. So what's the margin hit for, say, an IGL or an MGL in FY26?
Yeah, so we believe if they can pass on the burden of this by ₹1.50 to ₹2, they will be margin neutral. So we need to wait and watch how this happens, because there are political compulsions, there are EV threats, and there is a substitute product, petrol, diesel. So if you have increased price too much, then obviously the conversion rate of from liquid fuel to gaseous fuel like CNG will happen at a lower pace. So we need to wait and watch how does that pan out. But if they do a price hike of ₹1.50 to ₹2, they will be good enough.
Wow, okay, ₹1.50 to ₹2 of a price hike will mitigate the impact. Got that. So let's see if the companies take that kind of a price hike or not. That's one part of it. And secondly, just to get an idea of the change in the feedstock now that they have to take gas from a lot of the newer wells, what is the blended increase in the cost of gas for these companies?
So that will depend on each company, because everybody has a different set of mixture. Gujarat Gas has got more industrial weightage, and they are dependent on more on international gas prices. However, MGL and IGL has got more domestic gas allocation, because their weightage more towards CNG and PNG, domestic, rather than industrial side. So it depends on which company we are talking about. Definitely, if you look at the substitute product, which is naphtha for Gujarat Gas, how the prices are trading there, they can still pass on the burden to the industrial consumers. Yeah.
Yeah,
So,
but IGL and MGL, you're saying that for MGL and IGL, the actual increase in their feedstock cost in the overall gas prices will be a little lower than for Gujarat Gas. Any rough estimates for MGL? Say how much does the cost of gas increase by?
No, what I'm trying to say is Gujarat Gas has got more industrial volumes as compared to MGL and
IGL. Yes.
Yeah. So they are less immune as compared to with this new policy change which has come. So it all depends how they will increase the prices and they can pass on the burden to the end consumers.
Okay, so basically you're saying stay away from all three, right? Avoiding all the...
As I mentioned, being a B2B, it is easier to pass on the burden as compared to B2C, given the current political scenario plus EV threat and other things. So if your industrials are concerned, you just need to see how the naphtha prices are moving. So Gujarat Gas, we are not negative, but IGL and MGL are negative.
All right, we'll leave it there. Thank you very much for joining us. Good conversation as always, and speak again soon. Let's talk about 9-10 calls. Sudarshan is here. Mitesh is with us as well. Sudarshan, what do you have?
We considered for buying, buy Chola Finance with a stop under 1528.
Okay, Chola Finance. Mitesh, what about you?
Adani Energy Solutions, buy above 891 for targets of 945.
Okay, all right. Let's revisit IndusInd Bank now. So, of course, I mean, that auditor's report was out and we have some source-based information now on this as well. Stock was, of course, the top Nifty gainer yesterday, about 7% high, starting about 1.5% up this morning again. Ritu, take it away.
Well, Prashant, there is a top-level shakeup. We understand that could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming months. Now, we've been given to understand that this includes the CEO along with the deputy CEO who was in charge of global markets, and that includes the derivatives portfolio. And this is because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures by the bank. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank denied receiving any such communication and did not comment on the management changes. The bank has also now received this external auditor PwC's report on the derivative portfolio, which pegs the hit at about 1,979 crores, broadly in line with the management's own estimates as well as the street's expectations. And we also understand around the regulator's preliminary assessment of the hit. Now, the bank had initially pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front, at least. Brokerages like Morgan Stanley say they are going to closely monitor the upcoming earnings for more insights into the outlook. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Okay, all right. Got that. Ritu, thanks very much. So IndusInd Bank on the radar as well. Pre-open suggests that it will start maybe 1.5% on the higher side. Finally, as we're getting set for market opening, the Nifty is very, very quiet. So the implied open seemed sort of a little, perhaps too optimistic, given that the nature of global markets is once again a little jittery at this point in time. Asian markets, I'm just recapping the global screen as well and just going back to see what US futures are doing. US futures are still down. Nasdaq futures are still down about 1.5% because of this Nvidia impact. And because of that, Asian markets in general are not in great shape. Hong Kong is down 2.5% right now, which explains that we'll have a very quiet opening. So I guess, Prashant, if we at least hold our own, retain some of yesterday's gains, I guess the bulls will take that as well.
No, absolutely. And, so slightly quieter and calmer markets needed the hour. Let's see if we are able to get that. 23,344 is where the Nifty is at. It's been frantic down and then very, very fast climb back up as well. So we are basically back at levels where we were on the 1st of April before those so-called reciprocal tariffs were announced on the 2nd of April. And just been some absolutely historic price moves for markets here, not so much here, but actually around the world, especially in the US and other places. So the first trade should come up on your screen, and we'll look at what the open is going to look like. We'll do, of course, indices first, and we'll look at specific stocks.
All banks, by the way, IndusInd, HDFC, Axis, it's just banks charging away this morning as we open.
I think that ICICI Bank 25 basis point deposit cut is important because, I mean, that is the cost, right? And they are effecting a deposit rate cut effective today, and that's one of the leaders. 15 points lower is what the Nifty is indicating. The Sensex is down 30, so this is neither here nor there. It's kind of flattish, in the flattish zone. The Bank Nifty is up about 0.25%, 52,490, 52,500 actually is where the Nifty Bank is at. Mid-cap index is flat, and I think you've got a small-cap index will come up on your screen, which is also largely flattish, nothing, almost unchanged at this point. Nifty heat map gives you a quick snapshot view. What do we have? It is more down than up, certainly. Banks are on the sort of top end in terms of what's doing well. On the other side, it's basically a plethora of things. It's a very, very mixed start. Surabhi.
Okay, by the way, there's some breaking news coming in on CNBC.com that China has replaced its top trade negotiator to try and circumvent this absolute roadblock of a negotiation with the US. So keeping an eye out on all the global developments as well. But for the time being, let's look at what's taking the market lower here. Maruti is down about 1.5%. It's the weakest stock on the Nifty right now. Tech is weak. Infosys is down. HCL Tech, Tech Mahindra, Wipro, which is reporting numbers. All of the tech stocks are lower. Zomato, which is now known as Eternal, the listed entity, 1% lower on that stock as well. Reliance is not helping the bulls' cause today. Also putting pressure on the downside. Global-facing stocks, basically global-facing stuff is weak today. Tata Steel, Hindalco, IT, like I said, all of these stocks are on the lower side. Now, what's the counterbalance? It's financials, as we've been pointing out. HDFC Bank, 0.6% higher. Kotak Mahindra Bank, Axis, 0.5%, 0.25%, these kind of gains. I mean, the banks are not charging away, but they're at least preventing a wider fall. ICICI Bank itself is also trying to hold on to a gain of about 0.25%. So basically, it's a bit of a risk-off sort of a market. There's some buying on lever as well. Asian Paints, ITC, very close to the flat line. So basically, risk-off, going back to a little bit of the conservative side of the market. That's what's going on. And Eicher Motors, by the way, is the top winner on the Nifty for the time being.
Well, IRDA as well is higher in today's trading session. That's spiked up in trade. Yesterday had a good close to trade. There'll be a Gensol hit that will come, but that'll be in the following quarter, I think. So for the time being, the street has read those numbers positively. EPAC Durables, that's another stock that's opened high with a gain of closer around 4% or thereabouts. A good move. JPM Auto, that stock is flying away. It's up closer around 6.5%. So big up move is what we're seeing on that particular name. And on the flip side, you have Goldiep. That's cooling off a little bit. Remember the last few trading sessions, that stock has seen a big run. So we have Goldiep that's cooled off a little bit in today's trade itself. Keep an eye out on some of these textile companies because the Bangladesh has banned import of yarn from India through all land ports. So I think Vardhaman Textiles is one stock that could get a bit of a hit out there. For the time being, I think the stock Vardhaman Textiles, let's get that stock up for you. Nitin Spinners as well as another one that could get hit a little bit, a mild hit out there, just down 1% or thereabouts. So stocks not really reacting to that piece of news for now. But the Nifty Bank, that's the one that's leading the way in today's trading session, up close around 150 points or thereabouts. The big winner from the FNO stocks, ICICI Prudential, up 3.5%. So that's the big winner. And on the flip side, you have MGL, that's the biggest loser because of the APM gas cut. They'll have to source their gas at a higher price. That's why Mahanagar gas is down a good 5%.
And IGL as well. IGL is down about, MGL of course much larger cut. IGL is down about 1.5% as well. What else? I mean, Infi is the biggest volume-led loser. It's down about 1% right now. There's Mazgaon, which was a big winner yesterday, is down about 1%. Small moves. ICICI Lombard is a bigger one, which is down about 3.5%, 4%. As I said, we'll have the management up with us at 9.50. Zomato Eternal is down about 1.25% or so. Maruti is down 1.6, 11,660 on Maruti. Amber, Sun Pharma, Sai Life was a big, I think, 10-15% mover yesterday. That is coming off a little bit, 3.5% right now. These are just reversals. I mean, Home First was up, I think, about 6% yesterday. It is down 2.5%, 3% now. Kaveri Seed was a 5-6% mover yesterday on the upside. It's down 3% right now. So this is just sort of a bit of a flip-flop after the very large gains that we saw on many of these names coming through today. Apart from that, I mean, not very much. We've mentioned, I think, bulk of what is happening and bulk of what is moving out there. Well, let's welcome in Manishi Chaudhary, Chief Executive Officer, Emmer Capital Partners. Manishi, good to have you here. Thanks very much, as always, for your time. You know, as Manish Chokani said, and I think it's a general feeling, right? Just look at the price action here. The market wants to go up. You can feel it. But there aren't enough triggers, I guess. And of course, I mean, there's a problem of valuations and single-digit earnings growth, etc. as well. But what's your sense, Manishi? Markets, I mean, I'm talking about India here, over the next few months.
What you said almost hits the nail on the head. You know, it's the situation right now is that valuations are, I mean, they have no doubt declined over the last 6 to 7 months, but not really as cheap as investors would like them to be. And at the same time, the bigger concern is that earnings growth, earnings estimates are still declining. You know, in fact, there was a small uptick to the consensus EPS estimates for both year 25 and year 26. But when the present earnings season, the result declaration season started from the first week of April, they have the earnings estimates have started declining again. And I think that for India, rather than the global noise that we are seeing, is possibly a bigger concern. And, and that's why I said just about a couple of weeks ago that I think Indian investors would have to wait. They have to brace for another leg down during this earnings season. At the same time, if one looks at the long term, India is clearly better placed than many of the Asian peers. After all, a 10% tariff is better than 26% of tariff. And at the same time, as a consequence of this global reshaping of the supply chains, that's kind of inevitable now. We will almost certainly see more of what Apple has been trying to do. So it is over the long term, not so dismal a picture, but in the near term, we have to brace for more valuation correction and more earnings estimate decline.
Okay, so earnings will continue to be a reality check. Got that point. Manishi, just give us 1 second. I wanted to look at two stocks, JBM Auto and Electra Green Tech. Nice surge on both of these, 4.5% to about 7% on JBM right now. Electra is up about 4.5%. There's some buzz about a large order, electric bus order, could be as big as 10,000 crores. And of course, these companies manufacture e-buses. They're part of the supply chain. So perhaps there's some excitement on who gets the win, if they get it, if Tata Motors gets it. So worth putting that out. But Manishi, to get back to the point that you're making, that earnings continues to be maybe our Achilles heel. But isn't the fact that the fourth quarter is also sort of, it's going to be maybe muted, maybe not as bad as Q3, isn't that already in the price? And what are the numbers that you have in mind? I mean, how will we end Q4? The projections for next year talk about maybe, 10 to 11% earnings growth. Do you think that will actually happen?
10 to 11% for next year, which is fiscal 26, is kind of reasonable. But many of the earnings growth estimates that I'm seeing from consensus, if you look at Bloomberg or FactSet, they're actually in the mid-teens even now. They're in the 15, 16, 17% range. And I think those estimates will have to come down. Which are the sectors that would suffer? I think, consumers, particularly consumer staples, these companies are constantly, in each and every quarter, they're postponing their turnaround target. I hear analysts asking the companies, when do you think your earnings environment would bottom out and demand would, gradually begin to come back? And almost in each and every quarter over the last 2 or 3 quarters, I'm seeing that it's going to happen in the next 2 quarters. And that timeline keeps on shifting. So that would be clearly one sector where I would expect earnings estimates to come down further. Second, IT services. Even though services sector has not been hit by the Trump tariffs, there is a clear wait and watch environment among the U.S. corporate investments. So, investors or rather the corporates are not really willing to invest more in either capacity expansion or improving productivity through tech investments. And that's not good news for IT service companies. As these results come out, as we get more and more commentaries from the IT companies, I would almost certainly see another leg down in their EPS estimates. I would think that even some of the domestic sectors like industrials, consumer discretionaries, you would have earnings estimate downgrades, partly because those earnings estimates have not been downgraded to the full extent that they deserve. But honestly, I think the domestic sectors are possibly close to the end of their earnings estimate downgrade cycle. Now we have to be more careful about the globally linked sectors like IT, like metals, like some of the pharmaceutical companies and so on.
Just to recap that, Manishi, so you're saying downgrades in IT and in consumer discretionary, those are the big ones. Right. Where else will you see, or are you expecting big downgrades?
I would expect some of the other globally linked sectors also, let's say metals or other materials. So these 3 or 4 sectors put together is almost about 40% of the total Indian earnings, the earnings profile. So that is, those are the sectors that I would be more concerned with.
And do you feel that this reality of lower earnings, do you feel that it's not adequately reflected in stock prices in the market level right now? So there's a downside risk to the market. Is that what you're saying?
Yep. In fact, as I said, that if you look at the consensus estimates for the market as a whole, for most of the aggregators, it is turning out to be about 15 to 16% for both fiscal 26 and fiscal 27. I would expect at least the fiscal 26 number to come down to just low teens or early double digits.
Okay, all right, Manishi, appreciate you joining, and thanks a lot for giving us your view on the markets. We look forward to having a longer chat with you in the next couple of weeks. Well, time to get to an exclusive chat now. We are now joined by Mr. Sandeep Pondrik, the Secretary, Ministry of Steel, who joins us on the show. Hi, sir. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. And before I move forward, I just wanted to compliment you as well as your team. You all were rallying for some kind of protection for the steel industry, and very rightly so, going by the kind of uncertainty we have in the global backdrop. And this is the second time I've seen in the last 10 years or so that you'll have come in there and helped the steel industry. I recall the MIP that was imposed in 2015, and now, in fact, the safeguard duty as well. So good going on that front. But, sir, we have a couple of questions on that front. When does the safeguard duty of around 12% take shape? When does it get implemented? Point number one. Point number two is there are various rumors and murmurs that maybe, in fact, that safeguard duty could move up to around 20%, purely going by the kind of uncertainty, kind of dumping we're seeing from the Chinese. Is there a possibility for it to move up?
So, thank you and good morning. On the first question of safeguard duty, when it is going to be implemented, as you know, DGTR has given its recommendations. They are in public domain. DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. I really can't give you an exact timeline, but my expectation is in near future a decision will be taken on that, so we can expect that. On your second question, point about 20%, I really don't know because it's a, as you know, the DGTR process, the safeguard duty imposition process, is a sort of a quasi-judicial process, and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. So I think when the decision will be taken, DGTR's recommendation will be the main basis on which the decision will be taken. I don't see any reason for the rumors about 20% safeguard duty.
Okay, all right. Thanks for clarifying that, sir. But near future, could you quantify it? Should we work with 45 days to 2 months? Would that be a fair estimate? Within this time, we should see the implementation?
You know that I really can't give you exact timeline because it's not the Ministry of Steel which will take a final decision. It's the Ministry of Finance in consultation with Ministry of Steel and Ministry of Commerce and everything. So I really can't give you a exact timeline for that.
Okay, all right. But at least you're clarifying that as of now, we should be working with that 12% mark itself. You know, those rumors of around 20% for the time being, that they don't have any merit. What about steel consumption, sir? You know, that's been quite strong in India.
Yeah.
The globe has been in a tizzy, but steel consumption here in India has been good. 9 to 10% in an environment that was rather brittle. For this year, what kind of a number you're working with in terms of steel consumption growth?
So I totally agree with you on that. In fact, India is the only country, only major economy where steel consumption is growing in double-digit numbers. If you actually see the data, in 2020-21, we were 95 million tons, increased to 105 with 21-22, 22-23, roughly 120, 23-24, 136, and this year it is 151. So we are growing for last 5-6 years at least for in double-digit numbers, while the world's steel consumption is roughly 1% or even less than that. In all the major economies, the steel consumption is either stagnating or going down. So India is the bright spot in terms of steel consumption, and we expect that this will continue, especially in view of the fact that number one, government spending on infrastructure is sustained. Government is pushing infrastructure. So more than 1 lakh crore last year, more than that this year on infrastructure. Then other government programs on roads, bridges, housing.
Yes.
Add to that the private sector development in real estate and other fields. So we expect that for next few years we will continue to grow in double-digit numbers. That's what our assessment is. And to match to that, we will need to have the production capacity.
Sure.
I would also like to point out one more thing which I have stated earlier, that the per capita consumption in the country now is more than 100 kgs per person. And it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that, if you see our GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%.
Okay, so above 10% growth in domestic steel consumption. Got that point, sir. But sir, just to revisit what you said earlier on the safeguard duties, and you were telling Nigel that you don't see much merit or any reason behind these rumors of expecting 20% safeguard duty. If I could just press on that point a little bit, when the safeguard duty calculations happened and the industry had made its case with the government, this was the US liberalization day era, where anyway companies were talking about dumping happening from China and allied countries like Vietnam, etc. In this new reality where there is a tit-for-tat fight between China and the US and tariffs are as high as 145% on China, will 12% safeguard duty be enough to offer protection to the Indian industry? Because there's a huge fear of additional dumping through some other routes, circumvention, maybe not directly from China. Will 12% be enough, sir?
So let me say what has been the import in last year. If you actually see the import data for 24-25 as compared to 23-24, the import has increased by roughly 1 million ton. So it was roughly, I would say 8.3 in 23-24. This year it has been 9.5, so 1.2 million ton increase, which is about 14% increase. And most of that increase has, the bulk of the increase is from Japan, not from China. So if we actually see the import data, China, Korea, etc. are more or less at the same level at 23-24. So I don't expect any major import increase because of the present scenario. Also in view of the fact that in addition to safeguard duty, we are also trying to see that misuse of licenses doesn't take place. We have got complaints that in certain cases and in certain countries, licenses are being misused by importers and exporters both. So that is under investigation, and we would try to put a stop to that kind of practices. So it's safeguard duty, I don't think is the only way to protect the domestic industry.
Mr.
Other
Pandit?
ways of ensuring that the proper procedures are,
Yeah, sorry, I completely take your point. Good morning, Prashant here. In what way, sir, are these licenses being misused that you are sort of looking at?
So basically,
just to illustrate an example, with an example.
They are still under investigation. Yeah. So just to get an example, basically what we are getting complaints is that if a particular license is with a licensee in a country, then multiple factories or multiple units are using that license to export steel to India. So suppose legally only one person to whom the license has been given to the entity, they can only export, but we have got complaints that malpractices in that respect is happening, that people are using that license to export to India. So similarly, the other example is where misclassification of products. We have got complaints that misclassification or wrong classification of products is being done to get out of the BIS and QCO requirements. So we have got those complaints. We are investigating them. We will try to plug those loopholes also, so that these kind of things don't happen.
Right. Mr. Pondrik, just to press on the earlier question, I think you made it clear, but allow us one more attempt. Not on the rate of 12 to 20%, but do you reckon, because I mean the US-China thing looks like a very, very protracted thing. Our imports were only about 3 million tons from China. But the point is, it could be, more steel could come from other locations. So are you worried about that? And also, will more products need to be covered under these kind of safeguard duties, stainless steel, etc.? Or you think that's not necessary?
For now, I will stick with what the DGTR recommendation is, and if we see in future that what you are seeing is taking place because of the present situation, if there are any changes, then government can always have a relook. So that option is always open, but for now I don't see any any reason to have a relook at that for the now. On the product side, stainless steel, I don't think there is any application filed by stainless steel industry. As you know that for safeguard duty, the industry has to file a application with DGTR. So if the industry files, then the process will be undertaken by the relevant authorities, and government will take a decision on that.
Mr. Pondrick, just to clarify, final on this tariff point, can you tell us if in the last couple of weeks you've received any fresh applications from industry to consider a duty even higher than 12%? Or can you confirm if the DGTR itself could be thinking of maybe revising its suggestion of 12% as of now?
I can't comment on behalf of the DGTR because that will have to be answered by DGTR. In the Steel Ministry, we have not received any such applications for increasing from 12 to 20%. DGTR, you will have to ask the DGTR whether they have received any such applications.
Okay, all right. You know, when I speak to some of these steel producers, they said the higher the better. But as of now, you're saying you've not heard it. So maybe, in fact, you know, that's not yet reached your ears. For the time being, we'll work with 12%. Let's get a couple of quick pointers out of the way, sir. There was talk of this mega merger, NMDC Steel, SAIL, as well as RINL. Is that on the cards or no?
RINL, as you know, that government has given a lot of money to RINL to keep it as an ongoing concern. So I don't see any possibility of immediate merger. That decision is not there in the government. Similarly for NSL, so for now, no such talks are, or no such thing is happening in the ministry for merger of these three.
Okay, all right. And no merger as of now between these three. Also, any plans to divest NMDC Steel? Has that moved forward?
As you know that the 21 decision of cabinet that NSL will be divested still stands. However, not much progress has taken place on that front. That process is undertaken by Department of Divestment, as you know. So DIPAM is the responsible department for that. As far as our information is, not much progress has happened because of various reasons, including local resistance and all of that.
Okay, got it. All right, very quickly, sir, before we let you go, what about Ireland conversation with the Karnataka government? They wanted to push through that bill, which is going to be increasing royalties to a very, very large rate. There's been to and fro. I believe that it's not yet got the green signal. Are you all in conversation with them for a more rational rate out there? Because otherwise it will make mining unviable for a lot of these miners.
I agree that if we increase the taxes or royalties or whatever on iron too much, then it will have an impact on the mining industry. Also that cost of iron ore in the country is already not very low. So if we increase that, then it will have its consequent impact on the steel prices also. As far as the talk with Karnataka government is concerned, that is being led by the Mines Ministry because they are the nodal ministry for all mines and the bill which has been brought by the government. So Mines Ministry is talking on behalf of Government of India,
right?
Both in the legal system as well as with the state government.
Got that. Thank you so much for providing all that clarity, Mr. Pondrick. Really appreciate your time here on CNBC-TV18. And we look forward you're able to join us more frequently to touch upon the important sort of issues with regards to the sector. Thank you very much indeed. We'll take a quick commercial break here. Markets have recovered a little bit. We're up about 25 points from being down a little bit. We come back and we put the focus on the BFSI space. We'll get you expectations. Abhishek is standing by. With that, quarter se quarter tak. Back in 2.
Welcome back. It's time for our special offering Quarter Se Quarter Tak, where we bring you key expectations from the quarterly earnings. Abhishek is joining in with the expectations from the banking sector in Q4. Abhishek.
Well, to begin with, business momentum of banks have softened quarter on quarter in Q4 FY25 versus Q3 FY25. So take a look at the deposit growth at the end of the fiscal. Deposit growth was around 10.25% YOY and about 2.3% sequentially. Q3 FY25 deposit growth was around 2.6% quarter on quarter. Now, advances growth rate have softened to 11% YOY and about 2.3% quarter on quarter as of FY25. Loan growth, however, continues to remain higher than deposit growth rate. So this compares to a growth rate that you saw of 11.2% YOY and about 3.6% quarter on quarter in Q3 FY25. So business growth rate of lenders have softened at a time when interest rates on liability side is at the peak or of the businesses at the peak. Hence, we can now see the beginning of cyclical pressure on net interest margin of lenders. Now, analysts do estimate that the net interest income growth to be sluggish in this quarter, especially for PSU banks. Now, PSU banks have largely raised deposits as a higher cost, while their loan growth is lower than the industry levels, is what analysts estimate. Credit deposit ratio, as a resultant of higher loan growth than deposit growth, the industry has witnessed or seen a credit deposit ratio at an all-time high of 80.8%, which reflects a more aggressive lending stance from the lenders. Now, this augurs well for some of the lenders to maintain their net interest margin at healthy levels if they are able to curtail their slippages. Now, credit cost for this quarter, certain sectors, especially those with unsecured lending like microfinance, are expected to face higher credit cost in Q4 FY25. Slippages for the banks could be on the higher side quarter on quarter, which could lead to higher provisioning requirement and thereby impact the earning capability of the lenders. Now, with respect to asset quality, while asset quality is generally stable, concerns will remain around the unsecured lending portfolio of lenders, which are expected to witness continued deterioration like they did in the previous quarters. So, analysts do estimate higher slippages for the banking sector in Q4 FY25 versus Q3 FY25. With respect to earnings outlook, overall, the earnings are expected to remain weak, particularly for PSU banks, largely due to lower net interest income growth as well as lower treasury gains for some of the lenders. Higher credit costs can be seen for some of the lenders, thereby impacting their earnings momentum. Overall, earnings are expected to see weak momentum for the banking sector in Q4 FY25. Now, we do have some of the key estimates from Kotak Securities. For SDFC Bank, they are expecting NII growth to be about 8% YOY, while PAT growth to be about 5% on a YOY basis. For ICICI Bank, the NII growth is expected to be at 8% YOY, while the PAT growth also to be at 8% YOY. For Axis Bank, Kotak Securities estimates NII growth of just 4% YOY, while profits can decline 7% YOY. For SBI, they are estimating NII to decline by 2% YOY, while PAT can decline by as much as 43% YOY and more than 30% quarter on quarter. For Bank of Baroda, Kotak Securities estimates NII to decline by 3% YOY, while PAT to decline by 16% on a YOY basis. Back to you.
Okay, all right, Abhishek, thank you very much for that. So getting set for the Q4 financial earnings season. To talk about this, we've got Santanu Chakrabarti, India analyst BFSI at BNP Paribas, joining in. Shantanu, great to have you on. It's all eyes on financials. All hopes are now resting on big banks and NBFCs in the market, and we're seeing that in stock prices as well, right? The question is, will earnings match up? Your opening thoughts?
Right. I mean, it's very clear to us that this quarter marks the bottom on earnings growth for the sector, right? Maybe not the bottom for margins, which is one quarter further out, given the rate cuts and all of that, which we had expected. But earnings growth from here on out by the middle of the next financial year is supposed to reach from negative territory into mid-teens. And therefore, what the market will be more focused on is not the known fact about what the balance sheet growth looks like for each of the businesses, or the fact that, next quarter there'll be a margin hit. I think investors will focus a lot on what's happening on the growth outlook front. And this especially becomes salient in the context of the liquidity support that the RBI has been providing. And if RBI was to be backstopping all liquidity impact of foreign selling, then from that onwards, we would expect some acceleration in both loan growth and also commensurately deposit growth, because if money is not leaving the system by means of current or capital account, then every rupee of credit growth will translate into a rupee of deposit growth. So that's what the setup is, which is why I think the outlook provided by the banks and what could be perhaps the first set of constructive commentary on growth in a long time would be the key determinant this result season.
So to put that in some broad numbers, Shantanu, let's say if I decide or anyone decides to buy large cap banks as of now, and I'm talking not Q4, I'm saying FY26, what is the kind of growth in the book that one would be buying at current prices? And even margins, while I take your point that the margin recovery could be some time away, look at what banks have done. HDFC Bank, ICICI Bank, they're already announcing a cut in deposit rates. It's happening really quickly, the transmission. So that perhaps is better than what the market would have hoped, because usually deposit rates are lowered with a lag and therefore you have that pressure. So give us a sense, next couple of quarters, anyone who's buying banks right now, what kind of growth and margin outlook are they buying into?
Right. I mean, Suri, extremely pertinent observation on your part. And I think the next leg of that trade is clearly current account and savings account starting to pick up. Especially, Surbi, you hear this very often talked about that the reason that current account balances in the last 3 years have not really moved for banks is that because the government has got more efficient at managing its day-end balances and so on and so forth. Now, if you look at the gap which has opened up, that cannot be explained by that phenomenon alone. I think if you dig a little deeper, you'll see the main reason that current account has lagged in India over the last 3 years, lagged the growth in money supply and deposits, is because businesses in India, frankly, have gotten more conservative on their cash cycles, which is basically that the working capital cycles for businesses in a period where money markets have remained tight, in a period where credit policy from banks has been tight, have got extended. So the amount of, say, check values that clear on a daily basis have gone down, which essentially is the current account balance. Now, the good news around that is if businesses get more confident with, say, getting money from a CP at the end of the day, or if they call their bank for an OD extension, it's going to come through, then automatically their payment terms start to get, better. And that has a ripple effect through the system, and current account balances will move up again. So, what you're seeing in terms of rate cuts or HDFC making a statement by taking its, savings rates to 2.75, just 5 basis points north of SBI, all of that is just beginning of the easing cycle. And I completely agree with you, which is why we are very constructive on FY26 earnings growth for banks as a whole. The only headwind that we see is that from slightly low levels of credit costs that some banks have in this financial year, the next year you might see some normalization. But it won't dull the overall earnings picture.
Okay, Shantanu, just got 10 seconds left on the chat. Since you're very constructive on banks, give us the top picks.
Topics are HDFC, ICICI and Axis in that order. Of these, ICICI stands out in a slightly different way in that if the rate cut cycle doesn't pan out, or the acceleration that we are talking about doesn't pan out, is the least impacted amongst the three.
Okay. All right. Shantanu, a good conversation. Thank you very much for joining us and sort of getting that perspective. All right. ICICI Lombard is the next company that we're focusing on. Net earned premium has risen by 20% year on year. Underwriting losses have declined. Combined ratio is looking a little better. Let's bring in Gopal Balachandran, Chief Financial Officer at the company, who is with us now to take some questions. Gopal, good morning. Prashant this side. So for FY25, gross premium grew 10%. Net earned premium grew 17%. Can FY26 be a better year on both these fronts? And what is the growth that you're baking in on these two matrices for the coming year?
So good morning, Prashant, to you and all of your viewers. So let me just kind of put this in context. I think when we started FY25, what we had kind of talked about is from an ICICI Lombard standpoint, we expect to have an outperformance with respect to top line growth. And that is exactly what we have been able to end the year with. I think the industry grew at about 6.2%. And on a gross direct premium basis, ICICI Lombard has grown roughly 210 basis points ahead of the market. And pretty much on expected lines, I think even on the combined ratio front, as you rightly mentioned, I think the trajectory is something that we have been able to see an improvement getting delivered. And more importantly, the return on equity range that we had been talking about between that 16 to 18%, I think we have been able to kind of pretty much live up to the expectations. Now to your point on how do we see things playing out for FY26, I think across different segments, I think the road that's kind of laid down looks very, very promising. Whether you look at the infrastructure investments and logistics coming in on the commercial lines, pricing uptick again happening in that segment, health looking quite promising, continuing to look to exhibit a double-digit growth, and even motor, I think in terms of how do we see things playing out in the subsequent year, looks promising. So all in all, I think what we would kind of continue to pencil in is to outperform the industry in that range of, as we keep saying, between 200 to 200 basis points insofar as top line is concerned, and obviously a trajectory to see an improvement in combined.
Sorry, 100 to 200 over industry.
That is correct.
Okay. On combined ratio, Gopal, you managed to protect the 102.5 level. Will it get difficult to improve from here on? And could you specifically give us what are you looking at for 26?
So I think directionally, Prashant, obviously what we've been able to deliver is a consistent improvement in combined year on year. That's what we had kind of spoken about as well. And even in fact, at the beginning of the year, honestly, if you look at in our April 24 earnings call, we did kind of expect the market to be slightly more semblance insofar as combined ratios are concerned. But if you look at the 9-month numbers, the industry has actually seen an adverse development in the overall combined. In fact, it has kind of moved by about 100 basis points from 112% the previous year 9 months. So the key thing to watch out for is what direction does the market take? And in that context is how we will be kind of positioning our opportunities. But everything remaining the same, definitely we would want to see an improvement in the combined going ahead. And more importantly, as I said, the return on equity range that we want to continue to start exhibiting to the stakeholders will be within that 18 to 20%.
Gopal, I just want to focus on the motor segment a little bit because some of the broker notes this morning are pointing out how the growth in motor is maybe, a little soft compared to what the expectations would have been. One, obviously, it's a straight function of sale of new vehicles, and those numbers have been a little weak. But also, what are your expectations from that business? And are you expecting an increase in the motor third-party rates anytime soon?
Yes, Surbhi, good morning to you. I think let me answer the second part first. I think third-party is something where for a reasonable number of years, I think there has been in that sense not a price increase that we have seen. As an industry, I think we have made representations to the regulator who in consultation with the government kind of notifies the price change. Thus far, we haven't necessarily heard anything from them so far. But obviously, as I said, we have made the right representations. And in case if the final notifications comes through with a price change, that's augurs very, very positive both for the industry at large and specifically in the context of ICICI Lombard, it will be a great, great positive. But to your first point in terms of how we see the motor segment play through. Again, let me just put this in context. If you look at the current year, I think the key that we kind of keep watching for is can we continue to outperform the market? If you look at it on a full year basis, the industry grew on motor roughly at about 8%. ICICI Lombard's growth was roughly at about 11.5%. So we were able to accrete market share. Your point is right. In some sense, there has been a bit of a slight slowdown insofar as new vehicle sales is concerned. But obviously, I think when you look at in terms of some of the actions that the government and the regulators have taken to kind of spur demand on ground seems to be quite promising. And therefore, to that extent, we do expect new vehicle sales to come back, at least when we look at FY26. But more importantly, for ICICI Lombard, one of the areas that we have actively focused on is to see how we can significantly improve our existing renewals of the book that we have already underwritten. So hence, quite promising and a lot more optimistic.
On motor third party, you're saying industry has made representations and you haven't heard anything as of now. what is the kind of price hike that industry is seeking in motor third party? And also if you could give us some sense of the loss ratios there, because if that third party price hike doesn't come through, it's going to weigh on profitability, isn't it?
Yeah, so let me just again put this in context. When I said that we expected at the beginning of the year semblance to come in the market, it was also in the context of motor as a line of business. And as I said, we have the numbers for the 9 months. So if you look at the industry combined ratios on motor, this of course includes both own damage and third party. There, the combined ratios have actually moved more adverse. It has moved from 118 to 123. So hence, therefore, is where we are all kind of coming from to say that it's been 3-4 years of, let's say, no price change in the context of third party. Any kind of a price increase coming through, I think we will be very, very positive at. What that number could be, I think we will leave it for the regulators and the government to kind of decide in terms of what they eventually give out. But the good news, the other aspect that we would be kind of very, very closely watching for, Surbhi, is next year, which is FY26, happens to be the year when the IRDAI defined threshold on expense of management, wherein companies are supposed to kind of meet the threshold of expense of management to be within 30%. ICICI Lombard has always been within 30. Many companies have been exceeding that threshold. So once, if we see some discipline coming through with respect to the expenses of management, that will be a lot more positive as well in terms of how demand could kind of spur insofar as the market is concerned.
You know, since you brought up that point, Gopal, I must point out that our colleague Yash, who obviously covers the insurance space, you know him well, he put out a story a couple of weeks back on this business of expenses of management, that maybe the regulator could consider individual specific caps on commissions in order to, quote-unquote, kind of discipline the industry, because the regulator seems to be feeling that lower commissions are not being passed on in the form of lower premiums to the customer. Just your thoughts on this, if you've heard anything, and what will this mean if there is a specific individual cap on commission, not the total expense?
Yeah, so I think, so again, Surbhi, again, just put this in context. I think the regulator has been very, very at it to make sure that as an industry, companies kind of toe the line insofar as the expense of management threshold is concerned, which is why they gave that 3-year glide path for players to kind of work towards. As I said, FY26 is the year when you would see those companies having the need to kind of come down within those. So that will be a key regulatory watch in terms of how companies exhibit that trajectory.
Gopal, the point is, overall cap is fine, but there are commissions and there are operating expenses. Problem is, IRDA feels that commissions are through the roof. And that is, so is that a problem if it happens?
Yeah, so which is what I was kind of responding to, as in to say that I think one of the things that the regulator will be closely watching for is this threshold in terms of how companies are navigating. So long as they are able to see the direction of change in terms of companies going down in their overall cost of distribution, of which a very large proportion of which will also be the acquisition cost that they kind of exhibit to distributors, and that will be a key positive. So hence, companies will have to actively work to make sure that they bring down their overall cost of distribution, that specifically in the context of commissions, at least in the context of ICICI Lombard, which is what I was talking about. I think we are very, very clear that insofar as the overall expense of management is concerned, we will be well within the norms. And two,
have you
and individual commissions, cost of acquisition of new business, where are you at right now?
So again, let me just put that in context. Even when the regulator kind of introduced these guidelines on long-term policies, which came into effect from October 1, clearly the intent from a regulatory standpoint was to try and see if we can get the cost of acquisition amortized over the contract period. From an ICICI Lombard standpoint, clearly we have stuck to it to make sure that at least insofar as the cost of acquisition for long-term products are concerned, it gets kind of remunerated over the contract period. So that's how we are focused on, and making sure that we kind of well operate within the laid down guidelines that the regulators put in force.
Have you heard? The story was put out about a month ago. Have you heard from the regulator? Has there been any interaction on commissions in the last 1 month? For the industry, not just you.
Yeah. As I said, the regulator is very closely watching this particular space, and I'm sure we will wait for any further actions on that.
Okay, all right. We'll leave it there then, Gopal. Thank you very much. Appreciate you joining us and running us through the results, and of course that 18 to 20% ROE guidance, which I think is a bit of a bump up as compared to what they put out earlier. I mean, overall, directionally, things are looking positive. Stocks recovered quite a bit from the day's low. I think started about 3.5 lower. is down 0.8.
On the commissions, if I got him right, reading
Yeah.
between the lines, I think the status quo is, karo nahi to hum karenge. That's what the regulator is doing in this consultation and wait and
That
watch
is
period.
what Yash's story essentially was, that, you know, it was a warning to health and general insurance against rising commission payouts. All right, well, let's just go back to the market for a little bit. Mitesh is back with us with a quick check on how he's looking at things. Looking much better, 35, about 40 points higher, 23,366. Mitesh, what does one do?
Yeah. So Prashant, you know, we talked about buying any kind of declines. I think the gap down was immediately bought into with the Bank Nifty leading from the front. So I think that's where, you know, some trading opportunities can be identified. I have Bank of India as a buy recommendation. Keep a stop below levels of 112. Look for target of 118, 119. And the other one which I like is Nika. Gave a good breakout yesterday. Today is quiet, but the structure is positive. So buy here with a stop at about 181 for targets of 195.
Okay, all right. Thank you very much, Mitesh, for that. So those are some individual trades coming up. Commodities and gold very specifically in focus. Manisha joins us on the other side.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us.
So 30 points up on the Nifty now, with banks leading the charge. The Bank Nifty is soaring almost 1% higher. That's the shape of the equity market. Let's figure out what's happening with commodities. We have Manisha Gupta joining in with the latest. Manisha, what's capturing your imagination today?
Gold. I'm never not moving away from that. It is bulls in control when it comes to gold prices. And what a stupendous run-up that we've seen. Every single or every second day, you are looking at an all-time high coming into the markets there. So we're trading above $3,280 an ounce at this point in time, which is an all-time high. And with those kind of gains, we are up by 25% in this year, after 28% of gains in all of last year. So it has been a one big, strong rally that we are seeing in case of the gold prices right now. Well, also, when you look at the overall markets, and this is an interesting chart that should come on your screens now. It tells you on how the gold prices have been moving on the higher side. I've taken the last 4 or 5 years here, and we're trading above 3,280 right now. If you look at the month of April last year, same time, it was at 2,350. So almost $1,000 of a jump up per ounce is what you're looking at in case of gold prices in last 12 months itself. April 2023, we were at 2,019.20. So as you can see, 22 and 23, the gains weren't so much. or at an understandable range therein. But in last 4 years, we've come all the way from 1725 to 3275 right now. So very, very strong gains continuing in case of gold prices, with more and more banks and brokerages now upping their forecast for this year, for 2026. 27 and 28 as well. So banks believe that you could be looking at higher gold prices for the next 3 to 4 years as well. Various factors and which have been supporting the gold prices. One, of course, there's a lot of uncertainty around the US trade policy. And then it is a weak US dollar index, which is trading below 100. So no safe haven buying really coming in for the dollar index. Much of that money really seems to be flowing in case of gold. The falling US Treasury yields has been yet another factor there. And then the markets are looking at very strong inflows that we have in sense of investment in gold ETFs in India, in Asian markets, and most of the global markets therein as well. Also, you're looking at higher US debt numbers. The world debt numbers also have been growing. That has been supportive. And then the markets also are looking at, the historical chart pattern data. If you look at the numbers from 2000 to 2025, it has been only 2 years that gold has given you a negative double-digit return. Apart from that, it has been positive cues continuing from gold. And that historical pattern also shows you that gold perhaps continues to be a favorite place to be in. For the Indian markets then, we are trading at above all-time highs, above 94,400. Interestingly, there are no buyers in the Indian markets. Most people tell us that the demand could have declined by 40% in the Q1 part there. And when you look at the markets right now as well, it is more about exchange and old gold coming into the market rather than sales of gold. And that has led to a big discount in the Indian markets. Well, I've been talking to some of the jewelers there, and they say $25 to $28 an ounce of a discount is what you are looking on bill. And in the cash markets, it's as high as $180 to $200 an ounce as well. Clearly, no buyers there. And a final plate should show you on what the banks and brokerages are expecting the gold prices to go from here. These are the only revised banks that I've taken in right now. So Deutsche Bank now says that they see a support at 3139, 3129 kind of levels, and their next target on the higher side is 3700. Goldman Sachs has talked about 3700 as well, with 4000 by the end of this year or middle of 2026. Bank of America and Citi have talked about levels between 3300 to 3500 as well. UBS has revised its forecast. This was a report yesterday at 3,500. De Beer has been saying 33 to 4,500 since the month of December now. And Swiss Asia Capital has talked about 3,500, 3,700 in this year. And the next 3 or 4 years, bullishness may just about continue. What the street, though, will focus in the day today is going to be the U.S. Powell speech and the U.S. retail sales data. That would make an impact on the dollar index and gold prices for the very, very near term, though.
All right, gold it is. Manisha, thank you very much for that. And we'll, of course, put the spotlight very much on this. So many angles to cover as far as gold and how well gold as a commodity has done. Well, we'll take a quick commercial break here. It's the economy on the other side. My colleague Lata speaks with Samir Goyal of Deutsche Bank to discuss global rates, rupee and dollar. Stay tuned. Interesting conversation up next.
Nepal, Sri Lanka were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that, in a sense, for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. How many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes.
Welcome to It's the Economy. An over 10% fall in US S&P 500 from April 2nd, when reciprocal tariffs were announced, to April 5th didn't seem to move President Trump. But the sharp rise in bond yields from around April 3rd to April 7th seems to have unnerved the president and forced him to put a pause on reciprocal tariffs. What's scary about the US bond yield spike? It has still not gone down. And what is it telling us? And what about India, of course, with its surprising fall in inflation numbers yesterday? For these and more, I'm joined by an absolute expert of fixed income markets, Sameer Goyal, Global Head of Emerging Markets and APAC Research at Deutsche Bank. Sameer, good morning. Thank you very much for joining us. It's tempting for me to start with the ultra-low India inflation, but actually the world wants to know just what's happening. There are some bodies stumbling out on the US bond markets, people telling us this one went under and that one went under. But can you just tell us why the yield spiked? Normally yields should fall when equity markets fall.
True. I think what is happening at its very core, Lata, if you ask me, is that the US has enjoyed an exorbitant privilege of being able to fund its twin deficits without any major discomfort. And that's the advantage which it gets being the reserve asset of the world. I think what we have seen over the last few days, both in terms of the uncertainty which has been caused by the direction of economic policy, maybe the way of the execution, the credibility of policy, I think has ultimately damaged that exorbitant privilege. Now, to what extent, only time will tell, but I think that is what is putting US assets at the core of this confidence crisis the market is currently going through. And that, I think, very largely explains this breakdown, as you said, in correlation, where you're seeing all US assets fall concurrently. So you've seen, bonds sell off, you're seeing equities sell off, you're seeing credit sell off. And very importantly, in these typical times, you'd see a dollar smile where dollar as a safe haven asset would rally. But even the dollar is selling off. And like I said, I think ultimately at the core of it is an erosion of some of that confidence happening in US assets.
Okay, but even now, if India has to pay for Chinese imports, we have to use the dollar. Whether we have to buy European imports or crude oil from Middle East, we have to pay for it with dollars. So is this only a temporary discomfort that we don't know? The uncertainty in the US is high, so I demand a higher yield for now. Is this just a short-term blip?
Yeah, so I think, look, there are two ways to think about it, and also two narratives which the market is moving with. One, is this simply a recalibration to what is potentially a stagflationary shock, spike in policy uncertainty, making for a fairly difficult outlook for the Fed as well in terms of what it wants to secure growth and employment, or work against the possibility of a big sticker shock on prices? Is that all recalibrating US assets, US dollar weaker, or is there something a little bit more structurally broken here in terms of the confidence in the dollar as a reserve asset? Now, I'm inclined to more still favor the former. This is a price adjustment which is happening. The starting point on a lot of US assets was expensive. We are repricing that. We are recalibrating that. How long this persists will obviously depend upon the speed with which we see normalization in this tariff policy from the US, and not just the tariff policy, but also the mix of overall economic policy which comes out of the US. Remember, we still don't know much about what kind of a tax policy, what kind of a budget will really come out of the US. But I think a sum total of that will determine whether we are just, like you said, is this temporary? Is this an adjustment? Or is this something which is a little bit more structural and persistent?
Okay. Well, I'm just relying on the fact that even when the gold backing was removed in 1971 with the end of the Bretton Woods system, dollar continued to hold sway after a wobble for a year or so. So I'm somehow not able to accept that de-dollarization is there. But anyway, let me come to the dollar itself. Would you bet on the dollar continuing to remain soft? Because that is the ultimate goal of the tariffs, right? To reduce the deficit by devaluing dollar. So can we bet that dollar is going to have soft days?
beg to differ a little bit there. I don't think the objective of the tariff policy is to necessarily devalue the dollar. I think the dollar weakness is a result of not just the size and quantum of the tariff policy as it was put, which has obviously been a big shock to the rest of the world, but also the way it has been executed, and therefore, like I said, what it has done with respect to the damaging the credibility of policy making in the US. I think the dollar weakness is an outcome of that rather than necessarily the objective of the policy. The objective of the policy is to rebalance trade. The objective of the policy is to secure national security in terms of certain critical high-value capital goods, for example, which US wants to secure its supply chains on. And you can argue that the objective of the policy is also to be able to secure enough revenues, which can then feed back into the budget in the form of more tax cuts and greater spending and so forth. But yes, for now, weak dollar is, and I'd argue for now the path of least resistance is for the dollar to continue to weaken till we see some material, shift back or reversal in the tariff policy.
Okay. So if the tariff policy is materially withdrawn, then the dollar strengthens. Otherwise, it continues to weaken, is what you're saying.
Yeah, because I think, and even there, I think you have to consider whether there has been a certain permanent damage, or not permanent damage, but there is a level damage which, if you might, has been done. Because even with where we stand right now, and unless, of course, you see a complete reversal of everything which has been talked about in the tariff policy, which I think is a relatively very low delta scenario, I think you will still see an economic damage, which has happened both because of the stagflationary shock to the economy, but also from the uncertainty on policy and the impact it has on investment and consumption spending. You can already see that in a lot of already soft data in the US in terms of sentiment, and increasingly seeping into hard data, though that obviously happens with a bit of a lag. VF, for example, our US team has already downgraded its growth forecast for the US for this year down to about 0.9%. At the start of this year, we were forecasting close to about 2.5%. And now we are down to 0.9. We were thinking at the start of the year that core PCE in the US will probably end the year on quarter 4 basis at about 2.5. Now we think it's probably going to be 3.6. So a classic stagflationary shock to the US economy, where growth is marked lower, inflation is marked higher. And I think that damage to some extent and what it means for US assets is very much it.
Yeah, actually, Goldman Sachs has also downgraded a lot of Asian countries, and I'm sure you guys also may have. Vietnam has been downgraded by 1.2 percentage points in terms of GDP growth. South Korea by 0.5%, Taiwan by 1%. So, the US shock translates into Asian shocks as well because of the tariffs. But Samir, let me come to the context of Asian currencies. Should Asian currencies worry? Usually when there is a tension, there is always this safe haven flight, and Asian central banks, EM central banks are worried. But this time around, that's one less worry?
So look, I mean, Asia has a little bit of a mixed outlook here as far as currencies are concerned. Now, on the one hand, the starting point for Asia is already one where there were, in many economies in the region, output already growing below potential. Inflation was undershooting targets. I think the very clear impact of tariffs, now whether it is a direct hit of tariffs on Asian economies or because of the indirect hit, because this time around the tariff policy is also very clearly targeting the connector economies, i.e. the circuit route from China to export to the rest of the world, and particularly to the US markets, right? And all of that would mean your negative output gaps will widen out, your growth will get hit at different levels, different proportions, depending upon how exposed you are to this US-China trade route, how exposed you are to global trade in general. So I think from that perspective, it's almost definitely more negative for Asia than it is potentially for a lot of the rest of the world. But on the other hand, like I said, this time, to the extent that the core of a lot of these issues are to also do with the US economy and a bigger shock which is felt to the US in some ways compared with the rest of the world, also now makes for a complicated thing where the dollar is weakening. So what happens as a net to Asian effects, I guess, becomes a little bit more clouded. I mean, the way I would think about Asia right now is that Asian currencies should underperform the rest of the world, and particularly currencies like euro, the safe haven currencies, euro or yen or Swiss franc, I think versus the dollar, I feel gets a little bit more dependent upon how far the dollar debasement continues itself, rather than necessarily on what happens in Asia.
Okay, two quick questions on India. First on the rupee, because we are on that topic. We were just flashing the renminbi. It's at 7.33 almost. So clearly China, even with its fixing, indicated that it will devalue the currency a bit. So what's your rupee range?
So, I mean, just one thing to clarify, I don't actually think it's in China's interests to devalue the currency. So just to make that clear. But on India, I would make the same point on the rupee. Like, India very clearly is in a relatively more advantageous position compared with the rest of the region, both in terms of its exposure to global trade, very specifically its exposure to the China-US trade, and obviously seems to have done much better already ahead of tariffs in terms of these trade negotiations with the US. So I think the relative economic impact is fairly minimal in India, or at least a lot lesser compared with a lot of the rest of the region. Like I said, again, for the rupee, the long-term or the real effective exchange rate has also normalized back to levels which the RBI should be comfortable with. So I think the sum total of that makes me feel INR is more of a beta to the dollar, really here. Will INR outperform other major emerging market high yielders or the safe havens like euro or yen? I don't think so, but it probably will do relatively well compared with the rest of Asia.
Oh, okay, got it. Final question for want of time. What about Indian rates? We saw this ultra-low March CPI number coming in at 3.34. The April CPI is expected to come at 3.1. At any rate, lower than March CPI. So are you seeing more rate cuts, maybe a double cut from the Reserve Bank? What's the end repo rate looking like?
I think so. Look, I think more than anything else, this inflation number tells you that we are sinking in well to the long-term inflation target in India, which is 4%. RBI needs to recalibrate its policy to now having achieved its long-term target, and which I would argue should at least mean repo rate at 5.5%. I'm personally biased to think that at a time when there is a prospect of negative output gap widening in even more because of this economic shock being felt in from the rest of the world, that we should potentially be able to see rates go down even further than that. At the moment, our base call is 5.5%, but the risks, I would argue, is that we see an even deeper trough to the rate cycle.
Okay, at least some gains there. If you're not making money on equities, you can make money on bonds if you're already holding them. Unfortunately, out of time, Samir, but enjoyed this conversation. Most educational. Thank you very much indeed for joining us. We'll wrap up on Bazaar on that note. Markets are just picking up, equity markets. That is, Chartbusters will take the action forward after the break.
All varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because, unfortunately, there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Irida rally is over 6%, now 5% on the back of a good quarter. Disbursals rise 73% sequentially, while net interest income also climbs 22% quarter on quarter.
City gas distributor stocks are under pressure after APM gas allocation gets reduced by 18% effective today. The companies say that this change is likely to affect the profitability.
ICICI Prudential climbs 5% despite reporting mixed numbers. The new business premium is up 14%. The annualized premium equivalent misses estimates.
And Gensol is down 5% after the company receives an interim order from SEBI against its promoter and its directors, barring them from the securities market. SEBI will also appoint a forensic auditor to probe the fund misappropriation and misleading disclosures. Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam, and as you can see to the top of our screens, we should get that graphic plate up for you. Yes, I think it should be up in just a bit. That the Nifty is a little bit lower, but Mangalam, we're not doing so badly, because if I look at the rest of Asia, well, we have seen that those markets are trading with cuts of around 0.5% to around 1.5%. And the two indices that I have out here, they are in the red. But the important point is the Nifty bank. That's the one that continues to lead the way. So that one is zipping ahead, and the breadth of the market as well is positive. So I think that's pretty good news.
It's incredible news, Nigel. You know, a couple of things that really stand out for me. I was looking at the previous, the Nifty's close before Donald Trump announced the tariffs. That time we were close to around 23,325.
Yeah.
The 1 week of volatility went all the way down to sub 22,000 levels, etc. All of that done, we're back to those levels itself. So now it's, you know, in television speak, it is perhaps back to regular programming where we look at the pre-results season lull and now focus on the results itself. So all this volatility is done and dusted. And a bunch of stocks, they are on our radar as well. This morning we have IndusInd Bank, which was a big mover in yesterday's trading session. The street was expecting something to come by. That something has come by, and now we're seeing a further up move on that stock. So in just the last two trading sessions, the stock is up around 10%. Trent is the other one which has moved to the high point of trade as well, and this despite, you know, reporting their fourth quarter update, which was relatively softer versus the company's own previous growth path. So maybe are the next few quarters looking better? Is the worst in the price or not is the big question. And then you have a bunch of these pharmaceutical names as well which are picking pace. We have Alembic Pharma, we have, you know, Loris Labs, you have Aurobindo Pharma, all of them at the high point.
Well, you know, Mangalam, another stock that, we had pointed out earlier today that did see a fair bit of delivery-based buying, and it appears it was breaking out, was Havells. You know, as we speak, the stock has moved to the high point of the day. Yesterday, there were some queries with regard to capital allocation because they put close to 600 crores in a solar investment. But from the lows, that stock did see some buying, and now it's at the high point of the day. So that's a stock to note. And also, I present this piece on mid-cap microscope where I educate you about a company. Whirlpool is the company that was at around 2,400. We had presented the company, explained it at around that 980 odd rupee mark. For the time being, the stock has been moving well over the last few days. So how much of the bad news was in the price? That's the question. And that stock, in fact, as we speak, is up close to around 2%. But the big story today is the city gas distribution companies. They're trading with losses because the APM gas allocation was cut by around 18%. Sudarshan has been on top of that. He's joining in to revisit that big story. Sudarshan?
So 2 weeks and 2 negative news flows related to city gas companies. On April 1st, we saw that APM gas price was increased to $6.75 per MMBTU from $6.50 per MMBTU. While that was on expected lines and it was announced as per the recommendations made by Kirit Parikh panel in 2023. But now this APM gas allocation cut has come as a surprise for city gas companies. And in the last 1 year, APM gas allocation has been reduced by almost 50%. In the beginning of 2024, the gas allocation used to be in the range of 70 to 80%. Now, after this cut of 18 to 20%, the gas allocation for city gas companies is reduced to 40%. So MGL says this might have an impact on profitability. Same comment is made by Adani Total and IGL as well. CLSA believes that these companies, especially IGL and MGL, might have to take a price increase that might be less than ₹1 to pass on this cut in APM gas price. While Jefferies believe that it won't be that easy for city gas companies to pass on the APM gas cut. Also, it builds in flat EPS estimates over FY 25-27. But the question is the cut done, or there might be a further APM gas allocation cut we might see in the future?
All right, we take that point, Sudarshan. Thanks a lot for that. Whether the fear of further cut comes by or not, the stocks are all lower in today's trading session. But let's talk about some of the stocks which are buzzing around. We have Irida, which is up nearly 5% after a strong set of fourth quarter numbers. Abhishek joins in to tell us what drove these numbers. Abhishek.
Well, good set of numbers are coming in from IDA with respect to the Q4 FY25 results. Disbursements are flat on a YY basis, just up 0.5%, but sequentially it's up 73.5% quarter on quarter. So the AM growth is robust at about 27.8% YY and about 10.5% sequentially. They have been able to command better yields this time. So yield has, interest income has grown at about 12% plus on a sequential basis when compared to 10.5% growth with respect to AUM. So better yield has actually helped them with respect to spreads also improving for them. NI growth is at 57.3% YOY and about 21.7% sequentially. Provisions are up 24.5% quarter on quarter. PAT growth is robust at 49% growth YOY and about 18% sequentially. Take a look at the spreads. Spreads for FY25 ended at 2.42% when compared to 2.16% in FY24 and about 2.28% in Q3 FY25. Asset quality has also improved for them. Gross NPA ratio has come down to 2.45% when compared to nearly 2.7% in the previous quarter. Back to you.
All right, Abhishek, thanks a lot for that. Meanwhile, we were talking about all these pharmaceutical stocks doing extremely well. Let's get in some source-based information that Timsi is picking up. She says that the pharma industry has moved the Drug Controller General of India, the DGCI as we know it, over the new pharma export norms after facing a hit of nearly $3 billion in immediate exports. Timsi joins in with the details of what their ask is and what the likely outcome of this would be.
Well, in a bid to ensure smooth exports, pharma industry has knocked at the doors of Drug Controller General of India to ease new export guidelines. According to sources, pharma companies indicate that new export norms are hurting about $3 billion worth of immediate annual exports and argue that Drug Controller's new pharma export norms are becoming a roadblock for both existing and future contracts. Just to remind our viewers, the Drug Controller amended export guidelines for pharma products, and as per the new guidelines, pharma companies are supposed to get an okay from regulator of importing country, based on which they will apply seeking for an NOC from the Indian Drug Controller. Only then exports can be made. Sources have further shared that pharma industry is in talks with the Drug Controller seeking relaxation. They claim that not all importing nations have processes or wherewithal to issue regulatory approvals prior to imports. Many nations like Yemen, Ghana, Rwanda have no system to issue national regulatory approval, which is a requirement to seek the Indian regulator's NOC. On the other hand, Drug Controller claims that these new guidelines have been issued keeping in mind that the export processes become simpler and are designed to ensure regulatory oversight. Not just this, Drug Controller is of a view that new pharma export norms align Indian regulations to latest global standards. Also, they ensure domestic safety and responsible export practices. To be seen now is whether the drug controller is able to ease these norms, or India, as the industry claims, will have to lose this $3 billion worth of export business, something that we'll have to wait and watch for.
Take that point, MC. Thanks a lot for that. On the other side, Chandan Taparia from Motilal Oswal Financial Services joins in for a quick technical check on the markets.
Up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
Welcome back. You're watching us here on Chartbusters on CNBC TV18. India VIX has spiked to the high point of trade, but this, remember, accounts for not much because it's seen a big cut over the last couple of trading sessions as well. A couple of these banks are doing well. So we have Indian Bank from the broader markets, which has moved higher. Bandhan Bank is the other one, which has also moved higher. And a few of these financials, the likes of Max Financials, etc., are recovering from the lows itself. Good time to welcome Chandan Taparia from Motilal Oswal Financial Services for a quick technical check in the market. Chandan, we were speaking about how the Nifty has reclaimed levels of the pre-tariff, announcement volatility that there was. We were at 23,300 earlier, fell all the way down to 21,745, back to 23,300. So for one who would have taken a leave over the last 10 days, ignored the entire market at 23,300, what should one's call be?
Good morning. Thanks for having me, Mangalam. We have seen a decent recovery from lower levels as index rallied by more than 1,500 points from the lower zone. And the good part is that India VIX, which headed to a higher zone at 23, also fell to 15.5 marks. So decline in volatility with surge in the prices with stability in the global market indicate that market will slow and steady, make the higher base to commence the next leg of rally. The good part is that we witnessed a profit booking decline from 23,850 to 21,750, and that decline was being bought smartly. And that clearly indicates that meaningful declines could be bought and measure a medium-term trend for the index could remain positive to range bound. So I believe any small decline can be bought with support of 23,000, and market has potential to again rally towards 23,750 to 23,850 zone. If I look at the Bank Nifty index, we have seen the clear outperformance here. Bank Nifty managed to hold 52,000 marks, and the levels are gradually shifting higher. It has been making higher lows from last 5-6 trading session and formed a bullish price pattern on the daily chart. So till it holds above 52,000, Bank Nifty has potential to rally towards 53,500 and then attempt towards its lifetime high of even 54,467. So quite positive on both the indices, but Bank Nifty is likely to outperform and can head towards the higher zone.
Okay, all right. Hi, Chandan. Good to see you after a while. So you're sounding both quite positive on both the indices. Give us a couple of your stock calls, and if you have any kind of view on how Havells is looking on the charts.
Yeah, thanks, Nigel. So after a long time, the setup is giving a sign of bullishness, and the Bank Nifty is giving more positive stance here. So talking about trading idea, which I've selected here, first is buy on Axis Bank. We have seen build up of long positions. Open interest added by around 10 to 12% in last 4 trading session and the price is inching upwards. It is holding well above its rising support trend line with hold of 50-day exponential moving averages. So a decisive breakout above 1120 is giving the positive stance. So one can buy with support of 1115 for an upside target towards 1175. And positive stance in Axis Bank can also take the Bank Nifty to higher zone. Second trading idea, there is buy on UPL. The stock is all set for a small follow-up and then fresh breakout and the momentum. It is at the words of 7 weeks low consolidation breakout. So with support of 645, here we can see a smart rally towards 690. Last trading idea, there is buy on SDFC Life. Positive price action after a long time, which clearly indicates that momentum could be seen here. In fact, this sector has started to attack buying interest. We have seen a rounding formation and rising support trend line can take it to higher zone. So with support of 700, one can look for an upside target towards 750. Now on reply to Havells, we have seen a decent run up in last 4 days. It rallied well from 1390 to 1600 marks. Multiple rounding bottoms are visible on the daily scale with a decisive breakout of 40 trading session. It surpasses falling supply trend line. In fact, if I look at the data setup, the longs are headed with coal unwinding, which also indicate the positive strength. So I believe momentum could continue with support of 1560. Havells has potential to rally towards 1680 to 1700 zone.
All right, Chandan, thanks a lot for that. So those are a couple of stocks on his radar, Havells as well as Axis Bank, along with another one. Just keep an eye on a couple of these names from the hospitality space. So we have Sami Hotels, which is up around 5%. Giving it company at the day's high is Juniper Hotels, and we have Park Hotels as well. Remember, Indian Hotels was a big mover in yesterday's trading session, up nearly 6.5%. And now we have all the other hospitality stocks as well moving higher, perhaps ahead of the summer vacations. And, a lot of people perhaps looking at the prices in hotel stocks as an entry point for these counters, which had seen a correction from the highs itself. Take a short break. Before we do that, get you an idea for profit coming in from our colleagues at Money Control Pro. Today we have Nitin Agarwal joining in.
The company that I have chosen for today is FIAM Industries. Amid heightened market volatility driven by uncertainty surrounding US President Donald Trump's tariff policies, we are strategically focusing on opportunities within the Indian market, and FIAM Industries is one such company which has focused more on the domestic market and is immune to the tariff war. There are a couple of factors that make us upbeat about the company. First, the foray into passenger vehicle. The company has achieved a milestone by supplying its product to the Mercedes-Benz and has secured order from multiple OEMs for multiple products. Further, the two-wheeler segment continues to be very strong. It registered a growth of around 10% the first 9 months of FY25 as compared to the same 9 months last year. In fact, the FIAM industry outperformed the industry growth and registered a growth of around 22%, driven by increase in the content per vehicle. Thirdly, the company continues to capture the opportunities provided by the Sunrise electric vehicle segment, and company is partnered with who's who of the electric vehicle manufacturers. In addition to that, company has a very strong, robust order book, and it is being partnered with for supplying the new products from the Yamaha and Royal Enfield, which are registering a strong growth. Lastly, in terms of valuation, the company currently trades at around 15.2 times FY27 projected earnings, which we believe is very reasonable for a company like this.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
We're speaking about the travel and hospitality theme. Just pull up the intraday chart of Ixigo, La Travenues Tech, as it is listed on the Bombay Stock Exchange. Just 3 minutes ago, that stock was absolutely flat, and now it's moved to the high point of trade with a gain of almost 4.5%. So means, there is some secular buying that is taking place in the travel and hospitality space itself. La Travenues Tech, that is the stock which is up for you on the screen. But speaking about, travel, hospitality, consumer discretionary expenditure, it is online fashion and beauty player Nykaa, which is shifting its focus to go beyond just the online realm. While it has some offline presence already, are they looking to increase it or not? Well, we get the answers of all of that from Shilpa, who spoke with the company's CEO and head of owned brands, Adwaita Nair, spoke about their offline expansion strategy.
So, across this whole own brands portfolio of about 1,000 crores of NSV, 50% of that comes from our online Nykaa.com portal, but 50% is from other places. It's from our stores, it's from GT, it's from MT, it's from offline, points of sale and so forth. So yeah, offline is important for us. I think today it's probably about 20-25% of the overall turnover, with about 10 to 12,000 points of sale across GT and MT.
Right.
But we will keep focusing on that. I think the thing with offline is you have to be careful about how you expand. You can get growth quickly, but I think it's more about being thoughtful and picking some really high quality points of sale. And having sort of measured but high quality offline growth, which is what we're after.
Right. And, can you give me a sense of then, as a vertical of the house and brands, right? What is the growth roadmap that we're looking at, and which of these brands do you see as leading the growth for you going forward?
I think we consider this a very, very high potential, high growth part of our business. It's growing incredibly fast, and faster than some of the other businesses in our portfolio. So we will continue to double down. All these 3-4 brands that I've been talking about today can easily aim for 1,000 crore, turnover in the near future.
Right.
But I think what's on my mind is, there are probably 6 or 7 brands today that we're focusing on. But are there any other exciting spaces that we need to be looking at? And making sure that we're adding to the portfolio at the right time is a big priority for me.
So you're saying that you are open to bringing in more brands or acquiring more brands, or will you look at organically launching more?
I think we like building in-house as well as we like acquiring. I think even within the portfolio that you see today, there are enough brands that we built internally. Nykaa Cosmetics, Wanderlust, K-Beauty to some extent is a JV, but we've been doing it internally. And then there's some that have been very successful as acquisitions, whether it's Dot & Key or Earth Rhythm. So I'm open to both models.
What are these white spaces that you're probably looking at that you see very good opportunities?
I think a new emerging category that I'm loving right now is bath and body and fragrance. We're seeing a lot of positive movements in both those spaces on the platform itself. So I think India is sort of awakening to this fragrance movement, and I think we'd like to have a play there as well. As of now, we're going to build those two. Wanderlust will be our bath and body brand, and we've gotten really focused on it. Really excited about the place that plays in.
How big is it?
Wanderlust will probably be touching about 100 crores or so.
Okay.
But yeah, immense potential. Not scratch the surface outside the Nykaa ecosystem at all.
Right.
And then we're building a bunch of perfumes under a brand called Nykaa Perfumery.
Yeah.
So I think that's still very nascent, but I think in this year, fragrance will be a big focus for us.
In the previous earnings calls, you'd spoken about a sort of consolidation that you're doing with these brands in the fashion business, and the focus there also, right? Because fashion, otherwise, being a newer business, the growth engine has been a little slower, and usually investors show a lot more concern towards the fashion business. So just can you run us through what these consolidation efforts are on the fashion business, and how does one look at the growth trajectory of the fashion business? Because last quarter also, though it was the wedding season and all of that, the growth was largely flat.
Yeah. No, I think, look, we are incredibly excited about our fashion business. As a Q3, it's an annualized GMV of about 4,000 crores. That is not small by any measure. And it's widely established through multiple customer surveys that NykaaFashion.com is the second to third most popular e-com platform today in India. And I think all of that 4,000 crore top line with so much customer love and preference has been built in a matter of 4 to 5 years. So we feel very good about that space. We're not worried about quarter to quarter growth and numbers. We're in here to play in fashion for the long run. And I think fashion as an industry in India is so exciting, and it's so large, and it's growing incredibly well. And I think if you just take a 10-year view, it's really important for Nykaa to have a foot in the door. And I think we're building a very unique proposition with our multi-brand platform there.
Interesting chat there. Well, for the time being, we'll have a wrap up on this edition of Chartbusters. You stay with us. Trading Hour comes up next.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that we will, the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others, and then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it
Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Vivek Iyer. The Nifty at 11 o'clock has dipped below the 23,300 mark, 40 points lower. The Sensex is shed 150 points. Mid-cap index is holding up in the green by close to about 1/3 of a percentage point. But even as we've come off from the highs, you would still say markets are consolidating. It's largely sideways. But Asia is firmly lower today. If you pull out the Hang Seng, that's down close to about 2.5%. You've got the Chinese markets down close to about 1%. But even the others, the Taiwanese markets, the Nikkei market, both those indices are down over 1%. The Kospi is down close to about 0.8%. And escalating trade tensions between US and China have rattled sentiment. Just, take a look at the recent headlines that have come through, right? Beijing has suspended Boeing's jet deliveries. Nvidia's share price was down in after-hours trade because of the export restrictions of their chips to, China. So these curbs are hurting both sides. UBS has brought down the GDP forecast for China to 3.4% for this year, 3% for 2026. And now analysts are pointing out that, it just seems like with this kind of pressure, a resolution has to happen. Like Boeing perhaps is now pressurizing White House. The technology majors, like Nvidia, for instance, could pressure White House and strike a deal now. So analysts are hopeful that it's like there is this storm and then there is a lull, right?
Right.
So perhaps this time all this news flow is just escalating, and then you're going to it paves the way for some sort of a resolution. Even China has appointed new top international trade negotiators amidst all this trade standoff, according to CNBC. So perhaps hope.
Some hope, and equity markets, still trying to digest all of that. Wave of profit booking seen across Asia, like you just pointed out. Indian markets largely sideways. What's clearly standing out as far as Indian markets are concerned has been the Bank Nifty. Last 3 to 4 trading sessions, it's been the clear outperformer, and today that particular outperformance has continued. What's doing very well for the Bank Nifty? Well, IndusInd Bank, the important flow coming in as far as the audit was concerned, is seen quite positively by the street. That stock high by almost 5%. And another stock that's doing quite well is Bandhan, Axis, PNB, all of these stocks gaining on the back of TD rate cuts that a lot of the banks are taking. What is actually seeing a bit of profit booking is actually the entire metal pack. In fact, just a while ago, if you saw most of the metals, they saw significant selling pressure come about in the last hour. Hindalco, JSW Steel, Nalco amongst the top laggards. Earnings reaction, well, IREDA, that particular stock yesterday went higher significantly. Today was at one point of time almost 12% higher, but cooled off from the day's highest points. ICICI Pru Life and ICICI Lombard, too, seeing reactions as far as results are concerned. Lombard down over 1%. And the auto ancillaries yesterday, which were clear outperformers, today taking a bit of a breather. Bharat Forge, Samvardhana, Sona, BLW, all of them slightly lower in the session. And MGL, IGL and Gujarat Gas, all three of the CGDs, it's a negative surprise that's come about for them in terms of further deallocation or further reduction as far as APM gas price is concerned. And on the back of that, MGL taking the majority of the hit, almost 5% lower today, Rima.
Okay, but let's talk about IndusInd Bank. Yesterday, up 6%. It's followed it up with another 5% up move. So in 2 days, IndusInd Bank, his share price has surged close to about 11%. The company has reported that an external audit has found a 1,979 crore rupee reduction in the bank's net worth due to derivative discrepancies. Ritu is joining in with all the details on this and what brokerages are saying. Ritu.
Well, a top-level shakeup could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO, Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin, growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Thank you very much for that. Gensol Engineering shares tank after the market regulator SEBI passed an interim order against the firm and its promoters over alleged fund diversion and false disclosures. Yash is here with the details.
Well, it's an interim order from market regulator SEBI against Gensol Engineering and its promoters. The sad part, of course, is that the stock has lost about 90% of its value in the last 1 year. And the order comes right now. There's more investigation which is to be done. But as far as the interim order is concerned, what market regulator SEBI has said in this order is that there will be a forensic audit, which will be done in the books of Gensol Engineering. The auditor will be appointed and will submit its report as far as, time period period of 6 months from the date of appointment is concerned. Jensol Engineering, Anmol Singh and Puneet Singh Jaggi, the promoters of the company, will be restrained from buying, selling and dealing in securities market directly or indirectly. Anmol Singh Jaggi and Puneet Singh Jaggi will be restrained from holding any position of KMP or director as far as Jensol Engineering is concerned. Very, very serious allegations as far as the interim order itself is concerned. The first allegation is about unaccounted money which was raised from companies like IREDA, PFC, and that money being either round-tripped into the private entities of the promoters or being given to their family members or being used for personal uses like buying high-end real estate, paying credit card bills, taking foreign trips, buying golf sets and things like that. SEBI has, of course, compiled all these allegations. There are allegations around market manipulation in which private entities of the promoters would frequently trade into the listed entity of Jensol Engineering. There is also, an instance which market regulator highlights about how the money which left Jensol Engineering, the listed entity, into a private entity, into the promoters, into again a private entity to come back to be invested into the preferential issue of Jensol Engineering. Technically, the money leaving Jensol and coming back into Jensol in the name of other private entities. Series of these, violations being highlighted by market regulator SEBI, and hence this order, but an interim order. There will be more investigations which will be done, and we don't know what more, will come out, how much more dirt will come out of this particular issue as the investigations continue.
Thank you so much, Yash, for joining us and shedding light as far as the events that are transpiring at Jensol Engineering. Well, it's now time for a short break. We'll get you more on the markets on the other side. Remember, we'll also be joined by Gauri Kirloskar, the Managing Director of Kirloskar Oil Engines, to discuss the recent Defence Ministry order worth 270 crore rupees.
A friend shoring of that, in a sense, for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. How many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst which is, I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because, unfortunately, there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000, Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product, because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies.
Welcome back. Let's talk commodities now. Manisha Gupta is now joining in and she's talking about the plummeting crude prices. Manisha, what's happening?
Oh, well, yes, it's as gold makes all-time highs, we've seen other commodities actually take it a bit on the lower side there. There are concerns about the international trade and tariffs, and that's weighing onto the markets. For the crude oil prices, with the kind of decline that we are dealing with right now, we are heading very close to those 4-year lows yet again. Well, to begin with, there are oversupply concerns. Markets are looking at high production from Canada and in US as well. The only place that where the production has actually seen a bit of a decline has been Saudi Arabia. Their production has declined to below 10, even below 9 million barrels per day at this point in time. Well, the major hit also comes in after the EIA report suggests that they're looking at a lower demand growth forecast for the year 2025, and it's the lowest pace that you are seeing in last 5 years as well. Apart from that, the OPEC and allies will also be increasing production from the month of May to the tune of 411,000 barrels per day. So you are looking at more supplies, not so strong growth in sense of demand, and that has led to excess situation into the international markets there. To add to that, the US inventory data that came in yesterday also shows yet another and a 4th straight week of a build-up in US inventories, and that's weighing onto the markets too. Well, to watch out for the day today is going to be the US Fed Chair Powell's speech, and apart from that, the US retail sales data that would give an immediate impact on the US dollar index and an impact also on the crude oil prices.
Thank you so much, Manisha, for joining in and talking to us about what exactly is transpiring and happening in the crude oil markets. But moving on, like promised, remember Kirloskar Oil Engines recently bagged a Defence Ministry order for 270 crore on April 2nd. The company is set to design and develop in-house speed engines scalable from 3 megawatt to 10 megawatts. To discuss this, we are joined by Gauri Kirloskar, MD of Kirloskar Oil Engines. Thank you so much, Gauri, for joining us. First up, take us through the contours of this particular order win, the total timelines, what exactly you will be delivering, and is this the start of further order wins? Is this just a prototype that you're developing for the defense services at this point of time?
Yeah, thank you very much. Thanks for having me on the show. It's a very exciting order for us, and at this point of time, it is an order for a prototype development. But if we develop this order and this engine and deliver this engine successfully, then it opens up further opportunities with the Indian Navy to develop engines for future projects as well.
What is the exact scope of work that you are doing for the Navy? We typically understand that you are in the genset business. So we understand that this particular development is a slight shift away from what essentially Kirloskar Oil Engine developed. And along with that, what is the kind of experience that you have in this particular segment?
Great question. So yeah, this project is to develop a 6 megawatt engine, and that's for marine main propulsion of Navy ships. And this is where the project is really exciting for us, because it's also a great initiative from the government to encourage R&D in India. Historically, our R&D spend as a country is significantly lower in comparison to most developed countries, and the government has been focusing on increasing that spend. And of course, industry has a role to play in that. And we at KOEL are very proud to say that we have developed our entire engine portfolio in-house, and the focus on R&D has always been there in the DNA of the organization since inception. So through this project, we will be not only responsible for just manufacturing the engine, but also designing and developing it in India, which means we will own the technology rights of the engine as a country, and that is extremely significant. When you talked about, what is our experience in developing these sorts of engines, I do want to say that this is not the first time that we are executing projects at this scale. We have in the past also executed projects as large as this. In fact, more than 250 of these kinds and size of engines have been installed in various applications in India as we speak by us. And what is different in those projects against this one, though, is that in the earlier case, we had a technology collaboration with another engine company and then executed the manufacturing in India, right? But that means that the intellectual property and the technology didn't belong to us. In this current project, we will develop the technology in-house and we will hold the rights to the technology. So for us as an organization and also from the nation's priority of indigenization of technology, this is a very significant step forward.
Gauri, hi. Morning. This is Rima here. Can we talk about exports? Sorry, I think exports is about 10% of your revenues. Is that correct?
Yes, that's right.
Broadly. And you would export to US and Middle East? Those are the key markets?
Those are some of the key markets. Yes, there are other markets as well, but yeah, those are some of the key markets.
Okay. And now, given all the uncertainty and what's happening with tariffs, etc., how do you expect exports to pan out? Are the orders which you had on hand, are they continuing as of now? What could export growth look like, say, for the next 2 quarters, given this, or is there some pause?
So from the specific US point of view, US is strategically a very important market for us. We made some small investments there and we're looking at growing that business over the longer term. But today, since the revenue from the US part of the business is not very significant for us, I don't see a significant impact because of what's going on from the US. If you also look at the supply chain, and how it would impact us as an organization, I'd say that because we develop technology in-house and we therefore are also in a unique position to make sure that our supply chains are largely localized, that's a competitive advantage for us. Like even in CPCB4+, where we saw a lot of the parts becoming proprietary, our import content is still under 10%, and within that 10%, the dependence on the US is still quite marginal. So I don't see a major impact from that point at this stage. Obviously, the situation is clearly very dynamic and uncertain at this stage. We haven't seen any significant impact to demand at this point of time, but we will have to obviously wait and watch and see where the situation ends up and what impact it will have, not only from the India-US point of view, but from the global point of view.
Gauri, let's also talk about the core business itself, which is, the diesel genset business. We understand with the latest emission norms, all of the players have gone ahead and upgraded their offerings to the market, which are significantly expensive compared to, the earlier norms. So number one, what has been the market response to these latest diesel gensets? A few analysts have also raised concerns in terms of market share. We understand that the competition on ground has been much more intense. And last couple of quarters, you enjoyed some pre-buying. So going forward, what can be the steady state growth you can see in the CPCB4 norms?
Sure, yeah. So, post the CPCB4+ transition, as we expected, there was a general contraction in the market. And that's because of the pre-buy effect. And we saw that play out for a couple of quarters. But other than the pre-buy related demand changes, we don't at this moment, see any major changes in the market across the segments. And the demand looks as we expected in terms of the pickup. Quarter by quarter, it looks as we expected. The reason I'm being cautious in answering you is that given the general uncertainty due to President Trump's tariff announcements, we will be keeping an eye out for any changes in demand that we see. But so far, at least the domestic scenario seems okay. From a market share point of view, our market shares have remained stable through this transition. There has been some consolidation in the industry. So there have been market share movements of other players, but overall, our market shares have remained the same. When it comes to, I believe your other question was on pricing. On pricing, there has been the price increase post the CPCB4+ transition across the industry. And I would say that the market is still in the process of settling down on that. So the price discovery process will play out, and it will play out across sort of like a node by node level across the product range. But overall, it looks like the market has accepted the price uptick. It was, something that was expected and was talked about, obviously before the change, and the CPCB4+ change itself had been delayed for a year. So it was, something that was in the works. And we are not really seeing a huge change in demand, as I talked about before. What we are focusing on, though, as an organization is, a large part of the smaller nodes in the market under CPCB4+ are commoditized. And there has also been huge technology convergence with this emission norm change. And what I mean by that is that engine manufacturers are largely using the same technology to achieve emission requirements. So as an organization, we have been focused on creating a differentiated product range. It's called OptiPrime. And because of this differentiation, we can maybe have some pricing power.
Gauri, one last question, request you to keep your answer a little short. In terms of data centers, what has been the demand over there? We understand that there has been significant inquiries that have come in from that particular segment. What has been the growth that we're seeing over there? And overall, what can be a sort of steady state growth we can see? FY25, there has been a bit of a dip as far as operational performance is concerned.
Sure. So the data center market is, and that segment is the fastest growing segment for our industry in power gen. So if you look at, say, high horsepower growth in Q3, okay, I can talk about Q3 numbers. The industry in that segment actually grew at 22%. Whereas if we look at below CPC4, it contracted largely to around 40% degrowth. So that's the largest growing segment, and it's largely driven by data center demand. So this is something that we expect to continue, and it is something that we now have products ready for, and we've started catering to data centers already. We have the certifications, and it is something that we're very focused on.
Thank you very much, Gauri, for joining in. Look forward to more conversations. We need to get into a break. On the other side, market technicals with Soni Patnaik.
The iconic line from Top Gun. Was there ever a moment, in that phase where you were creating this movie-going experience where your father maybe told you that, son, you're writing checks that your body can't cash?
He made me cost conscious. He made sure that I didn't spend that kind of capex, that there'll be no returns.
A lot of the scale has been driven by way of M&A and acquisitions, and of course Inox was the big one.
Yeah.
What would you say have been the non-negotiable?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Warburg Pincus,
yeah.
and mentors like Sunil and Rajiv Singh and so many people. Fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego, vanity acquisition, or is it something that is missing in the current portfolio and is going to add value?
Expert opinion on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
मुंबई का जो सिंगल कार है मुंबई 1, ये कार हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल
पड़े
Welcome back. Let's talk market technicals. Soni Patnaik from JM Financial Services is now with us on the show. Soni, after yesterday's big up move, today's sort of a quieter session. We are seeing a little bit of a flip-flop. Markets first corrected from the highs, and now it's trying to recover and get back into the green. What is your approach to trade and your stocks?
Hi, good morning, Rima. Thank you so much for having me on your show. See, I think this is a short truncated week, so one can see Nifty actually in a range. If you look at the option chain for today, 23,300 straddle seems to be, adding a lot of aggressive open interest. So there's this bit of a fight between bulls and bears to take over this level for this week's expiry. So we feel that any move, if Nifty is able to cross above a 23,400 level in spot, there can be a sharp short covering by tomorrow's expiry when Nifty can head towards 23,550 to 23,600 range. Put writers are also getting aggressive. They're raising their support. So intraday basis, you can see a lot of aggressive put writers forming towards 23,200 base. That seems to be holding as a strong support. So the call is quite simple over here. I think by tomorrow, Nifty may head towards 23,500. So one can actually initiate a long strategy at current levels, keeping a stop loss of 23,200 in spot levels. And by tomorrow, there's a possibility that it heads towards 23,550 to 23,600, which can be your targets. I think that move may be seen by tomorrow, irrespective of how short it today. But for today, one can actually indulge in more of stock-specific strategies. And both these strategies should be on the longer side, considering that we are also bullish on Nifty for tomorrow. So one can initiate a buy in PFC, which is about to break its 200-day exponential moving average on daily charts. PFCs looks quite strong. One can initiate a buy at current levels with a stop loss of 415, and a target towards 450 to 470 can be seen positionally. The second buy recommendation comes in for UPL, which is also approaching a fresh breakout on daily chart. So one can buy UPL at current levels around 660, keeping a stop loss of 640 and a target of 700 plus levels can be seen.
Thank you so much, Soni, for joining us, giving us a view on the markets as well as your individual stock-specific ideas. Well, we'll now take a short break. Up next, we'll discuss market fundamentals with Manish Dangi, CEO and founder of Mosaic Asset Management.
मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबअर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी एक ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
Welcome back. Absolutely flat on the benchmark indices. Some oil and gas stocks moving up. So ONGC has moved to the day's high. That stock is up close to about 1.8%. You've got BPCL, which is spiking up. In fact, the entire oil and gas index too will reflect that. And IndusInd Bank is piling on some more gains. It was up 4.5% at about 11 o'clock, now up close to about 5.5%. Axis Bank, though, remains another big mover, for nearly 4% up on Axis Bank. Manish Dangi from Mosaic Asset Management is now with us on the show. Manish, thank you for joining in. This is Rima here. You know, it's been extremely volatile, chaotic, confusing since the 2nd of April. So many announcements, headlines. Markets are moving up one day, down the other day. Tell us your understanding of what has transpired and how it's impacting the various asset classes.
Hi, Rima. Morning. So, of course, it's very well documented, so I don't sort of need to rerun the story of Trump tariffs. Its impact, of course, at least a glimpse of it we've seen over the last couple of weeks. Essentially, what underpins all of this is, world is disintegrating, and in a sense, this hegemony of US is in some sense unwinding. And essentially, the neoliberal setup that we've lived in last 30 years, no tariff world, Vasudhaiva Kutumbakam world, where anyone can travel to any place and can trade with anyone at low tariff. That of course is unwinding as we speak. So Goldilocks setup for trade as well as capital is actually ending. It started with Trump 101, and now, of course, it's actually accelerating. It has implications of all kinds. I think, we're going to be living in a lot more volatile times, not just in terms of asset markets, but also from the point of view of economic outlooks. Markets, risk premiums, even today, even though they've gotten corrected, specifically in US, are not yet pricing in the new world that we're living in. I think it's much more fundamental. I've argued about this a couple of times on your show also in the past, but yeah, it's much more fundamental to how the world operates today versus any time, that we've lived in since 1990. And, in a sense, investors should actually incorporate this in their view of actually how they look at markets as well. But we can discuss in detail any specific part of it. It's sort of a very, very abstract thesis.
But do you think the peak of the bad news is behind us? From here on, the headlines will only be a little more amenable?
Absolutely. So from the point of view of the peak news with respect to tariffs, of course, is behind us. But, what entails now is these, hard negotiations with each country. And we yet don't know in terms of, let's say, what we will get, vis-a-vis America. But I think what is still ought to unravel is, what happens to the China, because, US's entire ploy is actually to corner China. And essentially what we end up getting, Rima, is that, a lot of Chinese products which otherwise can't go to US begin to flood Asia or other countries. And in some sense, I'm afraid that, you could actually enter in a little bit of a 2015-16 Chinese deflationary setup. Crude is telling you that story, but also, some of the other commodities are telling that story. So sort of my worry is that, we may actually end up getting an inverse of COVID shock, or more like 2015-16 kind of setup, in which Chinese products actually create a lot of disinflation or deflation across Asia. That's good for bonds, bad for margins. Never forget that 2014-19, Indian earnings grew at just low single digits, 6, 7, 8%. If Chinese were to be really cornered, the implications for our corporate margins would be pretty bad, I would say.
Manish, you are now incrementally positive given the fact that you believe majority of the negative news flow coming in from tariffs is something that is behind us. Now, going forward, how are you assessing the macroeconomic situation? Your view on crude oil prices, your view on US treasuries. Where do you see it move from here?
So again, for context, just think of crude. Crude actually has never been lower than $65 outside of big crisis in last 20 years. Briefly in 2008-9, then in 15-16, when the supply glut because of shale revolution and Chinese deflationary shock, and during COVID. So, crude itself is telling you, and crude is a good barometer of, current demand in the world. So, given that you're asking me macro, I think the global growth temperature, if you were to check through crude, it sort of certainly looks like that it's actually, it's pretty weak right now. Rest of the world was anyway struggling, but now it seems, that US's number also will begin to show sort of relatively poorer or weaker, growth numbers there. Other macros from a USD standpoint, I'm of the view, of course, that the tariff, while at a first order it seems like a inflationary shock, it is a bigger growth shock, so to say. My sense is that both in India as well as in US, markets would be surprised by sharper rate cuts. More specifically in emerging market and even in India, I've been of the view that we are headed towards 5 handle on 10-year bonds. We've sort of come a long way. I think both US Fed and RBI will kind of sharply cut rates. Also, it's very likely that the QT ends in US and a significant amount of QE actually can begin in a couple of months' time there.
Okay. So your base case is perhaps that the global growth slows down. There is a growth shock, but is there a recession also?
So if you look at, again, a lot of us got this whole thing wrong with respect to US recession, even in 2022. So US economy has been unusually resilient. It's difficult to call this out, Rima, but if you look at most indicators, they seem to suggest that the walls are very high, so markets are not very certain. But most surveys suggest that half the fund managers think that US will enter in recession. Most of the financial condition index are suggesting that we would have actually entered in somewhat of a stress and a potentially recession. So nothing is set yet, but I'll be very surprised with such a big shock that US is experiencing right now. Its economy does not roll over. Recession, mild or hard, we don't know, but a significant slowdown for sure is likely.
So slow growth, deflation, good for bonds and bad for equities, right? In a nutshell, that would be a base case?
Pretty much.
All right. Thank you, Manish, for joining in. We'll look forward to the next one. For now, we need to slip into a very short break. On the other side, we'll come back and tell you why stocks like Tata Motors, JBM, Wipro are buzzing in trade. Stay tuned.
The ghost of 2008, which gives us all that.
It
would never leave you. So far, it's been moving along as Trump had planned.
Yeah.
And I think the worst is behind as far as the markets are concerned.
I remember doing a show when Zomato was listing with some of your team members. So I took early calls.
This is one of the lessons I learned, I would say, early in the TMT bubble, .com bubble. In my US portfolio, I never could buy Amazon.
Okay.
Thinking that it's not making money, and at that time it was also an assessment that it can never make money. Today I often get asked, because we are very cash flow centric and there are loss-making companies in our portfolio as well. Value of any business is present value of future cash flows. It's not necessary you have to make cash flows in year 1, year 2, or even year 3.
Is the post-COVID era dream run of 3, 4, 5 years?
7.
Is that over?
Post-COVID 5-year fantasy run is over. A dream run, I would call, is much longer term.
from an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to...
Welcome back to Trading Hour. Well, this is an exclusive from CNBC-TV18. Sources tell us that the Union government is expected to launch a legal tender for the procurement of 10,000 electric buses for 9 major cities across the country. Parikshit joins in with more details.
This could be a positive for electric bus manufacturers in the country. The Union government is set to launch a tender for procurement of 10,000 electric buses. The Ministry of Heavy Industries is likely to launch a tender in May for the procurement of buses under the PM e-Drive scheme. CESL, or the Convergence Energy Services Limited, which comes under the Ministry of Power, is likely to issue a tender to choose intra-city buses, e-bus operators for 9 cities. The centre is likely to extend a subsidy of approximately rupees 3,000 crore for procurement of electric buses. MHI has capped the maximum subsidy amount at rupees 35 lakhs per electric bus. Most states have demanded 12-metre electric buses for intra-city use. Electric buses to be procured for Bengaluru, Chennai, Hyderabad, Pune, Mumbai, Surat, Ahmedabad, New Delhi and Kolkata. The PM e-Drive scheme had envisioned support for 14,028 electric buses with a subsidy outlay of rupees 4,391 crore. The reason why the centre is going with procurement of 10,000 crore e-buses for now is because Mumbai, Kolkata and Chennai have not yet submitted their e-bus requirements. The PM e-Drive scheme was launched by government in September 2024 with an outlay of rupees 10,900 crore and is applicable till March 2026.
Okay, thank you very much for that. In terms of earnings, the big one to track today will be Wipro. Remember, TCS's numbers were soft. The company's guidance, in a way, was subdued. They spoke about how the macro environment is affecting decision-making. Tactically, they've seen some projects which are being put on hold as investors are in a bit of a wait-and-watch mode. So when it comes to Wipro, all this is likely to impact them too. So the street is working with a revenue decline on a quarter-on-quarter basis. So dollar revenue is seen down 0.5% quarter-on-quarter. In constant currency, it's a decline of 0.2%. But it's within the company's guidance of -1% to +1%. Now, because there is no top-line growth, margins could be impacted. The CNBC-TV18 poll pegs the margins at 17.1%, down 40 basis points sequentially. But the key is going to be the guidance. You know, some fear that because of the uncertainty and the lack of visibility, will the companies be in a position to give guidance? Wipro at least gives you a quarterly guidance. So maybe they have some visibility because you have deals on hand which you need to execute. But if they decide to give a guidance, then the estimates seem to be -1% to +1%. Though there are, analysts like from Nomura who expect a -1.5% to +0.5%. So a little more conservative to begin with. So don't be surprised if the company is very conservative as they give their guidance, because these are very uncertain times. Also remember, Wipro has a higher exposure to discretionary spending. They made an acquisition called Capco. It was a consulting company based out of Europe, and consulting is largely discretionary. So what the company says about discretionary demand will be watched very closely.
Thank you so much, Rima, for telling us about what exactly to watch out for as far as Wipro's results are concerned. But before we go into a short break, a small programming note for our viewers. CNBC TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.
The right side of this new drawing of the chessboard, and Secretary Besant has already said that the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that. because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. You know, how many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst which is, I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to bade.
Welcome back. Big moves in the mid-cap arena. So just take a look at Cupid. JBM Auto is up 11.5%. Walchand Nagar has seen a big move, particularly in the last 1 hour. So that's up close to about 8 to 9%. Walchand Nagar should come up for you on your screen. Big up move. But Make My Trip Foundation, in collaboration with the World Travel and Tourism Council India, is hosting the India Travel and Tourism Sustainability Conclave. Let's cut across to the Culture and Tourism Minister Gajendra Singh Shekhawat speaking at the event.
जो डेटा उन्होंने हम सबके साथ में शेयर किया, कुछ मिश्रित भाव वो हम सबके लिए लेकर के आया। कुछ जगह ऐसी हैं जहां हमें विचार करने की आवश्यकता है अगर ग्लोबल कंटेक्स्ट में हम बात करें। कुछ विषय ऐसे हैं जहां हम विश्व से बेहतर कर रहे हैं, शायद सह आशय नहीं कर रहे होंगे, इंटेंशनली नहीं कर रहे होंगे, लेकिन ऑर्गेनिकली वो हो रहा है। उसको और सस्टेनेबली कैसे ग्रो कर सकते हैं, उस पर हम सबको काम करने की आवश्यकता है। और मैं अपनी बात प्रारंभ करने से पहले धन्यवाद करना चाहता हूं मेक माई ट्रिप फाउंडेशन को और WTCCII को भी, कि उन्होंने आज टूरिज्म एंड ट्रैवल सेक्टर के जुड़े हुए सारे स्टेक होल्डर्स को एक जगह एकत्रित करके, हालांकि उसके लिए धन्यवाद विनीत पंछी जी ने हाथ ऊंचे करके हम सबसे एक दूसरे को दिलवा दिया है। सारे इंडस्ट्री लीडर्स को, एविएशन पार्टनर्स को, ऑब्वियसली पॉलिसी मेकर्स को, टूरिज्म मंत्रालय के सब अधिकारियों को, सारे प्रोफेशनल्स को और ऐसे लोग मिलकर जो कंप्लीट सस्टेनेबिलिटी का एनवायरनमेंट बिल्डअप कर सकते हैं, उन सबको एक जगह पर ला करके इस विषय पर विचार करने का अवसर प्रदान किया। विश्व भर में भी आज जिस किसी भी प्लेटफॉर्म पर ट्रैवल एंड टूरिज्म के बारे में चर्चा होती है, वहां निश्चित रूप से अब सस्टेनेबिलिटी के फैक्टर पे सब जगह बात होने लगी है। और ये बिल्कुल निश्चित तथ्य है कि इस समय में यदि हम एक दूसरे से सीखते हुए, एक दूसरे के द्वारा लिए गए इनिशिएटिव्स या नवाचार, उन सबको जानते हुए, साझा करते हुए और सॉल्यूशन की अप्रोच के साथ में अगर आगे बढ़ते हैं, एक फ्यूचरिस्टिक अप्रोच के साथ में आगे बढ़ते हैं तो निश्चित रूप से समस्या का समाधान निकलता है। और माननीय प्रधानमंत्री जी हमेशा इस बात को कहते हैं कि चाहे कितनी भी बड़ी चुनौती क्यों न हो, उस चुनौती को हराने का जिम्मा यदि समाज अपने कंधे पर उठा ले तो उस चुनौती को आसानी के साथ में हराया जा सकता है।
Okay, let's move on and get to the IT space because the IT sector is navigating through the uncertainty of Trump's tariffs, the challenges posted by AI. Now, just recently, I caught up with Arundhati Bhattacharya, who is the president and CEO of Salesforce South Asia, and I began by asking her what her corporate clients are telling her and doing in these uncertain times. Listen in.
This uncertainty is of a different kind, but it's something that the world has faced earlier in the sense that there was uncertainty during COVID, there was uncertainty during the Ukraine war. This, of course, is a little bit different, but then every uncertainty is uncertain because it's different. So if you ask about what our clients are telling us, there is not something very different from what they were telling us 2 months back. One thing I think business realizes, and that is in order to take care of the uncertainties in this new world, they need to be more agile and nimble. They need to be more flexible. They need to be more productive and efficient. And if those things are going to be achieved, the main thing that will help them achieve it is technology. In today's world as well, if you've got to survive, if you've got to be sustainable, you have to have the latest technology. So I think companies realize that, and therefore, you know, there is an urgency as to how they get the latest and the best. How they go about it is still a question they're asking, but whether there is a change in sentiment where technology is concerned, I don't think there is.
Okay. I understand that you need to leverage technology to stay competitive, agile, flexible, to deal with this uncertainty. But, you know, companies that we speak to are indicating that they're delaying their investments, decision-making. Even TCS referred to, at least tactically, some projects that they thought would have started have been paused for now. You aren't seeing anything of that sort?
So what we are seeing is clients asking us more questions about the value we bring to the table. Okay? So these could be projects, you know, which would still go ahead if we are able to provide the return on investment, the ROI. So value creation and proving of the value, I think, is very important, along with the fact that, you know, what the project really entails, what will be the actual outcome. So both qualitatively and quantitatively, we need to showcase what is it that will be achieved by doing a particular, you know, project. And if we are able to showcase that, I think clients are still willing to spend.
So tech budgets are still intact? We haven't seen any cuts?
We haven't actually felt any cuts as yet, but you have to understand this is just 2 months old, okay? And there have been a lot of flip-flops during that time itself. So unless and until people understand what will be the exact fallout, at this point of time, it doesn't seem to be impacting it yet.
You spoke about how projects where you are certain of the ROI and the ROI is high are going through. But what about some of the discretionary spending, where the outcome may not be as certain? You know, what we call discretionary demand.
Yeah, but then, you know something, people will do some amount of discretionary spending if they still believe that the outcome will be something that will give them greater value. There are a lot of things that you have to experiment on before you can actually decide that this is the right thing for you. Have they stopped experimenting? I don't think so. Because, you know, it requires you. See, you have to try many things. Sometimes you need to fail in order to have success. But people want to, you know, try fast and fail fast and get up and do the right thing again, okay? So I don't think this is the things that we are trying to do, which is create a unique customer experience, and you know we play in the customer experience field, and to create the autonomous agents that will take away most of your very low value stodgy jobs and leave you free to innovate, leave you free to actually get in touch with your customers. Those are not the areas that people really want to cut down on, because at the end of the day, any organization, no matter what it does, ultimately it's dependent on your customers. And if you're not able to please those customers, if you're not able to address the pain points of the customers, if you're not able to create unique experiences for your customers, then, at the end of the day, what the hell are you doing?
So Salesforce India, as of now, is not impacted,
No,
according to
as
you?
of now, we would say no.
Okay, and FY25-26 should be as good as, say, FY24?
So, we've just closed the year. This is a silent period for us. We can't really talk about it. But yeah, at this point of time, I think things are good.
You spoke about autonomous AI agents, right? That's the future. Are they displacing workers? Because they are able to create very human-centric experiences, customer experiences, personalized. And you also refer to them as low value. So are they displacing tech workers?
So, the thing is, like any other change, what will happen is the nature of jobs will change, okay? If you are looking at people writing very basic code, yeah, there will be a time when agents will be able to do it, okay? But if you're looking at evolving that code into something that really addresses the issue at hand, you will still need human intervention. I think we have to stop fearing the fact that there will be job losses. There will be job changes. The way we are working today will change. The nature of the jobs will change. Will it mean reskilling? Yes. Will it mean upskilling? Yes. Will it mean, accepting that there is change coming our way? Yes. And what we continue to tell people is, this will probably give you more time to be human, because too much of your time was going into doing routine jobs in the system. Our surveys show that 41% of the time that people spend doing a job is doing repetitive jobs that can just as well be done by agents. Now, if you got back 41% of your time, imagine how much more you could accomplish. Imagine how much more creative you could be. Imagine that you are actually then not getting burnt out, but you are being thoughtful about your job. You are actually connecting with your customer one-on-one, which probably in today's day and age, people are not able to do. So I personally think that this is something that will be a huge enabling, initiative. It will enable people to do much more at a much less time and do it in a far more human way. So in fact, contrary to everybody else, I continue to say that agentic AI will enable humans to be more human rather than the other way around. So it's not a question of displacing, it's a question of changing.
That's well put. Agentic AI will help humans to be more human. 41% of your potential time could be freed up if agents just do all the repetitive, stodgy work that we do on a daily basis in our jobs. Well, that brings us to a close in Trading Hour. Hope you enjoyed the show. Don't go anywhere. On the other side is Halftime Report.
$1,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself.
Stocks trade in a narrow band as the recent Trump messaging alleviates uncertainty. Financials and FMCG eke out some gains, while IT and metals drag in trade. Mid-caps are better placed.
IndusInd Bank could see the exit of 3 senior executives, including the CEO, the deputy CEO, over delayed reporting of the discrepancies in derivatives accounting. Sources tell CNBC-TV18 this, even as auditors put the financial impact of irregularities at 1979 crores, less than the earlier estimated sum.
A revision in the administered gas allocation to city gas distributors involving a reduction in the supply from old fields and some allocation from new blocks is seen driving up costs. Stocks of IGL and MGL slip on the revision.
The union government is expected to float a tender for 10,000 e-buses next month under the PM's e-drive scheme. State arm CESL will also issue a tender to select city e-bus operators for 9 cities.
SEBI outs Gensol promoters from key positions in the company and bars them from the market after it discovers incidents of fraud, stock manipulation and fund diversion for personal users, like booking an apartment in Camellias and buying golf gear.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me today is Nigel D'Souza. So the team of Chartbusters comes to you for Halftime Report as well. In the last hour or so since we left from Chartbusters, what is it that has changed, Nigel? We come to you live from the CNBC-TV18 Motilal Oswal studio. The frontline indices more or less consolidating. It's the mid-caps which are doing a lot better. The Nifty Bank even more so. The only difference during Chartbusters, we had the Nifty and Sensex marginally in the red. Now they are marginally in the green. The mid-caps and the Nifty Bank, which is basically above Nigel's head, continues to do extremely well. So, good afternoon so far, Nigel, notwithstanding the consolidation that we're seeing in the front end of things. And that's largely understandable because of the volatility that we saw earlier.
Well, that's right, Mangalam. If you put it in context, the US futures are down. The Asian markets, most of them as well, are trading with a bit of a negative tick. And in this sort of a backdrop, the Nifty actually is holding flattish with a bit of a positive bias, with the Nifty Bank the one that's powering its way ahead. So that's good news, and the breadth of the market as well is firmly in favor of the number of stocks that are advancing. 3 stocks advancing for 1 stock that's declining. Just take a look at the Nifty Bank. Now the Nifty Bank is less than 3.5% away from a fresh all-time high. Talking about banks, well, let's talk about IndusInd Bank. It's surging in trade after the company reported external audit has found 1,979 crore rupee reduction in the bank's network. That's due to the derivative discrepancies. Ritu joins in to fill us in with that and also what brokerages are making of that. Ritu?
Well, a top-level shakeup could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin, growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Thanks a lot for that. Ritu explains why the stock after yesterday moving up, the street has read this positively. It's up another 6% as we speak. But let's get in some opinion that we got earlier today. Steel Secretary Sandeep Pondrik tells CNBC-TV18 that the safeguard duty recommendations are under examination and a decision is expected in the near future. He adds that it is difficult to say if the rate will be revised from 12% to around 20%. He also mentions there's no mega merger between the steel PSUs. Let's listen in to excerpts of that exclusive conversation.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second point about 20%, I really don't know because it's as you know, the DGTR process, the safeguard duty imposition process is a sort of a quasi-judicial process and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty. The per capita consumption in the country now is more than 100 kgs per person and it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that, if you see our GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%. RINL, as you know, that government has given a lot of money to RINL to keep it as an ongoing concern. So I don't see any possibility of immediate merger. That decision is not there in the government. Similarly for NSL, so for now, no such talks are or no such thing is happening in the ministry for merger of these three. As you know that the 21 decision of cabinet that NSL will be divested still stands. However, not much progress has taken place on that front.
All right, with that, we'll slip into a short break. And as we do that, here is some good news for our viewers. India's business news leader, now just a click away, which is the CNBC-TV18 All-New app. You can get instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. You can download the app from the Apple Store, the Google Play Store, or just scan the QR code, which is there for you on the screen.
His longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
मुंबई का जो सिंगल कार है मुंबई 1, ये कार हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबअर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
Welcome back. You're watching us here on Halftime Report. Just keep an eye out on United Breweries. Remember, the stock was doing well in yesterday's trading session. Right now, we've got an update for the January to March quarter, and this has been published by Heineken NV, basically, which is the promoter of the company, along with their results. What they've said is that in India, the net organic revenue has grown in low teens as beer volume grew by mid-single digits. So that's the number to watch out for. Low teens revenue growth, beer volume grew by mid-single digit. And the stock should see some decline because they said that their growth was lower than the market because of supply disruption in one of their major states. Remember, we had the Telangana issue for United Breweries when it came to them actually stopping supplies there, and thereafter it was fixed. It was temporarily halted due to ensure sustainable business model for the future. As a market leader, they continue to actively unlock premium segment, etc., which grew in the 20s. Led by Heineken Silver, Kingfisher Ultra and Kingfisher Ultra Max. So short point, mid-single digit volume growth for this entire quarter, lower because of a temporary impact in Telangana. The premium part of the business growing in 20s itself when it comes to the volume. So just keep an eye out on United Breweries. But let's move on. Let's talk about ICICI Lombard. It's recovered from its opening lows, reacting to its fourth quarter earnings. Earlier today, we spoke with the management on their Q4 performance and their outlook. But before that, Yash joins in to give us earnings insights in our special Insight Edge segment. Yash.
Well, Mangalam, let's look at both aspects. A, what does the result for the fourth quarter look like, and why the stock is still under pressure, though it's recovered from the lows, but why is it still under pressure? As far as results for the fourth quarter are concerned, they seem strong. The net earned premium, that has grown at 20%, which is a healthy rate, at about 5,226 crore. Underwriting loss has reduced by 11%. Coming in at about a loss of about 210 crore rupees. The operating profit, that is down 26%, but that is largely because of the investment income also being lower to the same proportion in the fourth quarter. The combined ratio has been well protected at 102.5 versus 102.3. Now, the PAT is down about 2% in the quarter. Why the stock is under pressure? That is because uncertainty on two things. One is how will the motor business turn out in the coming financial year, that is FY26, with sales seeing some pressure, especially the two-wheeler sales in the rural pockets of the country. How will that pan out for the motor insurance business of ICICI Lombard? B, the entire insurance sector has been trying for a pricing revision when it comes to motor third-party premium prices, which are in the hands of the regulator. No luck so far for about a few years now. The industry is hopeful that something will transpire in FY26, though the management clarifying to us that there has been no communication whatsoever, no hint whatsoever of any pricing revision in this year as well so far. So that also plays as far as the uncertainty point is concerned. If there is no price revision, it would adversely impact the motor portfolio, increasing the loss ratios, and that creates a fair bit of uncertainty and negative uncertainty as far as that particular stock is concerned.
All right, Yash, thanks a lot for that. Let's also hear out what the management had to say to us.
Across different segments, I think the road that's kind of laid down looks very, very promising. Whether you look at the infrastructure investments and logistics coming in on the commercial lines, pricing uptick again happening in that segment, health looking quite promising, continuing to look to exhibit a double-digit growth. And even motor, I think in terms of how do we see things playing out in the subsequent year, looks promising. So all in all, I think what we would kind of continue to pencil in is to outperform the industry in that range of, as we keep saying, between 200 to 200 basis points insofar as top line is concerned, and obviously a trajectory to see an improvement in combined. What we've been able to deliver is a consistent improvement in combined year on year. That's what we had kind of spoken about as well. And even in fact, at the beginning of the year, honestly, if you look at in our April 24 earnings call, we did kind of expect the market to be slightly more semblance insofar as combined ratios are concerned. But if you look at the 9-month numbers, the industry has actually seen an adverse development in the overall combined. In fact, it has kind of moved by about 100 basis points from 112% the previous year 9 months. So the key thing to watch out for is what direction does the market take? And in that context is how we will be kind of positioning our opportunities. But everything remaining the same, definitely we would want to see an improvement in the combined going ahead. And more importantly, as I said, the return on equity range that we want to continue to start exhibiting to the stakeholders will be within that 18 to 20%.
All right. Well, Yash is still with us. Yash, tell us about ICICI Prudential. That's the other stock that's reacting to its quarter 4 numbers.
Well, ICICI Prudential Life Insurance is reacting positively to the numbers, and of course, important reasons for that as well. On one hand, the disappointment has come on the top line, that there has been fair bit of sluggishness when it comes to the top line growth, the premium growth. What has worked for the stock today are two things. One is how the company's managed to hold on or in fact improve its margin performance in the quarter. Second thing is with respect to the positioning of the stock as well. Let's look at the numbers a little more closely. New business premium, that has grown at about 14%. Total APE, that is down 3%. It's missed CNBC-TV18 poll as well. Retail APE is down 2%. Now, this is the sluggishness that I've been speaking about as far as the top line growth is concerned. Let's look at the margins. The margins have improved by 120 basis points. The margins have come at about 22.7% versus 21.5% on a year-on-year basis. Against the poll also, there's been a fair bit of beat which has come on the margins at 22.7% versus poll of 21.8%. This is the first factor which has worked for how the stock is reacting today. The second thing, as I said, positioning. It's not the most expensive stock in the list of life insurance companies. Also, the stock is down 14% in the last 3 months. So, of course, taking respite from how the company managed its margin performance, though the premium growth has been slow, and positioning working for the stock today.
All right, Yash, thanks a lot for that. So that's about ICICI Prudential, up nearly 3%. We take a short break. On the other side, Pritesh Mehta of Fair Securities joins in with some trading strategies.
It's a ghost of 2008, which gives
never
us all
leaves
that.
you. It
would
never
never
leaves
leave
you.
you. So far, it's been moving along as Trump had planned.
Yeah.
And I think the worst is behind as far as the markets are concerned.
I remember doing a show when Zomato was listing with some of your team members. So I took early calls.
This is one of the lessons I learned, I would say, early in the TMT bubble, .com bubble. In my US portfolio, I never could buy Amazon,
Okay.
thinking that it's not making money. And at that time, it was also an assessment that it can never make money. Today, I often get asked, because we are very cash flow centric and there are loss-making companies in our portfolio as well. Value of any business is present value of future cash flows. It's not necessary you have to make cash flows in year 1,
Yeah.
year 2, or
Yeah.
even year 3.
Is the post-COVID era dream run of 3, 4, 5 years?
7.
Is that over?
Post-COVID 5-year fantasy run is over. A dream run, I would call, is much longer term.
Welcome back. Well, markets are holding with some gains. A couple of stocks have moved to the high point of the day. IDFC First Bank, they'll be considering a preference allotment. So that stock now has moved to the high point of the day. Lloyd's Engineering, that's the other company that's going to be considering a rights issue. So that as well has moved to the high point of the day. It's recovered from the recent lows out there. So we'll have to keep an eye out on that one as well. That should come up for you on the screen. But let's focus on a clutch of stocks that are not doing too well. City gas distributors are under pressure after the APM gas allocation was cut by 18% effective today. Sid's with us to fill us in with those details. Sid?
So 2 weeks and 2 negative news flows related to city gas companies. On April 1st, we saw that APM gas price was increased to $6.75 per MMBTU from $6.50 per MMBTU. While that was on expected lines and it was announced as per the recommendations made by Kirit Parikh panel in 2023. But now this APM gas allocation cut has come as a surprise for city gas companies. And in the last 1 year, APM gas allocation has been reduced by almost 50%. In the beginning of 2024, the gas allocation used to be in the range of 70 to 80%. Now, after this cut of 18 to 20%, the gas allocation for city gas companies is reduced to 40%. So MGL says this might have an impact on profitability. Same comment is made by Adani Total and IGL as well. CLSA believes that these companies, especially IGL and MGL, might have to take a price increase that might be less than ₹1 to pass on this cut in APM gas price. While Jefferies believe that it won't be that easy for city gas companies to pass on the APM gas cut. Also, it builds in flat EPS estimates over FY 25-27. But the question is the cut done, or there might be a further APM gas allocation cut we might see in the future?
Take that point entirely, Sudarshan. What we'll do is take a short break on that note and come back the promised conversation with Pritesh Mehta of Yes Securities with some trading strategies.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that we will, the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy.
Welcome back. Just look at the market right now. We have the Nifty virtually unchanged from the time when we started the show, but still marginally in the green. We have the Nifty and the Nifty Bank and the mid caps doing a lot better. So perfect time to get you an F&O update during the middle of the day. We have the frontline indices which show a strong outperformance of the Nifty Bank, which is above all moving averages right now as well. And the mid cap index doing a lot better, with advances far outnumbering the declines by a factor of nearly 3. So you have 1900 stocks which are in the green for about 650 which are in the red as well. Because the Nifty Bank is outperforming, it is understandable that among the top gainers we will have the banking names. IndusInd and Axis are the ones that really stand out. IndusInd for this week itself has completed a gain of almost 12.5%. Was up in yesterday's session too. Now there is a travel and hospitality summit which is underway, so the street believes that maybe there could be some announcement that would come by, which explains why these stocks have been buzzing around over the last couple of days. So we have Sami Hotels up 9%. We have Yatra Online, Travel News Techs, which is basically Ixigo, and Park Hotels, all of them putting in some gains after the decline that we've seen in these names earlier as well. The Nifty is above the 20 and the 50-day moving average, which it conquered yesterday. The question is whether it goes past the 100-day moving average or not, which is at 23,391. All of that depends on what happens tomorrow. Why? Because tomorrow is a Thursday. It is the weekly options expiry, and we're close to the 23,350 mark on the Nifty, but we are seeing action at both the 23,300 call and the 23,300 put. You put the options in this together, it makes it around 150 rupees, telling you that the street is positioning itself for 23,150 at the lower level to 23,450 at the higher level from an options expiry standpoint in tomorrow's trading session itself. Individual stocks, Irida is fairly well bid up in today's trading session, but it may enter F&O ban given the sort of open interest built up and that having crossed that 95% mark as well. So that's one stock I'll keep on my radar.
Okay, all right, Mangalam, thanks for that. Well, let's get in Pritesh Mehta, Executive Vice President, Yes Securities, who joins us on the show. Hi, Pritesh. A good-looking screen, right? You'll say 15 points. What are you talking about good-looking? Well, I'm talking about it in the backdrop of what we're seeing in Asia, the US futures as well. So 15 points up is not too bad. What's your guess? We're going to be testing higher levels. I think, the next resistance will come in around the 23,850, which was the recent high that we made. But how do you trade it in the near term?
As we speak, India is trading around the levels of 16 mark. It was down 20% yesterday. It means that the extreme fear that we have seen last couple of days, that has collapsed. It's a good news. And when we look at Nifty, it has defended the low of the month of March on closing basis. And thereafter, we've seen a sharp recovery. Also, our customer stock and Nifty is moving higher from support zone. The breadth is improving. There is more participation, from the broader markets, from the Nifty as well. There are around 55-56% of Nifty stocks trading 50 moving average. So I think the things are now smoothening. We are done with the kind of rocky start that we had, to the month of April. But from here on, I think markets will consume time. The right way to play this market would be focusing more on stocks. Index, I'm not expecting any move either side. In fact, we can see range bound movement continuing at least for the next couple of days. But focusing on stock specific activity with the right way to play this market.
Okay, then why don't you give us some stock specific action, Pritesh?
Yeah. So Nifty PSU Bank Index is up by 2% today. So when I look at the entire basket, there are several components which are providing short-term reversals. But Bob, Bank of Baroda has got our attention. In fact, if you look at the ratio of Bob versus PSU Bank Index, it is trying to come out of a 4-month base. So we can see sharp outperformance from Bank of Baroda in the next couple of weeks. And on standalone chart, we have seen series of bullish anchor columns and follow-through moves coming in. So buy Bob for a target of 275 and stop loss would be around 224. The second stock that we like is Shree Cement. Now see, our customer cement index is trying to break the previous peak seen in 2024. It is improving. The structure is improving. And when we look at Shree Cement versus the customer cement index, it is outperforming. So even on standalone chart, we can see the stock trying to surpass the peak of 2021. So big base breakout is in the offing for this particular counter. So buy for a target of 35,000. The stop loss would be around 29,000.
All right, we're looking at a couple of these consumer names as well, Pritesh. I wonder whether you have a call on them. Tata Consumers moved to the high point of trade for the last couple of trading sessions. Asian Paints seems to be doing well. This is the season for them. At the same time, crude oil prices are contained. Berger Paints, as we speak, is up around 3% as well. And then yesterday came the comment of, a normal monsoon or above normal monsoon from the Met authorities. On the charts, is there any FMCG stock that you like?
See, when you look at the overall trend of FMCG space, they have made laggard. They have underperformed vis-a-vis index. So when we look at something like Dabur, it has caught our attention. The stock is trading at around 10-year mean. The stock has not done anything last couple of months now. Now it's trying to recover. We can see some stability coming in. As far as Asian Paints is concerned, yes, it is bouncing off 6-year mean. We're talking about a long-term average coming into play. So yes, some sort of reversal is expected in Asian Paints also.
All right. Thank you, Pritesh, for joining in and giving us all those details. With that, we'll simply do a short break, come back. We get you, what the street is expecting from Wipro ahead of their fourth quarter earnings, which is due today.
Go back to 1989, which is when you actually started your project, your passion, which was how do you take Priya and make it a modern cinema-going experience for the Indian consumer. Same time as the iconic Amir Khan movie Qayamat Se Qayamat Tak, which was set to capture the imagination of the Indian moviegoer. Was Papa Kehte Hain the anthem playing in your head at that point in time?
Well, Papa Kehte to the in my case as well. But I was really never thinking of the Indian consumer or the macro economics of the business or the vast potential. Simply speaking, I just want to prove to my father that I'm not a failure.
We're starting at a new financial year. You know, is there a silver lining that you can spot?
Sid Field is one of the writers I read a lot. So he used to always say, in every story in life, or there's Act 1, Act 2 and Act 3.
Where
Act
are we today?
Act 1 is a setup. Act 2 is a conflict. And Act 3 is a resolution. My Act 2 has become very long.
Do you believe that there are likely to be regulatory headwinds?
Regulation should not happen at all. It is not part of an Essential Commodity Act. We don't come into that. So every time there is something that we hear from any state government, that's the only thing that saves us.
Doesn't have that depth. So optically it looks very scary when you say, oh, Harley Davidson is charged 100%. You know, how many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain. In a sense, even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an
Welcome back. Well, let's focus on a couple of stocks then that are moving around in today's trading session. IRDA, that's surging after reporting a strong set of numbers in the fourth quarter. Abhishek joins in to break it down for us. Abhishek?
Well, strong sequential growth seen in IRDA, and it looks like the yield has been a positive factor as well. That has worked well for them with respect to spreads improving on a sequential basis. So disbursements are up 73.5% sequentially. That's helped the AUM growth to be around 28% YOY and 10.5% sequentially. While AUM growth is at 10.5% sequentially, the interest income is up more than 12% quarter on quarter, which looks like the yield has improved massively for them. So the NII growth is at 27.3% YOY and about 21.7% sequentially. Provisions are up 24.5% quarter on quarter, and PAT is up almost 49% YOY and about 18% on a quarter on quarter basis. So the spreads have improved for them. 2.42% spread at the end of FY25 when compared to 2.16% on a year-on-year basis and about 2.28% in the previous quarter, that is Q3 FY25. Their asset quality has also seen improvement. Gross NPA ratio is down to 2.45% when compared to nearly 2.7% in the previous quarter. Back to you.
All right. Thanks a lot for that, Abhishek. Let's talk about the earnings to track today. IT giant Wipro set to report its fourth quarter numbers. Reema joins in with the key expectations. Reema.
Well, expect a subdued quarter. Even in the case of TCS, if you remember, the company reported a sequential decline in their top line. They cited macro uncertainty, which impacted them to some extent in Q4. Some projects tactically were put on hold. Decision-making has been delayed on account of this entire uncertainty. So even for Wipro, anyway, Q4 is a seasonally weak quarter. So we're working with a revenue decline of about 0.5% in dollar revenue. Constant currency revenue growth should also decline on a quarter-on-quarter basis by 0.2%, but within the company's guided band of -1% to +1%. EBIT margins could decline on account of negative operating leverage, which is basically your revenue is declining and your costs remain the same. So EBIT margins could come in at 17.1%. But all eyes will be on what the company guides for the next quarter. That's the June quarter. Question number one is, does the company guide? Do they have enough visibility to give a quarterly guidance? Perhaps they do. But, what will the guidance be? The analyst reports mostly came out before, the tariff uncertainty was ratcheted up by a lot of back and forth. So the estimates that I have are -1% to +1%. Some believed it could be -1.5% to +0.5%. But, in the subsequent days post the analysts' note, the street has gotten a lot more cautious. And therefore, there is a possibility that the company would be conservative when they come out with the June quarter guidance. Also bear in mind that Wipro has a higher exposure to discretionary demand. They had made that acquisition of Capco, which is a consulting company in Europe. So they're more indexed to discretionary spending, which gets compressed in times of uncertainty. So what the street says about that will also be watched. But again, as I said, the key is not the Q4 numbers, but if and what the company guides for Q1.
Take that point, Reema. Thanks a lot for that. We'll keep an eye out on the guidance out there for Wipro, along with all the other IT pack as well. More importantly, just keep an eye out on a couple of stocks before we slip into that short break. Emcure Pharma is the one that really stands out. It's up around 7.5%. What's important about today's move is that it's crossed past that 1008 mark on the share price. Emcure Pharma currently trading at 1027. 1008 was the price at which the company, gave shares at the IPO. After that, the stock actually went up all the way up to 1400 thereabouts. So a big decline. And from those levels, it has now seen a bit of a recovery back around that issue price itself. We're also seeing some traction in names like Bajaj Electricals, that's up around 5.5%. And a few of these stock market, names like IIFL Finance, 361 WAM and Angel One have all, moved higher as well. So the capital market plays come up for you. IIFL Finance is higher. We have 361 WAM. That's the one that should come up for you as well. It was in the red for most part of the day. Nimesh had spoken about the possibility of a deal out there. And Angel One, ahead of its numbers, up around 1% at the high point. Take a short break, come back. On the other side, we focus on all things commodities. Manisha Gupta joins in with Feroz Azim.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबअर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
Welcome back, and joining us on the show now is Feroz Aziz. He's Deputy CEO at Anand Rathi. Well, Feroz, hi. I know it's unusual for you to be getting you on a commodity segment, but I had to gloat about the gold price rise. So with the kind of gains that we're looking at, with 25% of a run-up in this year, 28% of gains in the last year, would you say gold now seems to be soon becoming a mainstream rather than just a safe haven or a hedge? You are on mute, Feroz. We can't hear you.
So, of course, you've been a bull, Manisha, on gold. I can probably tell you are the Rakesh Jhunjhunwala of commodities. That's how you've been eternally a bull. Okay, that's a tagline in my mind, which I thought I'll read out. So coming back, is it been mainstream? So let me break this down with some data. If you look at, see, gold, first let's test the hypothesis whether it's good hedge for a moment, and then go to the second part: is it become more mainstream than the hedge itself? Now, what if you look at a study of the last 8 years, where you see when Nifty moved down, Nifty actually moves from peak to trough about 15% each year. So if you look at 2017-18, Nifty went down from 28 January 18 to 23rd March 18, which was the peak to trough of that specific financial year of 10%. In the same period, gold gave a positive 3%. Now, if I go to the last year instance of 2023 to 24, Nifty peaked on 15 September 23 and came to the trough in just a month, 26th October 23. It fell by about 6.6%. In the same period, again, gold gave a 3% positive return. So the point I'm trying to make is in the last year, 8 years, every time Nifty moved from peak to trough, in the same period, if you check, gold was positive. So does it go through the litmus test of hypothesis saying gold is a great hedge? The answer is a big yes. Point one. Point two, with the returns you see, for the last 5 years, the gold has done about 17.44. Nifty has done about 18.78 from 2019. So I think it is still, the jury is out for a mainstream, but it's certainly a great debt replacer, as I've always been exhibiting.
Oh, absolutely. Just coming more closer home, Feroz, and if you look at the last couple of years or 3 years, I mean, I understand you're putting a point through across on longer term to shorter term portfolios right now. But with the kind of space that we're in right now and what we've seen in the last couple of years, and perhaps if that is anything to tell you on how the next couple of years can be, would you say gold has earned its space within a portfolio?
Yes, 100%. There's no two ways about it. But quite a few gold participants have this myth that the trend of making money in gold, not for a trader, for anybody who has a 1 year, 2 year time frame as well, is not going to be dependent on how much a seasonal purchase is going to come. See, if you look at the gold purchases by governments and what kind of reserves do people have, the US is the highest with 8,133 tons. And then if you look at India, is 1/10 of that, 876. And last year we added 72. So if you look at the kind of additions last year, you saw Poland add 89.5 tons. So what will happen to the dollar gold will be determined by not household ownership, because household ownership globally is only 2.3, but in India, household ownership of gold as a percentage of the total household savings is 23. So I personally think, given the kind of uncertainty in terms of dollar becoming a little more scarier reserve for a government to have, will definitely see their proportions change. And the dollar price of gold, I think I will be very buoyant in spite of this rally, which you just stated in 28 plus 25%. Dollar gold will be very buoyant given where Trump has taken the trade war to.
Clearly. Feroz, the other thing is, and a lot of conversation that I have with commodity players and institutions, etc., do tell us that the way the gold prices have been rising, the household very soon will not be able to afford it the way they have been doing it for many, many years. At $3,300 an ounce and at 95 lakh rupees a kg without the GST and the making charges, would you say there's more financialization and a more investment as a subject more related to gold now?
Yes, I personally think ornamental, but I think, see, if you look at incremental additions, most people in India are incrementally adding it, not from ornamental value. They just think that gold is a great asset to buy. Otherwise, what people can always do is the gold which Indian households own, 22.8% allocation to gold. That's not a small allocation. They can always recycle that. But will they be able to add coins and bars? I think so, in smaller quantums, in those 1-2 grams, I think people will be able to afford that. And the inclination is high. I was speaking to one of my closest friends who runs a chain of jewelry stores in Orissa. He says the sale comes down dramatically. My mark to market at my jewelry store of all my stock goes up, so I become very happy. But when I look at my sales numbers, they drop. So affordability definitely is a question, like you rightly pointed. But I think in the long run, if this is the price which continues, I think recycling of gold and smaller ticket investments, so investment will always have its merit. And I think people like the tangibility in India, how much ever you say. When I gifted 1 crore of ETF, gold ETF to my sister, she was there in November last year wanting to sell it. But she never sold physical gold. So I told her what that was. So that was surprising. So I think people love the tangibility, and that's not going anywhere.
Oh, absolutely. Feroz, almost everybody on street has a view on gold prices right now. What is your sense on where are we going for this year, next year? Have you done any calculations?
So if I look at calculations, what I can always I try to bet on is where it will not go. If downsides are protected and upsides are greater than debt, then I think that's a serious asset class I'll look at. So I personally think both these are very well taken care of in gold at this stage. So if my downsides are limited, after a rally, the biggest risk is, am I getting into something which has missed the bus and I'll only be a party to the downside? So I think downsides are going to be limited, point one. And will I get double-digit return in gold? I think on a 3-year holding period, I still believe at these prices possible.
All right, 3-year double-digit returns are possible. Feroz, this is Mangalam here. With me is Nigel in the studio as well. Manisha is there as well. Great conversation as always. Just 2 questions that we have. Since you're in, a tagline giving mood, Manisha is the Rakesh Junjunwala of commodities. Would you like to give a tagline to both of us as well? And secondly, we just briefly
Jealous, are you guys?
No, we just briefly heard him. Now is the jealousy part that comes in. Heard him speak about gifting 1 crore worth gold
Yeah,
ETFs.
I couldn't get it.
What is the procedure to be your sister, Feroz?
Maybe I qualify for that, not you guys, unless...
Yeah, which is why. Okay. Go ahead, Feroz.
coming to the tagline, I think I will call you the duo who pulls the opposite gender to watch TV. You guys are the best-looking men on TV, and that's where you're getting a lot of female attention on television. So coming back on a serious note, so I personally think that, of course, gold as an asset class, Manisha, over the years have been propagating. I personally think gold is a serious asset class because Indians love debt as well. And debt is a short recipe to disaster. It's as good as kill slowly. It's like smoking of investing, debt, for long-term money. I'm not speaking of short-term money. Like we manage intergenerational wealth of clients. We don't even take clients who say, I have got 5-year money. We say we're not interested. We're looking at intergenerational wealth. In that, people having 50-60% in debt is cancerous to my mind.
Okay, all right. Thanks a lot for that, Feroz, as well as Manisha. By the way, we need to address some flashes that are at the bottom of your screen. It appears there's a bit of a hit that's come in, both for Lupin as well as Zydus. So explains why you pull up the intraday chart. Both those two stocks have moved to the low point of the day. We'll wrap up on this edition of Halftime Report, but Vinny is waiting for you on the other side on Business Lunch. She'll address that pharma news as well. Don't go anywhere.
Stocks trade in a narrow band as recent Trump messaging elevates uncertainty. Financials and FMCG eke out gains, while auto, IT and metals drag. Mid-caps fare better. IndusInd Bank could see the exit of 3 senior executives, including the CEO and deputy CEO, over delayed reporting of discrepancies in derivatives accounting, sources tell CNBC-TV18. This even as auditors put the financial impact of the irregularities at 1,979 crore rupees, less than the earlier estimated sum. A revision in the administered gas allocation to city gas distributors involving a reduction in supply for old fields and some allocation from new blocks is seen driving up costs. Stocks of IGL and MGL slipped on revision.
SEBI ousts Gensol promoters from key positions in the company and bars them from the market after it discovers incidents of fraud, deceit, stock manipulation and fund diversion for personal uses, like booking an apartment in the Camellias and buying golf gear. Secretary in the Ministry of Steel, Sandeep, doesn't expect imports to surge on the back of tariff wars, and he is hopeful of a decision on the safeguard duty soon. He adds that there is no plan to merge state-owned steelmakers. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motibala, and thank you so much for tuning in as always. Nifty, as of now, managing to hold on to that green, and we're seeing some bit of a green across the screen as well. So Sensex also just holding on near that flat line, so some bit of a green on the Sensex as well. Nifty recovered from the day's lowest point. Let's see where it's going to be headed in the second half of the trading session. Mid and small cap, a bit of a better performance that's coming in from the broader end of the market. So Nifty mid cap holding on to gains of almost 0.5%, small cap holding on to gains of 1% in today's trading session as well. Bank also holding on to gains of almost 0.8%. Now, two stocks that I want to highlight as well, and Nigel and Mangalam were talking about it just before the show ended, and that is Lupin as well as Zydus. Now, why are we talking about both these stocks? Because there was a court case that was going on with the innovator. Previously, that got a US FDA approval and sanction coming in to launch a drug which was Myrbetriq, generic Myrbetriq. Now, this is an important drug that comes in for the company. Now, there's a court case that has come in where the innovator had actually appealed to the federal court, and now that decision has, where that got a favorable decision, has been reversed and gone in favor of the innovator. So because of that, we're seeing Zydus and Lupin, both of these stocks are in focus, and we've seen a sharp fall coming in because Myrbetriq could account to around 35 million per quarter sales for both these companies, as well as what analysts are highlighting. There's a possibility that there could be a penalty that will come in as well. So we'll wait out for more details on that penalty front, but surely as of now, the court case going in the favor of the innovator is something that is impacting both these stocks, and as of now, that launch which they're done of Myrbetriq as well, that comes a bit at standstill as well. So Lupin as well as Zydus, both down more than 3.5% in today's trading session as of now. But let's move on and talk about another stock that's in focus today, IndusInd Bank. That is surging in trade, and this is coming in after the company reported that an external audit has found a 1,979 crore rupees reduction in the bank's net worth. This is due to derivative discrepancies, which is less than what was estimated earlier in terms of the sum. Now, Ritu is joining in with us to give us more details on this, as well as what are the brokerages highlighting on this front. Ritu, afternoon.
Well, a top-level shakeup could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin, growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
Thank you so much for that, Ritu. But let's move on to the next stock that's in focus today. And we have Gensol Engineering. The shares are tanking, and this is after the market regulator, SEBI, has passed an interim order against the firm and its promoters over the alleged fund diversion and false disclosures. Yash is joining in with us to give us more details on this front. Yash, as of now, the stock has seen a sharp fall. What are the details that you're picking up on this front? And going forward, what should one be expecting as well here?
Well, of course, the stock is witnessing a sharp fall today, but SEBI's order also comes after the stock's witnessed about 90% of its fall in the last 1 year. Let's get straight to, the allegations that SEBI's put through its interim order against Gensol Engineering and its promoters. First one, SEBI has said in its order that Anmol Jaggi as well as Puneet Jaggi will be restrained from holding any position of a director or KMP in Gensol Engineering. Second thing, Gensol Engineering, Anmol Jaggi and Puneet Jaggi will be restrained from buying, selling in securities directly or indirectly. Also, SEBI will order a forensic audit into the books of the company. This team, which will be conducting the forensic audit, will have to submit its report to market regulator SEBI within 6 months. Finally, the stock split, which was announced by Gensol Engineering recently, will have to be put on hold. It won't be executed. These are the 4 parts of the order which SEBI has put through its interim directions. Of course, investigations will go on and more orders will come as the investigation concludes. Now, what are the allegations? The first one is that the company had raised about 664 crore rupees through IREDA as well as PFC. The company had also committed about 167 crore. This fund was for the purpose of purchasing about 6,400 electric vehicles. What happened thereafter? Only about 4,704 electric vehicles were bought for a price of about 568 crore rupees, and 262 crore rupees remains unaccounted out of that transaction. SEBI in its investigation found that this money was used for personal expenses of promoter, including buying of high-end real estate. They've also named the property in this particular order, the Camellias by DLF Gurgaon. Also, the money was used by promoter entities, transferred to promoters' close relatives, a long list of things which SEBI has put out in terms of how that money was used for personal expenses of the family members of the promoter. There were multiple instances of round-tripping of funds through various promoter entities to put the money back into either Gensol Engineering to play the script of the company as well. The money was also round-tripped to again invest back into the preferential issue of Gensol Engineering. So there were instances of market manipulation as well. SEBI has put out this entire list of violations being done by the promoters of Gensol Engineering and the company, and hence the interim order. The investigation from the market regulators and continues from here on.
Okay, Yash, thank you so much for that. Surely we'll be keeping an eye out more updates on this front as well. Let's move on to commodities and what's happening there. Gold prices continue to climb and touching close to $3,290 per ounce, setting a new record. Manisha is joining in with us to talk to us about more on this front. Manisha, good afternoon, and every day we see gold glittering. Are we expecting any different story? What's the story behind gold? Safe haven continues to be the favorite.
Oh, well, absolutely. And we are at a new high right now, $3,300 an ounce, almost done. So it is another all-time highs that we've created in the day today. And with that, this is now 23 days in 2025, which have made an all-time highs. We are trading up by 25% in this year, and this is after 28% of gains in the previous year as well. When you look at the month of April, well, this year we're already at 3,300, and this has been the fastest $1,000 an ounce of a surge that you've seen come in for gold prices. That has happened in the last year itself. If you look at the previous years, well, there has been a steady and definite growth there, but not with the kind of gap that we've seen in the last 1 year itself. Well, there have been various factors then which are supportive of gold at this point in time. The gold has continued rising because of the geopolitical tensions, whether it was about Russia, Ukraine, or then about Hamas and Israel as well. And then it has been about tariffs and uncertainty and the fact that it could lead to recession coming in for various economies there, and the safe haven buying has happened for gold. The dollar index has continued to decline, trading below 100, and that has been yet another impetus there. The markets also are dealing with high US debt and the world debt, which has been increasing in the last couple of years. It also has been about the historical pattern. When you look at the last 1 year, Since the last many years, actually from 2000 to 2025, gold has given you a negative return only 2 years in these 25 years. That pattern also has led to more confidence coming in for gold, where you have seen very strong investment buying as well. So while for the Indian markets as well, we've seen 94,800 as an all-time high till time. Of course, the buying has been quite absent. Gold is trading at a discount in the Indian markets. But what the street will watch out from here on is the expectation from the Powell speech, and then you also have the US retail sales data. A final chart should come in on your screen, which tells you on what the banks and brokerages are expecting on gold from here on. So as you can see, 3,300 done. 3,500 is what UBS and Citi are now talking about. Goldman Sachs is saying $3,700 an ounce is a base case scenario for gold for this year, and they anticipate 4,000 in this year or the next year as well. And Deutsche Bank is talking about 3,700 as well. We have De Beer, which is talked about 3,300 to 4,500 as a possibility. So very bullish revision on gold price forecast continuing from most of these banks.
Okay, thank you so much for that. We'll be keeping an eye out on gold, new highs every day that we watch out for. But let's move on the Sales Secretary Sandeep Pondrik doesn't expect imports to surge on the back of tariff wars, and he is hopeful of a decision on the safeguard duty soon. He adds that there is no plan to merge state-owned steel makers. Listen in.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second question, point about 20%, I really don't know, because it's a, as you know, the DGTR process, the safeguard duty imposition process, is a sort of a quasi-judicial process, and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty. I don't expect any major import increase because of the present scenario, also in view of the fact that in addition to safeguard duty, we are also trying to see that misuse of licenses doesn't take place. We have got complaints that in certain cases and in certain countries, licenses are being misused by importers and exporters both. So that is under investigation, and we would try to put a stop to that kind of practices. So it's safeguard duty, I don't think, is the only way to protect the domestic industry.
Okay, on that note, we're going to slip into a very short break, and here's some good news that is coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that we will, the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that, in a sense, for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. You know, how many will you sell? You sell like...
Welcome back to Business Lunch on CNBC-TV18. Just a quick check at Ease My Trip. We're seeing the flashes at the bottom of the screen just a short while ago. Now, what we're picking up from our sister channel CNBC Awaaz, that ED has raided around 50 locations in India for Ease My Trip, and ED is searching, and the searches are regarding the Mahadev betting app and money laundering. So because of that, we've seen a bit of a fall coming in for the stock as well. So keep an eye out on Ease My Trip in today's trading session. But let's move on, and moving on to an exclusive. Now, sources revealed to CNBC-TV18 that Union government is expected to launch a legal tender for procurement of 10,000 electric buses for 9 major cities across the country. Parikshit is joining in with us and bringing us more details on this one. Parikshit?
This could be a positive for electric bus manufacturers in the country. The union government is set to launch a tender for procurement of 10,000 electric buses. The Ministry of Heavy Industries is likely to launch a tender in May for the procurement of buses under the PM E-Drive scheme. CESL, or the Convergence Energy Services Limited, which comes under the Ministry of Power, is likely to issue a tender to choose intra-city buses, e-bus operators for 9 cities. The centre is likely to extend a subsidy of approximately rupees 3,000 crore for procurement of electric buses. MHI has capped the maximum subsidy amount at rupees 35 lakhs per electric bus. Most states have demanded 12-metre electric buses for intra-city use. Electric buses to be procured for Bengaluru, Chennai, Hyderabad, Pune, Mumbai, Surat, Ahmedabad, New Delhi and Kolkata. The PM E-Drive scheme had envisioned support for 14,028 electric buses with a subsidy outlay of rupees 4,391 crore. The reason why the centre is going with procurement of 10,000 crore e-buses for now is because Mumbai, Kolkata and Chennai have not yet submitted their e-bus requirements. The PM E-Drive scheme was launched by government in September 2024 with an outlay of rupees 10,900 crore and is applicable till March 2026.
Thank you so much for that, Parikshit. But let's move on to some news from China. Now, the country's economy has expanded by a better than expected 5.4% in the first quarter, even as US tariff threats prompted major banks to slash the country's annual growth outlook. We have CNBC's Emily Tan, who's joining with us to give us a report on this front.
First quarter growth came in faster than expected, advancing 5.4% and staying on pace with the 5.4% annual growth in the previous quarter. Solid retail sales up 5.9%, industrial output up 7.7%, all beating expectations. Policymakers are bracing for the impact of the U.S. tariff shock that poses the biggest and unprecedented challenges to the Chinese economy. The last 2 years have also shown a strong first quarter, which was followed by an underwhelming second quarter. Recent data has pointed to an uneven economic recovery as bank lending beat expectations and factory activity picking up speed. The surge in March exports was driven by front-loading and rushing shipments to beat Trump tariffs. But higher unemployment and persistent deflationary pressures fueling concerns over weak demand. The Statistics Bureau out with some commentary to say that U.S. tariffs will not change the long-term improving trend in China's economy. The unfavorable impact from the international environment on China's economy is deepening, adding that China has a rich policy toolkit to support the economy. This comes as the Commerce Ministry issues plans to support high-quality economic development and comes as Vice Commerce Minister Wang Shouwen being removed from his role as the trade negotiator, being replaced by former Chinese representative to the World Trade Organization, Li Changgang. He takes over and was previously the Assistant Commerce Minister during Trump's first term in office. So China making a change to its top trade negotiator amid the trade war with the United States. Reporting from Hong Kong, I'm Emily Tan.
Thank you so much for that. Now moving on, and news from the ongoing US-China tariff wars that we're seeing coming in. The US has hit out to China for going back on the major Boeing deal. This comes after Boeing ordered its state-owned airlines not to take further deliveries of the Boeing jet. US President Donald Trump posted on Truth Social saying that China has reneged on the big Boeing deal, but he did not provide further details about the deal, while adding that China had violated trade deals in the past too. Now moving on to some geopolitical news flow that we have. Iran's supreme leader has said that he is neither overly optimistic nor pessimistic regarding the nuclear talks with the United States. This is his first reaction to US-Iran talks, which began on April 12th in Oman. Both delegations have described the talks as positive, agreeing to meeting again on the 19th of April. Tehran has approached the talks with caution, even as Donald Trump has threatened to bomb Iran if there is no deal. Moving on to some more geopolitical development now. Ukraine's President Zelensky has said that the talks with the United States regarding the minerals deal is progressing positively. This is following a round of discussions that were held in the White House last week. Zelensky has added that talks would continue till the end of the week. Okay, on that note, we're going to slip into a very short break. When we return, we get you more news and updates on the other side, so stay tuned in.
Cars over here, you sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives fully.
Welcome back to Business Lunch on CNBC TV18. Now, in some international news updates that we have, US President Donald Trump has threatened to strip Harvard University of its tax-exempt status after the university has rejected multiple demands from the Department of Education, stating that they encroach upon academic freedom and constitutional rights. Trump administration has been pushing the university to end its affirmative action policies and demanded an end to the university's alleged participation in the anti-Semitic conduct that erupted on the college campus during pro-Palestinian protests over the past 18 months. And some important news back at home as well. The Maharashtra government has come under opposition fire for reportedly cutting down allocation for the flagship Ladki Bahin Yojana. We have Sandhya who's joining with us to give us more details on this front.
Maharashtra's flagship Ladki Bahin scheme is once again in controversy. The state government has cut monthly stipends for February and March to 17 lakh fewer women and reduced benefits for 7.7 lakh women from 1500 rupees to 500 rupees per month. The review process began after the 2024 assembly elections with criteria like owning a four-wheeler and annual income over 2.5 lakh rupees per annum used to weed out ineligible beneficiaries. Before the elections, the scheme covered 2.63 crore women. Now only 2.46 crore women are receiving payments. The government says the 7.7 lakh women with reduced benefits are already getting 1,000 rupees per month under the Namo Shetkari scheme, and Ladki Bahin is capped at 1,500 rupees per month. The opposition has accused the government of using the scheme for electoral gains and scaling it back post-polls. Minister Aditi Tatkare defended the move, stating no eligible woman has been excluded and the process hasn't changed since July 2024. Sources tell CNBC TV18 the scrutiny will continue and the scheme's budget has been reduced from 46,000 crore rupees to 36,000 crore rupees in this year's state budget due to financial strain.
And with that, we're absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, your Midcap Radar.
To your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबअर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं।
Good afternoon and welcome to Mid-Cap Radar, live from the CNBC-TV18 Motilal Oswal studio. I am Vivek Iyer and with me is Mangalam Malu. Good afternoon, Mangalam. You know, it's an action-packed day, earnings season, quite a lot of news flow, and markets are cooling off a little bit from the day's highest point.
Cooling off indeed. You know, what's interesting is, however, that Nifty, while it's meandering around the 23,300 mark, it's the mid-caps which have sharply come off the highs. They were outperforming with a gain of almost 0.5% to almost 0.6%. And now we have that index just about flattening out. What's good is that the Nifty bank continues to do well, so we'll keep an eye out on that. And we have the advance decline ratio, which also is in favor of advances. Let's get you all the top stories that we're tracking this afternoon for you. Stocks, they trade in a narrow band as recent Trump messaging elevates uncertainty. PSU banks and private banks eke out gains, while auto, IT, metals drag. It's the mid-caps that fared better, though currently off highs.
Lupin and Zydus Life under pressure as they lose Mira Bedrock case in a US federal court. Both companies will now have to withdraw the drug from the US market.
A revision in the administered gas allocation to city gas distributors involving a reduction in supply from old fields and some allocation from new blocks is seen driving up costs. Stocks of IGL and MGL slip on the revision.
United Brewery is in focus after its parent Heineken NV says that in 2025 so far their organic net revenue in India grew in low teens while beer volumes grow mid-single digits. Add that the growth lagged market as supply in one of the major states was temporarily halted.
Aditya Birla Real Estate gains on the back of a positive fourth quarter and FY25 update coming in from Birla Estates. Reports highest ever booking value of 8,000 crore rupees across key focus markets.
Well, like we just pointed out, quite a few stocks seeing quite a bit of a sell-off, especially in the last half hour or so. Quite a few power stocks actually that were outperforming in the last couple of trading sessions seen a bit of sell-off. JSW Energy now near the day's lowest point. Zydus Life and Lupin, both of these stocks now at the day's lowest point. But Nigel today is standing at the wall. Nigel, what are the top movers as far as the broader end of the markets are concerned?
Well, that's right. The markets have come off the high point of the day, but a couple of stocks are still doing well. So let's start off with the Rani twins. Rani Bricks as well as Engines, both of them are holding high with gains of around 10 to around 12% in today's trading session. Add to the list a couple of other stocks that are moving on very, very large volume. So you have Max India that's up close to around 14%. Cupid, well, that one as well is up close to around 14%, while Orient Paper, that's another one that's up close to around 8% as we speak. On hopes of a big bus order for electric buses, well, you have both Electra Greentech as well as JBM Auto. They're up between 5.5% to around 10% and are on massive volumes out there. On the flip side, you have a few stocks that are seeing some selling and they have been underperforming all through the trading session. So Balu Forge is down close to around 10%. Sinline India, well, that's down close to around 5%. And you have India Shelter as well that had a good run, but that's given back some part of that good run that we saw in the last few trading sessions. The stock is down close to around 4.5%. Back to you.
Point, Nigel. Thanks a lot for that. So those are a bunch of stocks which are moving on either side. Currently, we have Chambal Fertilizers, which is at the low point as well. And, Zydus and Lupin are lower on the back of news. Glenmark too has slipped to the low point of trade. We take a short break and come back. On the other side, we get you more of the markets and a lot of individual stocks.
ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
We've been talking about the big setback for Lupin and Zydus as they've, lost Myrbetriq case in the US federal court. That explains why the stocks are lower. What are the details for which we have Vinny joining in? Vinny.
Hi, so afternoon. We have both these stocks that are in focus. Now, just to throw back to what was happening. Previously, US FDA had now cleared this Myrbetriq case that was going on against the innovator that is Astellas Pharma with Lupin, Zydus as well as Sandoz. Now, obviously, that clearance had come in, so they launched the product. Now, today what we understand is that the US federal court has given the order in favor of the main company, that is the innovator, and Lupin and Zydus have lost the case for this Myrbetriq drug. Now, Myrbetriq is an important drug, generic drug that comes in for Lupin and Zydus. Why is that so? Because the estimated sales of this, according to analysts, was around $35 million. This was quarterly sales. So, on a yearly basis, if you look at it, around $100 million that they would be making on this drug. This was for Zydus, while Lupin was estimated around $25 to $30 million per quarter. So, important drug update coming in on that front. And that is why today we are seeing a bit of a fall coming in, actually a sharp fall coming in the stock price as well of both these companies after this announcement has come in.
Thank you so much, Vinny, for joining us, giving us the details of what exactly is dragging both Lupin as well as Zydus lower. Well, to discuss more on this, Vishal Manchanda, pharma analyst at Systematic Groups, joins us now. Thank you so much for joining us, Vishal. Vishal, the first question, Mira background, was being looked at as a very significant opportunity for both Zydus as well as Lupin. How big of a setback is this? What are the kind of EPS cuts you will now have to take? And if you could also give us a sense of, what were the sales that the company had seen post the at-risk launch? What is it that they will have to give back to the innovator?
Right. So a very meaningful drug for both Lupin and Zydus. I think this was a larger drug for Zydus than it was for Lupin. I think probably 2 to 3x larger for Zydus than it was for Lupin. I think in terms of earnings impact, it should impact the FY26 earnings, while the impact on FY27 earnings will not be very meaningful, but there will be some impact because of lower cash on the balance sheet. So as you said, we should expect penalties that Zydus and Lupin might have to pay to the innovator. But before that, probably they'll appeal the court's decision and try to kind of put a case here at a higher court. In case they lose they lose even the higher court, probably I can think of a 1x penalty on whatever they have done in sales. So that's how I look at the situation here. FY27 estimates should not change too much, but we'll see an impact on FY27 a bit.
Okay, analysts said, it was close to 25 to 30 million dollars per quarter in terms of sales coming for both these companies. How much would you have to revise your earnings and estimates downwards because of this? And is this the final order that has come in, or are there any further legal recourses that the company can take?
There's a recourse. Probably the company can go for a higher court appeal here. So we'll wait and see what the company does. But if they don't, then probably we should hear on the penalties, whether they need to pay the penalties or not. Generally, it is 1x of sales is what we have seen in the past, the penalties.
In your scenario analysis, if it is 1x the penalty, then what could the EPS impact be?
So that will be a one-off impact. So I think in terms of the earnings contribution, I think there are two parts of the impact. One is the lost earnings, FY26, the lost earnings on account of this, and the second would be the impact on account of the penalties. So impact on account of the lost earnings for Zydus, it should be around 25-30% of the sales. 25-30% of the EPS, and for Lupin it should be around 10-12% of the EPS. While because of the one-off impact, it will be a higher number, say around 35% of earnings, and for Lupin it should be 15-20% of earnings because of the one-off penalty.
Thank you so much, Vishal, for joining us. No wonder then we can see quite a sharp correction on both of the stocks today. Mira background was seen as a significant opportunity. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Besant has already said that the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. You know, how many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst which is, I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because...
Gensol Engineering shares tank after the market regulator SEBI has passed an interim order against the firm and its promoters over alleged fund diversion and false disclosures as well. To discuss more on this, we are now joined by Sriram Subramaniam, who's the founder and MD of InGovern. We're also joined by Vaibhav Kakkar, who's the senior partner, Saraf and Partners. Thanks a lot, gentlemen, for joining in. You know, we read through the SEBI note and there have been some glaring misappropriation allegations out there as well. And beyond that as well, if you just look at the way the stock price has moved from over 1,100 rupees down to where it is right now, a near 80-85% decline from the top, there's been a serious amount of wealth destruction as well. Sriram, you know, I wanted your thoughts on what went wrong here, because one of the glaring mistakes that the SEBI points out is that they went to the plant and it appeared that there was no production that was taking place. In an era where there is so much, research that is undertaken by a lot of the research firms, etc., along with all the investment bankers as well, who would look at all of this, do you think this did not pass their due diligence? What exactly happened here?
It's a matter of timing. I would think from a perspective of investigation, etc. I don't think any analyst of such a small cap is going and visiting the plant, etc. Today, of course, the market cap has been pumped up by social media and influencers. And explicitly, this is a case of blatant fraud and forgery. And SEBI, in fact, doesn't touch upon this entire topic that you aver to, which is pumping and dumping the stock, where social media influencers are used and explicitly hired by the company to put out order book status, to put out manufacturing numbers which are out of the blue, to put out data and numbers and sort of influencers pumping up the stock and talking up the stock. And to the extent that the market cap is totally unsubstantiated, there are no numbers to back it, and eventually the promoter is selling the stock. And based on that, either the promoter is leveraging by pledging the stock or selling it themselves, which shows in the SEBI order that they have bought and sold the Gensol shares.
Right, completely take that point. Let's also bring Vaibhav into this particular discussion. Vaibhav, where does the blame lie? Number one, of course, you have seen that the promoters, it's now quite clear that there has been significant wrongdoings on that front. We've also seen multiple quarterly updates come in where there's also been auditors who've audited the financials. And it's quite surprising that there haven't been any clear red flags that have been raised. Does that also concern you? And are you also worried, or are you slightly surprised that it has taken SEBI so much time to go ahead and come out with a detailed report as far as the forensic audit is concerned?
First of all, good afternoon. Thank you for having me on the show. Well, you're absolutely right. Invariably, if you look at instances of the past as well of fraudulent transactions undertaken by promoters to benefit them of large listed companies, whether it is the case of CG Power, whether it was the case of United Spirits, whether it was the case of Satyam, or for that matter, Fortis Healthcare, invariably you would see that it is not just the promoters who have participated in that fraudulent transactions, there are a bunch of stakeholders as required by law that are meant to put systemic checks and balances, namely the auditor, the independent directors, the internal audit requirements, and various disclosures that they're required to make from time to time. It appears that in this particular case as well, a number of questionable circuitous transactions were undertaken. Also, basis the SEBI order, it appears that it was actually the credit rating agencies. So for once, kudos to them to have called it out very clearly. It is the credit rating agencies that brought it to the attention of the market when they felt that even some of the reports with regard to repayment of debt were falsified by the company. And so clearly it points to the fact that, and some of the other practices where manufacturing was not taking place, monies were moved to benefit the promoter to buy expensive real estate for their own benefit, money being circuitously used to purchase its own shares. Clear case of alleged fraudulent unfair trade practice and insider trading, as well as complete ill practices insofar as falsification of accounts, as well as financial statements is concerned. I think all of this systemically points out to the fact that obviously the promoters have not done what they were supposed to do. But besides that, the key managerial personnel, which is namely the chief financial officer, the auditors, all of their roles would need to be thoroughly assessed and investigated. And one hopes that by the time SEBI completes the forensic audit, there's greater clarity on where all and who all have been the players who have partaken in this sort of scheme, and then they're eventually brought to the book. But I do also want to make one very quick point, and maybe I think that could be a segue to another question that you may have, which is that what happens to the company? SEBI, in its exercise of powers under the SEBI Act, has issued certain directions which has barred them from being on the board of this company, dealing in securities of the company, as well as dealing in securities in the capital market. But what happens to the company? And I think effective revival plans, the independent directors would need to step up to revive the company, because there's clear bad faith right now, which is also punishing the investors and the public shareholders who may have stocks in the company.
Which exactly was, one of the questions that we had for InGovern. How do you protect shareholders from this, and what happens to the minority shareholders who have lost nearly 80-85% from the top?
SEBI has the powers, I would think, to supersede the board, whether it be the current independent directors or new set of directors who can come in and step in and take the company forward. After all, one would like to think that because we see the blue smart cars on the road, at least there is some physical assets. Two is the EPC business itself. There is some merit to the EPC business, hopefully. And so whatever it is, there is some operating business. There are some employees that has to be safeguarded and ring-fenced from all these. And obviously the lenders, which is the IRDA and PFC, are going to sort of have their claim to whatever extent they can recover, because they may have already sold some of the shares which are pledged, etc. And there is, I would think, more than 1,200 or 1,600 crores of debt on the corporate book itself. So to that extent, it's not a small number, given that the market cap is now less than 400 crores and headed southward.
Vaibhav, that's a very interesting point that Sriram has just put out. There are a few operational assets, as you can see. There are cars running on the road. Now, when it comes to retrieval of number one, you have the lenders. Number two, you have the equity shareholders, and in the pecking order, the equity shareholders actually are at the last. So, does an equity shareholder, number one, have any recourse to legal action in this particular case? Number two, what is it that the lenders can hope to retrieve? And number three, you've actually seen a case where there has been purchase of a property in the promoter's own name. So will those assets also be attached, and can there be some recovery on that front?
Very valid question. Let me answer it in this way. The law books have sufficient number of provisions that empower the shareholders to take legal action. In fact, to my mind, this is a fit case for a class action under the Indian company law. I happen to be championing the cause of a shareholder in a large listed company, which is Jindal Polyfilm, in initiating the first class action in India. I would imagine that similar such framework may come into play in times to come. Under the class action framework, the promoters and the directors of the company who are responsible and liable for fraudulent transactions can be made personally liable to compensate the company and its shareholders. So to my mind, apart from whatever punitive action that SEBI might take from a regulatory standpoint, shareholders, equity shareholders would also have the ability to initiate direct proceedings to be able to recover for the loss. Of course, it's easier said than done. The legal processes in tribunals and in courts can sometimes take a little longer than one would expect. But I do also want to make one quick point. See, the challenge would be that, promoters' holding has now come down to 35%. And almost entire part of their shareholding seems to be pledged with banks and financial institutions. Typically, with the SEBI order of the nature that it has been issued yesterday, one would imagine that lenders will now very quickly call out events of default under their financing documents. And the promoters' holding in no time can actually come down to a very suboptimal percentage, close to 1%. Something similar had happened with Singh brothers when they lost control of Fortis Healthcare as well. If you would remember, when the banks sold the shares, the pledged shares in the market, and promoters' holding went down to less than 1%. In a scenario like that, as Mr. Subramaniam was mentioning, I think it's absolutely critical that SEBI collaborates with the government to come up with some sort of a mechanism to revive the company, getting in institutional shareholders. Because if you will let this company go down the IBC path, by the time there'll be recovery, you can actually have a Jet Airways where there's no.
We take that point. We take that point entirely. Thank you so much, gentlemen, for joining in and giving us your insights out here. It's the start of a conversation. Obviously, the ultimate goal is improvement of shareholders and preventing them from any such fraudulent activities that may take place in the near future as well. Sriram as well as Vaibhav, thank you so much for joining in on for this conversation on our channel. With that, we have run out of time on this edition of Midcap Radar. 2 indices in the green, 2 indices in the red. Atop your screen, Vivek and I take your leave.
Great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain in a sense. Even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown, ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Hello, good afternoon. You've tuned into CNBC TV18. You're watching Your Stocks coming live from the CNBC TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in as always. A day where we have seen the markets managing to hold on to green as of now and picked up some bit of a pace in the last half an hour, at least for the Nifty, up almost 2/10 to 0.3% as of now in today's trading session. 23,400 is what the Nifty is managing to hold on to. So keep an eye out on that one. See the spike up that we've seen just in the last few minutes in the trading session. We've seen a run up coming in for the stocks. Now let's look at the Nifty contributors. Since we have seen that spike up coming in, we have the banking side that has been doing well. So Axis Bank, HDFC Bank, SBI among the top contributors that are coming in for the Nifty 50. Other than that, we also have Bharti Airtel, that is among the names, and IndusInd Bank also is managing to support the up move that we're seeing coming in for the markets. Let's look at the broader end of the market. That's managing to hold on to gains as well. 0.5% of gain that we're seeing coming in for the Nifty mid cap. Small cap is also managing to hold on to gains of more than 1%. There is some run up that we're seeing coming in the last few minutes. So we'll keep an eye out on whether this is going to be sustaining and continuing in the next couple of hours of trading session as well. Sectors that are not doing well today, just keep an eye out on IT, auto that are among the top drag coming in. Pharma, we have some bit of a news that came in for Lupin and Zydus as well. So some bit of a pressure that we're seeing specifically on those two stocks as well. But this is a show where we solve all the stock related queries, and to solve all those doubts today, we have our experts joining in with us. Asta Jain, research analyst at Hem Securities, as well as Somil Mehta, head of alternate research and capital market strategy at Mirai Asset Share Khan, to talk to us and solve all your stock related doubts. Somil, Asta, good afternoon, and thank you so much as always for joining in with us. Somil, just a quick check in terms of the market, because we've seen that sudden spike up that we've seen coming in for the Nifty specifically. So what are the levels that we should keep an eye out on, and what are we watching out for now?
See, bias is definitely positive. We've seen great rally in last couple of weeks, and the markets have bounced back from 21,800. Now, the next target in the short to medium term outlook would be 23,600, and after that it would be 23,800. 23,800 is a very crucial hurdle. If we close above that, then the medium term outlook targets would be way above. But at this point of time, the crucial hurdle is 23,800. But definitely the short-term bias, medium-term bias remains positive. Bank Nifty looks better from here. Should outperform. The PSU banks are looking great. The next target for Bank Nifty would be 53,500, which is close to the previous swing high. So I'll be expecting Bank Nifty to outperform, and PSU banks would be my preferred picks.
Okay, thank you so much for that, Somil. PSU banks could be the preferred picks. But on that note, let's get started with the stock-related queries. The first query today we have is coming in from Prem Chauhan, who's writing to us from Kolkata. 25 shares of Tata Motors is what he's holding. Price is 500 rupees per share. Making some bit of a profit on this one, but wants to know whether he should continue to hold or look to sell this one. Asta, good afternoon, and what's your view coming in on Tata Motors, right? We've seen so much uncertainty coming in on the tariff front as well, and Tata Motors has that significant exposure at the JLR side, which people are expecting maybe could see that impact because of these issues. What is your view on Tata Motors, and what should the viewer do? Hold or sell and book that little bit of profit that they're making there?
Hi, good afternoon to both of you. I think one can hold this counter with the initial price target, which can be set at around 680 to 700 odd levels. Now, why I am saying holding for this counter? Because first of all, yes, definitely this company has exposure around 28 to 30% of their sales they derive from US. So definitely there is a small fear on that part. But now the situation is emerging. I think it is going on the positive side for the Tata Motors, as we have seen. And at the same time, what we are seeing is that their valuations are really at a very, very low level. If I talk about especially JLR, and in fact, when their conference call was there after the results, they have given the EBIT guidance of around 10%. So if company is able to maintain that guidance, then definitely it will give a good jump or a boost to their financials. So I would just like to wait for their results and the management commentary. Meanwhile, looking after the current market scenario, I think it's better to hold if one can take a risk. However, the cost price is only 500. So I think if one can take the risk, then definitely this is a hold counter with a price target of 680 to 700 at the initial levels.
Okay, keep an eye on this. Levels hold is the word coming in from Asta. Somal, your view coming in for Tata Motors, given that obviously we've seen that correction specifically coming in the last 6 months also for Tata Motors. Last 1 year also, the stock has not been performing that much, right? 37% down. Before any issues also, we're seeing that decline coming in for Tata Motors. What are we watching out for now in terms of levels here?
The medium-term outlook is definitely negative for Tata Motors. It has been struggling to go above 20 and 40 daily moving average for a very long time. That is a very weak sign for the stock, negative sign for the stock. Even at this point of time, when I see today it is 1% down and it has bounced back a little bit from the lows. Now, I think the last leg on the downside is still left. And how deep that would be, I'm not very sure. But I think the previous lows, which is 540 levels, I think that lows would be retested again. So this last leg for Tata Motors probably would be a little sharp. I would buy only if this stock goes above or closes above 20 and 40 daily moving average. At this point of time, Tata Motors 20 and 40 daily moving average is close to 660 levels. If it closes above that, that's the level where I'll go and buy.
Okay, that's the level that we should watch out for as well. Keep an eye out on that. Let's move on and talk about the next stock in focus that we'll highlight right now is Reliance Power. Nehal Agarwal is writing to us from Nagpur. She's holding 20,000 shares of Reliance Power. Price is 30 rupees per share. Wants to know the prospect of the company in the next 2 to 5 years and whether it is advisable to hold her investments in this stock or maybe look to switch somewhere else. Asta, your view on Reliance Power?
I think there is no need to switch to any other counter if the horizon is 2 to 3 years. However, my initial targets are at around 46 to 48 odd levels. Talking about this counter, they have got a very strong portfolio of around 5,300, operating portfolio of around 5,300 megawatt. And what we are seeing now with the focus or transition towards the renewable energy, definitely this company is well poised to show some more strong financial performance going ahead from here. So my suggestion here is to continue holding this counter with an initial price target which can be set at around 46 to 48 odd levels. But from the 2 to 3 year time horizon, I think these targets are subject to revise towards upside.
Okay, and your view on Reliance Power as well, Somal?
This stock has been making a huge triangle pattern on the daily charts, on the weekly charts, trading about 200 daily moving average, which is a good sign for the stock. This consolidation is expected to break on the upside because the momentum indicators on the higher degree time frame are on the buy side. So I think holding on to this stock for a long-term investor is a good sign, but the lower end of this triangle is 31 levels. So if it goes below 31, that will be the time when it should exit. But at this point of time, the momentum is positive. The short-term and medium-term outlook looks positive, and I think I'll be aiming for at least 56 levels, above 56 levels.
Okay, above 56 levels is what you're watching out for. So keep an eye out on Reliance Power over there and those levels that our experts have mentioned. Let's move on to the next query for today. We have Venkat who's writing to us from Chennai. 500 shares of South Indian Bank is what they are holding. Price is 23 rupees per share. So stock is trading around their buy price right now. Wants to know the expected target if he holds for 1 year and 3 years, and also if there's any specific reason for the stock not seeing an up move on the fundamental front as well. Firstly, I'll take it to you, Asta, on the fundamentals.
Yes, we have seen as compared to the other banks, the bank was not able to perform strongly, maybe because financial performance was not very supported. But what I'm taking right now is cue from their business update, which seems to be okay because they have shown 10% rise in their loans and advances, and in fact, their deposits have also shown good growth. Although what I have seen that in the CASA ratio there was a mild downturn, but overall the performance which they have shown in their business update, I think that is seems to be okay. So for that reason, I think one can remain invested in this counter with the initial price target of 26 to 27. However, the business updates of other counters like private sector bank, HDFC was very strong. So if I compare it to their other peers, maybe in the public sector bank also, some other banks like BOB is looking very strong. In fact, Bank of India is looking very strong to us. But here also our stances remain invested since we can see this stock moving till the levels of 26 to 28.
Okay, keep an eye out on those levels over there. Somil, your view coming in on the technicals, the viewer specifically asked for a target for 1 year and 3 year. So what are you watching out for there?
As I said, banking looks, the smaller banks looks great. And from here, if I see South Indian Bank, it has taken multiple supports around 22 levels. So 22 would be my stop loss. And I think from here, the consolidation is between 22 and 28. If this consolidation breaks above 28 levels, I think the next level would be new all-time highs. But at this point of time, short-term targets would be around 28, 29 levels. And the stop loss would be around 23 or 23.50 levels.
Okay, keep an eye out on those levels over there and the stop loss as well for South Indian Bank. Let's move on to the next query, and this is coming in from Meenal Chauhan, who's writing to us from Mumbai. She's holding 60 shares of Aarti Drugs. This is at a price of 784 rupees per share. Wants to know whether to sell or stay invested in this one. Your view coming in on Aarti Drugs. Asta, what are we watching out for here on the fundamentals?
If I look after the fundamentals, the results which they have declared were not right on the expectation. They were below expectations. But now this company is making capex towards capacity expansion, etc. So that is the only silver lining which I'm right now witnessing in this counter, and that's why I suggest to hold this counter, because exiting at these levels may fetch a strong loss. So it's better to remain invested in this counter, try to exit at the higher levels, maybe at around 400, 450 or so. So right now one can remain invested in this counter.
Can remain invested in Aarti Drugs. And your view coming in on this one, Somil, because the viewer is making a very sharp loss, right? 784 is what they've purchased it at. So what should they do now? Book out of losses? What is the option that they have?
At this point of time, I think this stock has taken support at 315 multiple times, 3 times to be very specific. And it has started bouncing back now, closing about 20 daily moving average. I think in the very short term, it is looking all right. And it has broken out of an ending diagonal pattern as well in the very short term. I think I would hold on to this stock for a target of around 430 in the very short term. That is the time probably would exit this stock, because in the medium term outlook, it is trending down, lower tops, lower bottom on in the weekly charts, on the monthly charts. The momentum indicator on the higher time frames are on the sell side. So I think 430 is where I would exit this stock. But at this point of time, in the short term, looking good.
Okay, the short term it's looking good, and keep an eye out on that exit level also that is mentioned by Somil. But on that note, we're going to slip into a very short break. Viewers, don't go anywhere, because after the break, we'll be taking more of your stock related queries. So stay tuned in.
Turks at 21. Only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी।
Welcome back to your stocks on CNBC TV18. Now let's move on to the next query for today. We have Sami Reddy, who's writing to us from Andhra Pradesh. He's holding 25 shares of M&M. Price is 2,675 rupees per share. Wants to know the prospect of his investments here. M&M Astha, is that more of an interesting bet for you versus what we spoke about with Tata Motors previously? What should they do with M&M, or is there anything else that you would be looking at in the auto pack?
So M&M is really looking good to us in the auto pack, and yes, as compared to Tata Motors, this stock has a better chance to move upwards. So yes, we are positive on this counter because looking after fundamentals also, fundamental seems to be very, very strong. Their new product launches are really helping them to show one of the strongest performance among its peer. So we are positive on this counter, and yes, one can make a buy on the lower levels as well. However, initial price target can be set at around 2850 to 2900 dollars.
Okay, keep an eye on those levels over there for M&M. Your view coming in on this one, Somil. M&M, Tata Motors, any other four-wheeler? What should the investor do right now, though?
Overall, if you see, the auto sector is not looking that great. Tata Motors has been struggling to go about 20-40 daily moving average. Even M&M now in the last couple of months, it's struggling to go above the averages. Even 200 daily moving average has been taking resistance at 200 daily moving average. I would say that it will still keep making lower tops, low bottom on the weekly charts, on the monthly charts, on the higher degree. And M&M, I think the next level to watch out on the downside would be the previous swing lows around 2430 levels. And that's where my targets would be in the very short term. I would be buying the stock only if it closes about 2760, which is 200 daily moving average. And that's where I will go long on the stock. But at this point of time, in the short term, in the medium term outlook, both looks a little negative to me. And I'll be exiting this stock or going short.
Exiting the stock or going short in the short to medium term, at least that's the outlook, and Somil has mentioned those levels over there. So yes, keep an eye on those levels before you take any trade or make any decision. Let's move on to the next query for today. We have Rajesh Sharma, who's writing to us from Noida. 50 shares of LIC is what he's holding. Price is 600 rupees per share. Wants to know the long-term story. He has a time period of 3 years. Horizon time period is what he's willing to hold to. Astha, your view coming in for LIC, what are we watching out for here? Continue, and should the viewer hold or sell and book out the profits?
So if one can take the risk, I think it's time to hold this counter with a price target of 860. And why I'm saying this, because although the investor is earning good profits on this investment. Now talking about this counter, first of all, their VNB growth of 9% seems to be very good, which they have posted in the results gone by. Apart from that, now we are liking that company's strategy is pushing its product mix towards non-participating. So that seems to be very strong. In fact, now they are expanding their agency distribution base. So I think looking after all these factors, I think this company is definitely going to prove something very strong on the financial front in the coming quarters. So if one can take the risk, because right now markets have certain kind of volatility, and here the investor is already earning profit. But if one can wait patiently, then definitely remain invested in this counter with the initial price target, which can be set at around 850 to 880 odd levels.
Okay. Surely an interesting one coming in on the fundamentals. Your view on the technical, Somil, similar to what Asta is mentioning then. Should the viewer continue to hold this?
Definitely, I agree to Asta. I think it's higher tops, higher bottom formation of higher tops, higher bottom on the daily charts. Very recently, it has closed about 20 and 40 daily moving average, which is great. On the daily time frame, the momentum indicator has given a buy signal. So my targets would be similar to Asta. That will be around 870, 860 levels, where the 200 daily exponential moving average is. So that will be my target, but the stop loss should be very strict, because on the weekly charts we've seen a sharp correction as well. So stop loss should be very strict, and that would be 765.
Okay, keep an eye out on those levels over there for LIC. Let's move on to the next query for today. We have this query coming in from Neetu Shukla, who's writing to us from Bihar. She's holding 60 shares of IDFC First Bank. Price is 60 rupees per share. For the long term, does it make sense to stay invested in this one, is her query. Your view on this, Asta?
I think the kind of business update this bank has given for Q4, I think that makes one can remain invested. That makes a case for remain invested in this counter, at least for the price target of 66 to 68 on the higher side. Although my price targets are not very high, because I really need to see how they turn out to be in their Q4 numbers. But yes, with a very strong loan and advances growth of more than 20%, as well as deposit growth of more than 20%, I think on just the basis of business updates, one can remain invested in this counter for the price target of 66 to 68 at the very initial levels.
Okay, that is something to keep an eye out on for IDFC First Bank. But that was the last query for today. So thank you so much, Asta, as well as Somil, for joining in with us on the show as always and helping our viewers solve all the stock-related queries. But viewers, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Remember, you can always email us your queries and we will address them with our experts. But up next, we have Closing Bell to take you through the last hour of trade. So don't go anywhere.
सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hang Seng is down almost 1%. We've seen Taiwan index that is down 0.7%.
Next upside level, if you want to really take a look at where the market can go, is 23,475.
Sources indicating at least 3 senior level exits expected in the coming months.
15 points lower is what the Nifty is indicating. The Sensex is down 30, so this is neither here nor there. It's kind of flattish in the flattish zone.
I think Indian investors would have to wait. They have to brace for another leg down during this earnings season.
I don't see any reason for the rumors about 20% safeguard duty.
So we're trading above $3,280 an ounce at this point in time, which is an all-time high. And with those kind of gains, we are up by 25% in this year.
All these 3-4 brands that I've been talking about today can easily aim for 1,000 crore turnover in the near future.
The Nifty at 11 o'clock has dipped below the 23,300 mark, 40 points lower.
Market regulator SEBI has said in this order is that there will be a forensic audit, which will be done in the books of Gensol Engineering.
Nifty, while it's meandering around the 23,300 mark, it's the mid caps which have sharply come off the highs.
Well, last hour coming up, and while the 60 minutes is coming up, what has happened in the last 30 minutes is also equally important, because the market was going nowhere, but it's taken off like a rocket at about 150. The Nifty, the Bank Nifty, and of course the broader indices will all come up in just a bit. We're coming to you from the CNBC-TV18 Motilal Oswal studios. This is Closing Bell. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. Afternoon.
Hi, afternoon. At just 1:30, Mangalam was saying markets are meandering around the 23,300 and now we're above 23,400. And as Prashant said, a rocket in the last 30 minutes. And this is in the face of subdued global cues. Asian markets were in the red, and Europe, at least, the early rates are down in the red.
Well, that's right. Just looking at the Nifty Bank, the way it's moved, and we know that the FIs have the highest amount of their holdings in the banking names itself, banking and financial space. It'll be interesting to see whether or not there's a follow-through in terms of the buying that they saw yesterday, because the Nifty Bank is the one that's leading us higher, and HDFC Bank, keep an eye out on that one. All of a sudden, the Nifty is still close around 11% away from its 52-week high. HDFC Bank is at its 52-week high. So it came within a couple of rupees today of hitting the 52-week high. So just going by the price action on the Nifty Bank, let's see whether or not the FIs are buyers yet again. We'll have to keep an eye out from that. And in fact, we'll have Nimesh who will be joining in as well. He could give us a sneak peek.
Absolutely. And, the other one is IndusInd Bank. It's almost like a repeat of yesterday. Because it's up 7%, ended up about 7% yesterday, and a very quick 15% coming off the lows this week so far. So that is the other one. And Axis, which is also due to report numbers, over the next few days, that has moved up to the high point as well, about 4.5%. So this is led largely by what's happening as far as the Nifty Bank is concerned. The Bank Nifty, by the way, taken out all the retracement levels, etc., from the highs in late September last year. Actually, the Bank Nifty high was made in July of last year to the low that we saw in January of this year. It's taken off the 61.8% retracement, etc., and now it's not very far away from the highs that we saw in November 2024, and of course the all-time high, which was made in September of last year. So, that's the Bank Nifty for you. Did not fall as much as what the Nifty did. And of course, it's coming back double time in a real fast way. Let's just look at the market breadth for a quick bit before we go any further. It's very positive. Almost 3:1 in favor of advances is what you have. So very stock specific market and lots of activity and action that we will cover here. Reema.
Hi, Wipro, by the way, has moved out 1% ahead of its numbers, which should be out closer to 4 o'clock. The press conference is 4:45, and Wipro is in the green at a time when names like Infosys are down in the red. Infy is down close to about 1%. PSU banks are outperforming even the private sector banks. So the Nifty PSU banking index is a gain of 2.5%.
Frontline large SBI is higher in trade, but even a Bank of India, Indian Bank are up and about. Other than that, in terms of individual stocks, you've got for today in the frontline space, you've got Tata Motors, but even some of the other auto names ancillaries after yesterday's big move are just retracing a tad bit. And then you've got the casualty of the day, Gensol, that's plunged.
Well, that's right, Rima. Well, let's find out what do you do from here, though. It's been a good trading session. Mitesh earlier today was talking about buy the dips. And the last couple of trading sessions as well, he's been maintaining his positive bias, which has worked out. Let's get him back on the show. Hi, Mitesh. Good afternoon. Good to see you when the call's working well. Ride it.
Good afternoon, Raju. So I think, very good move happening on the index and led by Bank Nifty. I've been maintaining that while the overall session is positive, it is the financial which could do slightly better than the Nifty. And I think that's playing out. But on the Nifty, I think getting past and closing about 23,400 would be important. And that could, suggest that we might head towards levels of 23,600, possibly 23,750, 800 as well. So maintain that positive stance and keep looking for buying opportunities, declines on stocks as well as indices. Currently, I have a buy on Paytm with a stop at about 850 for targets of around 900 to begin with. And the second stock which I like is Punjab National Bank. Buy here with a stop at about 96.5 for targets of around 103.
Okay, Swaraj Engines bottom line looks good. It's up nearly 29% and the stock has surged 8.5%. That's Swaraj Engines for you. Profits have come in at 45 crore rupees. Top line too has moved up 30%
against the innovator, that is Astellas Pharma, and this is for the drug that is called Myrabegron, that is a generic version of Myrbetriq. Now this case was in the US federal court. Now last year what we had seen that the US FDA had given the clearance to Lupin, Zydus and other companies who had filed the case against the innovator, saying that yes, you all can launch the product. So this product was launched by this company at risk by Lupin as well as Zydus. Now this court case is not in favor of the company, so they will have to withdraw back the launch that they've made. And so far, since Q1 FY25, they've made sales of around $100 million. Is what analysts are highlighting for this drug. So important drug coming in for the company, an important one in terms of updates going forward in terms of sales that they could have as well. And that is why we're seeing both these stocks are falling in trade. Systematics highlighted that in FY26, the earnings will be impacted both for Zydus as well as Lupin. We could see an impact of around 25 to 30% EPS impact for Zydus and around a 10 to 12% EPS impact for Lupin as well. Elara is also highlighting that both these companies had started selling the product in Q1 FY25 and $150 to $300 million sales is what these companies have done in FY25 itself. Now, what could be the future of this? That their companies could find a patent litigation in the court as well, a court of appeals. And if it goes in favor of them, then it's well and good. But if it doesn't go in favor of them, then there would be a penalty that they would have to pay. Now, what would be the penalty? It would be the amount of profit that they have generated on this drug in FY25. So that will be important to watch out for where this is going to be headed in terms of the litigation that goes forward. But as of now, they will have to withdraw it and they will have to stop the sales of these products as well.
Thank you very much for that. Prakash Diwan is now with us on the show. Prakash, that's quite a bitter pill to swallow for both Lupin and Zydus. For one, they will lose the quarterly sales of 35 million that they were enjoying. And then there is that risk of penalty as well. What is the call now on Lupin and Zydus, just purely based on this development and then overall in the larger scheme of things?
No, so certainly, Rima, it's nothing that's encouraging in any which way. The worry is not just penalties. The worry is that these kind of setbacks make it extremely difficult for them to be able to even bounce back in case there's some tariff imposition in that sector. We've been hearing about pharma also getting covered. The US is very keen on getting some of these facilities onshore there. And if that were to happen, this becomes a body blow of sorts for some of these companies. Out of the two, all I can say is that Lupin is the one that's resurrected itself a bit earlier than the others in the pack, including the bigger ones like Sun Pharma and all. So it does stand a very good advantage to kind of continue growing organically in the generics market and especially the ROW markets as well, if not the US necessarily. So from that perspective, buy on dips is probably something which you could recommend. But I would still wait for the pharma tariff to be out of the way. That's an overhang. That's very That's extremely unnerving because you really don't know to the extent of damage that it could inflict. So, yeah, it's definitely bad. The call is you'll have to wait, bear the pain for some time, and then if you were to buy, Lupin probably is one of the best bets from the larger pharma pack.
Okay, all right. Thanks a lot for that, Prakash. But we want to ask you about the city gas distribution companies as well. They're trading with losses. Post that APM gas allocation was cut down by around 18% effective today. So Sudarshan joins us to tell us the impact of that particular cut. Sud?
So 2 weeks and 2 negative news flows related to city gas companies. On April 1st, we saw that APM gas price was increased to $6.75 per MMBTU from $6.50 per MMBTU. While that was on expected lines and it was announced as per the recommendations made by Kirit Parikh panel in 2023. But now this APM gas allocation cut has come as a surprise for city gas companies. And in the last 1 year, APM gas allocation has been reduced by almost 50%. In the beginning of 2024, the gas allocation used to be in the range of 70 to 80%. Now, after this cut of 18 to 20%, the gas allocation for city gas companies is reduced to 40%. So MGL says this might have an impact on profitability. Same comment is made by Adani Total and IGL as well. CLSA believes that these companies, especially IGL and MGL, might have to take a price increase that might be less than ₹1 to pass on this cut in APM gas price. While Jefferies believe that it won't be that easy for city gas companies to pass on the APM gas cut. Also, it builds in flat EPS estimates over FY 25-27. But the question is the cut done, or there might be a further APM gas allocation cut we might see in the future?
Well, that's right, sir, and that's weighing on the stocks as well. Will there be further cuts in the time to come? Prakash, what do you think? To be fair, these stocks actually have seen a bit of a recovery from the low point of the day. Mahanagar Gas is still under pressure, but IGL is almost at the green. It's down only around 1%. What's your view?
Nigel, of course, this is definitely a setback. 18-20% coming at subsidized rates or at much lower rates is definitely an advantage that they lose out on. But then, I think the reaction has been a bit strong because nobody saw it coming. We were talking about pricing being, discussed as part of the Kirit Parikh committee. But this, the allocation itself was not something which was on the cards. But I can also tell you the relief is that globally, LNG prices are likely to be much lower. It's just the logistics cost that's probably not yet kept itself in tune with the glut that you are anticipating in LNG. If that were to happen, this might not be so much of a setback. It will probably get diluted because your market prices itself will be low. You look at how this, and this is one of the reasons because the regulatory overhang that these companies really don't trade at very rich multiples. Even on a trailing basis, I think MGL would probably be under 12 and IGL could probably be close to 14. So that's one of the reasons why such large companies with high replacement costs also don't get great valuation because of this. What I like in that space, and just to give you a different perspective, is companies that have gas allocation already tied up and fully stitched up. And then there's a company which has recently come into the listed space called IRM. IRM Energy is something which is fairly new. Got listed on the RARA days of great IPO listings and went all the way to 600 plus, I remember. But then, of course, it's now realistically at lower valuations and reasonable valuations, and it has some potential to kind of grow from here as well.
Prakash, what about IndusInd Bank? In 2 days, stock has rallied close to about 12%. The street is looking forward for some sort of a cleanup. What we've learned from sources is that some senior level exits will take place. Succession planning is anyway, is on track, perhaps will happen. Your thoughts on IndusInd Bank after this kind of an up move in 2 days?
So, Rima, this is reminding me of, as kids, we used to have some of the kids in the class scoring very poor marks, almost failing or probably failing. And then the parents would come for a recheck on the exam paper. And somehow, there would be some incremental 2 or 3 marks getting added, but they would still fail. So, the derivative damage, the damage on account of the derivative portfolio has been significant. But now that the audit has found that it's probably less than what the management anticipated or in line with what the management anticipated, the market's probably seeing it as a little bit of a relief. But let me tell you, whatever is happening is going to be extremely difficult for the bank to come back and get its mojo back in terms of being competitive in an environment where everybody is seeking credit growth, which is not coming easy. And now the cost of funds is going to become much relatively easier for even the bigger ones like Kotak. Kotak has one of the highest cost of deposits or cost of funds, about 30 basis points higher than probably the other private sector banks. But if they were to be so competitive, I doubt if IndusInd could see growth. So they'll anemic growth, a little bit of repair that might take time. So I don't know whether you should get excited. Of course, there's recovery, the short covering, whatever you call it. But fundamentally, I don't think it's out of the woods yet. So I would stay away for some more time.
All right, Prakash, I wanted to ask you about these wires and cables players. Earlier this morning, one of the stocks that were looking interesting on the charts was Havells, because yesterday there was big delivery-based buying. There were a couple of sell-side notes that were questioning that investment into that solar part of the business for around 600 crores, which was 25% of the cash in books. And they were questioning the rationale. So yesterday we did see some shots get into the system, but then they gradually covered up. And in fact, if you compare yesterday's low to today, the stock is 6-7% higher from that price itself. It seems the street is sensing better set of numbers. You like anything? Remember these stocks, when there were new players coming in there, they got hit hard. But now they're bouncing back, Havells, Polycab as well.
No, you're absolutely right. It's a great observation because, the incumbents were likely to kind of impact some sort of a market share shift. While we very clearly know how it's happened on the paint industry, which is much more smaller, whereas organically cables and wires is set to grow faster and have a much wider footprint, given that it's unorganized to organized as a team that's working. And if players in the organized sector kind of add to that heft, there's no reason why the sector won't grow and everybody won't grow. The only thing is valuations were stretched. There was a trigger to rationalize that. But, the best way to play this, Nigel, is to look at some of the players that supply a lot of these specialty polymers to cables and wires. The overall market is growing. Newer players are setting up capacity. They'll become much more quality conscious and fine-tuning their delivery, the product delivery. And that's where specialty polymers will start looking at. So one of the companies that does this specialty polymer space, and globally it's a trend that's happening. They're making a comeback within that pocket. It's a very narrow field, but look at Supreme Industries, for instance. It's kind of off from its highs. It's closer to its 52-week lows. Just started kind of limping back into reckoning. My sense is you'd rather play with something which supplies a lot of the raw material to these companies than to straight away go into that competitive environment of cables and wires.
By the way, I think that China headline is what has sparked this move, right?
Yeah.
There was that headline on Bloomberg which said that, and this was all source-based because I was looking, US futures also perked up around that 150, 155 mark. Essentially, China saying that they're open to talks if some of its conditions are met. And one of the conditions is interesting, show respect. That's but it's true. Show respect, appoint a point person, rein in your sort of cabinet members from making statements, be more consistent with China. And of course, they've thrown in Taiwan as well. Taiwan has got to be on the table for these trade talks. So it looks like, it's still, I think market got excited because it shows willingness to engage on China's part. But we don't have official confirmation. One, this is, as I said, is a Bloomberg story, quoting sources. But it'll be interesting how this goes.
Interesting comments coming in from the Chinese representative. But I also want to hear what Trump has to do because he's tried everything, right? He's tried to cut down on the taxes, on the expenditure dodge. Then, in fact, he's tried to push through these tariffs. And he's got a problem because he has to, roll forward some part of that debt as well. So he's throwing everything at it. And actually, his plan was going well, till the yields spiked up. So,
But analysts are also pointing out that there will be pressure now from the industry, the tech industry. For instance, Nvidia share prices are down because, the restrictions will hurt their exports into China. China has now disallowed, imports from Boeing and other aircraft. So, even these industries will put pressure on White House that guys go ahead and now, strike some sort of a resolution, some sort of a deal, because it's hurting both sides of the equation.
Indeed.
It's a fluid situation, but I just wanted to sort of put on the table the reason why I think we got a bit of a pop US equity futures jumped about 1.25% on those headlines. And I think we are seeing a bit of a move across the board in other markets as well. So that's what we have going. Prakash, any thoughts on anything out of the PSU space you like? I was, banks or otherwise.
No, I mean, banks there's enough that's been discussed, but I would still look at some of these smaller private sector banks, which are far more agile to take advantage of any kind of an arbitrage they get when interest rates start softening and the lending rates are continuing to kind of be slightly firm. So, the likes of CSB, and, if your risk, this thing allows you profile, then probably a South Indian bank. But, banks aside, I think the PSU pack is something which will see a lot of money getting allocated, Prashant. And for the simple reason why I say this is that it remains largely resilient to tariffs or whatever uncertainty related to tariffs that we are witnessing. And secondly, the government allocation on capex is starting from April. It's just started from April, and that is likely to kind of start showing strength. Look at some of these power plays like NTPC and all, and we are going to peak summer, power usage, and the power demand will kind of again spark a debate on whether we have adequate power supply. So whether renewables is contributing or not, it will continue to contribute. I'm not saying that's going to go away, but some of these companies, some of these facilities, utilities will start kind of getting valued much more. And hard assets is what you need to be into, and utilities is probably one of the best. I would look at some of these companies in softer times.
Okay, we'll slip into a break. Prakash, thank you very much for joining in. The gains are getting bigger now for the, at least for the banking names. IndusInd Bank, 7.5%. Axis Bank has a gain of close to about 4.5%. SBI is advanced over 1%. So things are looking up, at least for the banking pack, and that's pushing up the overall indices. Get into a break. On the other side, we'll touch base with Varun Goyal from Mirae Asset Investment Managers on the other side.
Investing.
Welcome back. Gold prices continue to climb and now touching close to $3,300 per ounce, setting a new record. Record after record every single day, Manisha, when it comes to gold.
Oh, well, yes, and the gold prices should come in on your screens, Rima, because it's not 3,300 anymore. It's above 3,300. And just before I checked, before I came here, it was trading at 3,315. So there you have it. It's an all-time high yet again. Every time we've talked about gold today, it's hit a new all-time high. So 3,315 to this point is an all-time high that we've seen in gold. 2.5% of gain on your screens. And that price of gold on MCX at 95,000 rupees per 10 grams, less than 5,000 rupees from a lakh rupees at 10 grams is what the markets are looking at now. Actually, when you step out to buy gold today, it almost is at a lakh, because to this price, you have to add 3% GST. You also have to add even minimal making charges, and that's already taken the prices to a lakh rupees. You know, this run up to 3,300, the last $1,000 an ounce of a run up that the gold prices has seen has been the fastest, has been done in a shortest gap of time. We've seen prices gain up by almost 26% now in this year, and this compares to 28% of gains in the previous year as well. So that is what the month of April has done in last many years. With that chart, I show you that. And as you can see, it has been a steady and subtle growth in all of these years there. But the last 1 year, the last 12 months, and that 42% of gains that you see in the last 1 year clearly has been the fastest run that gold has done in a lot of time there. Well, various factors supportive, of course, are the tariff concerns, tariff leading to recession concerns, and then the markets also are looking at decline in dollar index. The geopolitical tensions have just about continued. And also when you look at the chart, from 2000 to 2025, in these 25 years, it has been only 2 years that gold has given you a stronger negative return. Apart from that, the other 23 years have been on the positive side. So that pattern also tells you that investing in gold is on a stronger side. The ETF buying has been strong. The Global Central Bank has been buyers for last 3 years now, and 1,000 tons of gold every year being bought by global central banks. So everywhere that you look, we're looking at very positive cues coming into the market. Uncharted territory, not too many people want to talk about where the gold prices can go. People are talking about correction from here as well, but the momentum is still on the higher side. And with 3,300 already done, the next targets on the street now are 3,500, 3,700. Extreme cases can take the gold prices to $4,000 an ounce as well, are the conversations that we're hearing.
I heard, Manisha, you put out that 8,000 target 3 years out, right? I remember that.
Well, yes, you know, the next 2 or 3 years.
That's a 40% CAGR.
It is. It's by 2028 and 2029. I mean, even if we don't grow on with these kind of, speed, even then, I mean, that's a possibility.
I mean, Manisha, thank you very much for that. Varun Goyal, Senior Fund Manager, Equity at Mirae Asset Investment Managers, is with us. Varun, it's tough competition. I mean, you go to a client and ask him for money, you say, well, it's a hard pitch to beat gold.
Good afternoon, Prashant. No doubt gold has been a phenomenal asset class for Indians, especially because of the benefit of rupee, and has been phenomenal returns in the last 10, 20 years. No doubt about it.
But are you seeing... Did you, as an analyst, right? Purely as an analyst, what is your sense? It's not exactly your area of specialization, but I mean, I'm sure you got an eye on it, right? Manisha described some of the areas of demand. Central banks are a big area. Of course, I mean, there's always retail demand both in India and China. But what's your sense here?
Prashant, as you rightly mentioned, I'm no expert on gold, so I'm just an admirer of gold prices like you are. But equity, maybe that is based on what has happened in the last few months. Maybe we are looking at a low double-digit kind of earnings growth this year, and hopefully, that should lead to a much better equity outlet sentiment as compared to what we have at this point in time.
Okay, let's just talk about one area which, of course, is leading, which is banks today, Varun. I think we've got deposit cuts from SBI, HDFC, and now ICICI. So I guess takes some of the, create some buffer at least, because you got to cut lending rates as well. What is your sense? Is interest going to really come back into the space, and any ideas here?
No, I think broadly what we're seeing is a very significant easing of both liquidity and interest rates by RBI. we've already seen 50 basis points of repo cut already. Our sense is there'll be at least 2 more during the course of this calendar year. So I think calendar year 25 will see almost 100 basis points of repo rate cuts, and already RBI has done significant easing of liquidity, various non-rate measures, stricter controls that imposed in the last couple of years, they have been kind of taken back. So I think we are looking at a banking system which should see improvement in credit growth for this year. I think deposit growth, it seems to be finally catching up on the credit side. So I think overall outlook for the banking space, both banks and NBFCs looks quite positive for calendar year 25, and we expect strong earnings growth to come by in the next 4 quarters.
What about IT? TCS sounded the cautious note. Now all eyes on Wipro today, tomorrow Infosys. What have you made of what TCS said, and what do you expect for the next 3 to 6 months in terms of just pure commentary from IT companies and what that will mean for earnings and valuations?
Well, there's no doubt that the IT space has corrected quite a bit and the valuations have become very reasonable. But I guess it's very difficult to say how the tariff scenarios will play out in the next 3 to 6 months. So it's very difficult to take a call on the overall US GDP growth and the global economic growth. So I think from that point of view, there's some amount of uncertainty will sustain. Some of the larger deals may get pushed back. We might see smaller deal sizes and stuff like that. So I think at this point of time, while the valuations have become fairly reasonable, one may want to take a more cautious stance and revisit the sector once the dust has finally settled on the tariff scenario.
The index itself is, I think, down some 25% for the year so far. And there's no, commentary will be interesting to see. TCS, for example, said, okay, FY26 will be better than 25. We'll hear from Wipro today. Infy reports post-market tomorrow. If actual numbers are worse off than what we're expecting, do you think there is downside here? We can revisit the recent lows, or they could be. What is your sense?
Well, I think for FY25, most IT companies, the large cap companies, will deliver a low single-digit kind of US dollar revenue growth. And I think for calendar year, for financial year 26, at this point of time, there are all kinds of scenarios built in from -2 to, let's say, +3, +4 kind of dollar revenue growth. What exactly will be the number? I think it's very, very difficult to take a call on how the tariff situation in the US GDP growth will play out. So I think it's still very early. Let us wait for the next 90 days, what kind of bilateral negotiations the world does with US and what is the impact finally in the US economic growth and the global economic growth. I think if you look at the multiples, I think the IT sector has now gone down to the 10-year average valuation multiples. So there has been a significant re-rating of the IT sector post-COVID, and the valuations were at least 20% premium to the pre-COVID multiples. I think the good thing now is that the multiples have reverted back. The uncertainty on earnings growth, of course, will stay for some more time. And I think this quarter, while we expect most managements to talk about the current environment, but the situation still continues to be fluid. The next, I think 2 quarters will be very, very important from how the whole year will look out to be, and maybe a little more going forward. So we will, I think, as of now, maintain a slight cautious stance on the IT space.
Okay, Varun, we leave it there. Thank you very much for joining us. Good conversation as always. Appreciate your time here on CNBC TV18. Well, I think what we're going to do is play out some sound bites. We had the Steel Secretary, Government of India, with us earlier today. Sandeep Pondrik told us the safeguard duty, which has been recommended, they are under examination. A decision is expected in the near future. And of course, there's a question of whether actually the rate of can be 20% instead of the 12% which has been recommended. Of course, they can't say anything as of now. And there was, some other questions in terms of specific situations as well. Listen in.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second question, point about 20%, I really don't know, because it's as you know, the DGTR process, the safeguard duty imposition process, is a sort of a quasi-judicial process, and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty. The per capita consumption in the country now is more than 100 kgs per person, and it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that, if you see our GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%. RINL, as you know, that government has given a lot of money to RINL to keep it as an ongoing concern. So I don't see any possibility of immediate merger. That decision is not there in the government. Similarly for NSL, so for now, no such talks are, or no such thing is happening in the ministry for merger of these three. As you know that the 21 decision of cabinet that NSL will be divested still stands. However, not much progress has taken place on that front.
The Steel Secretary is saying it as it is. No hopes of that safeguard duty going from 12 to around 20%. There's no talks with regard to a mega merger between SAIL, RINL as well as NMDC Steel. And also saying that he's quite optimistic on prospects of consumption here in India. He expects a double digit or a 10% plus growth in steel consumption here in India. Well, time to slip into a short break. On the other side, dealing room chatter is waiting for us. Nimesh has got an update with regard to markets as well as a few stocks. We'll also get our technical expert back on to give us some buy and sell recommendations.
The president has been quite clear they must follow federal law. He also wants to see Harvard apologize, and Harvard should apologize for the egregious anti-Semitism that took place on their college campus against Jewish American students. There were professors who said that he had engaged in discriminatory behavior against Jewish students. Of course, you had the former president of the university saying bullying and harassment depends on the context. You also had an encampment on Harvard Yard that we all saw play out before the cameras. The university failed to impose formal discipline on any students for this anti-Semitic conduct violations, including the occupation of a campus building and the disruption of classes with bullhorns.
The per capita consumption in the country now is more than 100 kgs per person, and it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that,
Welcome back. Well, another day, and it appears another day we're going to end at the high point of the day. So this market is actually looking good because on a day-to-day basis, you see the surge that comes in the final hour of trade, and the last tick actually is at the day's high. And as we speak, we're up 110 points odd. Nimesh is with us to help us out with what he's picking up in D-Street Chatter. Well, Nimesh, what are you picking up on flows?
Hi, Nigel. Another strong day, again largely led by financials, and I'll speak a bit more about the financials because, if you look at yesterday's data as well, the FI and buy number was close to 6,000 crores, and 50% of that buying was largely in the private bank names. Same is the trend today as well. I understand at least in two large private bank stocks, there are bids worth thousands crores each, at a leading FI. So again, looks like the buying is largely, focused towards the financials, and within that, the large private banks. From a flow perspective. So again, you might see a significantly large number from FIs in today's market. Even the broader market has turned a bit constructive in the last couple of days. And again, the feedback is now there is a bit of commitment as well coming in from larger HNIs into the broader market stocks, and that's showing up in the individual names as well. The breadth is again positive today, and a lot of individual stocks are buzzing in trade, 5%, 10% up in the last couple of days. So clearly there is momentum back in the broader markets from retail and HN investors. Of course, we have a big earnings season to watch out for. Wipro today, Infosys tomorrow. So again, IT will be a big sector to watch out for. But in general, the earnings season is going to be quite critical for the near-term momentum. But purely from a flow perspective, it's towards the financials, and a bit of traction is back in the PSU stocks as well.
So Nimesh, we'll watch for IT, particularly Wipro tonight.
Yeah.
But what about other stocks? What are dealing rooms talking about in terms of buzz?
So in terms of individual stocks, Rima, the first stock on my list is Pratap Snacks. So that's been buzzing in the last couple of days. Flat today, but the stock was up 8% yesterday, has recovered very sharply from the recent lows. And again, some HNI seems to be quite active buyers, but the big buzz on the street is that maybe you'll see a corporate development very soon. Again, a potential change of ownership could be on cards for Pratap Snacks. So that's the reason why that's been buzzing off late. The second stock is NBCC. I spoke about buying interest back in the PSU basket. NBCC stands out. Very aggressive buying at HNI desk. Some large HNI investors have turned active buyers as well. And also for NBCC, there is a very strong buzz that the company is likely to bag a large order very soon. So that's a trigger there. The third stock is Akum Drugs. Again, a big move in the last couple of days. 10% was up 10% yesterday, 5% up today as well. The volumes have picked up. I understand there was a clean-out trade from a leading FI who sold out, and some domestic funds and some large HNIs have bought in the last 2 days into Akum Drugs. And the last is Tata Motors. Within the auto names, this is one stock which stands out in terms of aggressive selling. So for second day running, there is delivery-based selling from larger FIs in Tata Motors.
All right, as always, interesting list there, Nimesh. Thank you very much for that. So Pratap Snacks, as Nimesh pointed out, is the one where perhaps we may see some change in ownership. Nimesh, this is the one where we saw change of ownership recently, right? I mean, you had two large HNIs who came in.
Yeah, yes, Prashant. So there was a large block. The PE got exited. The entire PE stake was bought by two entities, and then there was an open offer as well. The open offer is closed. There was hardly any participation in the open offer, but now I understand there could be further change in ownership with regards to Pratap Snacks.
Okay, all right. We'll see how this one goes. But on the radar now, as are a few other things like IDFC First, for example, which is, of course, the board meeting is tomorrow. And we've been highlighting that with Nimish earlier on as well. All right, let's talk about what to trade in terms of here and now. Mitesh is here with some BTST trades. Mitesh, what do you have? Okay, I think we lost that line there, so we'll try and reconnect. But maybe if Yash is with us, we can just quickly recap, two insurance results, ICICI Pru Life and ICICI Lombard, both from the same group. Yash, take us through what both reported.
Well, both, insurance companies from the house of ICICI reported their results yesterday, just, with a gap of about half an hour. But the reactions are very diverse today in terms of how the stock price is moving. For ICICI Prudential Life, if I have to describe the results in one word, weak growth when it comes to the fourth quarter, but strong margin performance. The reason why the stock is higher in trade today, there are three important reasons. First one, the margin performance has been very strong. On a year-on-year basis as well, the margins have come stronger. B, the expectation was lower, and this particular margin performance has managed to beat that expectation as well on the positive side. Second reason is strong management commentary when it comes to the management coming out and saying that they will be able to outperform the industry average growth in FY26. Third one is the positioning itself. The stock was down 14% in the last 3 months. The fear about margins seems to be non-existent, at least as far as the Q4 result is concerned. And hence, the stock has sort of, picked that up and is moving higher in trade today. For ICICI Lombard, it's a strong Q4, when it comes to growth as well as the underwriting performance. But the reason why the stock is lower or under pressure today, first one, the stock has been flat in the last 3 months. So positioning-wise, of course, it's on the negative side when it comes to the stock moving today or reacting today. Second is the uncertainty on the motor insurance portfolio, the biggest portfolio, about 40% of the book. But how will it pan out in FY26 with auto sales being a little disappointing? There is a lot of uncertainty in terms of how motor insurance portfolio for ICICI Lombard will work out. Third reason, no certainty again when it comes to revision in prices for motor third party. The company and the sector has been expecting a revision for a few years now, hasn't happened again for FY26. There is no certainty, no word. The management also on the channel said the same thing on how the prices would be revised in FY26, if they would be revised, at all. And that is also playing on the stock today.
Thank you very much for that. And let's talk about Wipro. That's the one to watch. Well, on the top, expect a subdued quarter. One, because Q4 is seasonally weak. And two, because of the macro uncertainty. As TCS said, some projects which were expected to start got pushed forward, got delayed. Decisions are taking longer to close. The sales cycle is getting elongated. And that hurts sentiment towards the end of the quarter. And that would be seen even for the rest of the IT pack. So for Wipro, expect a revenue decline quarter on quarter, but within the company's guided band. Dollar revenue growth seen down 0.5%. Constant currency revenue growth seen down 0.2%, but within the company's guided band. Now, again, when your revenues are not growing, there is pressure on margins. So EBIT margins are likely to decline by 40 basis points to 17.1%. But the street will track the Q1 guidance very closely. Now, consensus appears to be -1 to +1%. But remember, these numbers were set before the uncertainty got ratcheted up. The numbers came in, most of the analyst notes came in very early part of April. And since then, we've seen a lot more volatility and uncertainty. So will the management be conservative? So don't be surprised if the guidance turns out to be a little worse than -1 to +1%. Also remember, Wipro has a little higher exposure to discretionary demand because of the Capco acquisition. Capco is a consulting company that they acquired in Europe, and therefore the company has a higher exposure to discretionary demand. So what the company says on that would be watched very closely. So that's Wipro for you.
Okay, all right. Thanks a lot for that, Rima. Well, let's get in Mayuresh Joshi, who joins us on the show. Hi, Mayuresh. Good afternoon. Good to see you, Ben. What's your view on tech? You hear diverse views. One is that valuations now have come into its long-term averages. On the flip side, there's so much uncertainty. Why would you invest in IT when you're going to get minimal growth and the stocks are, not trading extremely cheap? Which way would you go?
Afternoon, Nigel. No, I think we're clearly on the sidelines. So I think for a whole host of reasons that Rima just mentioned, the expectation largely is that even if the recovery starts coming in for the sector as a whole, that will be back-ended probably in the second half, as we see in this financial year itself. And therefore, I think to probably forecast some element of earnings recovery happening, assuming there are a lot of headwinds in the next few months, what happens to client order wins, what happens to pricing, what happens to margins, what happens to the bench strength in terms of utilization levels as well. And therefore, I think when you're navigating through a whole host of these factors, which remain rather uncertain as we speak, that uncertainty element is something that the street might not want to believe in at this juncture. And therefore, I think our own take is that the back-end recovery might only happen in the second half of this financial year. A large part of the price damage, in our opinion, is already done, Nigel, with the IT stocks. So to a certain extent, it might be a time-wise correction that a lot of stocks within this space might go through. But a few of the mid-cap IT stocks, which are showing relative strength as we speak, and if they deliver on numbers and if the commentaries are good enough as well, might actually be outliers in the whole scenario as we speak. So I think we will watch out for mid-cap IT, specifically stocks like a Persistent, Coforge, or an Emphasis.
Mayuresh, this entire move in the banking names, HDFC Bank is quietly up almost 25% from its lows. And so are many other names. Indices, of course, it was a very shocking move down, and it's a fast move up, some 15% in 2 days. And of course, others are doing well. Any thoughts here?
Afternoon, Prashant. No, again, I think banks as a consensus as a space probably remains on the radar for every investor and analyst on the street. I think there are 2-3 reasons why a lot of people are probably even looking at banking stocks. I think the first primary reason is expectations in terms of a strong recovery that you've probably seen in deposit trends. And the deterioration that you've probably seen in the overall CASA book over the last few quarters, I think that should largely be behind us. So it's going to be the next few quarters might be a periodicity where I think you might see actually deposits coming back to normalization. And therefore, I think the bottoming out of the CASA deterioration as we speak. The advances deposit ratio should improve. The second element, obviously, is in terms of the risk weights that a lot of the banks had assigned earlier, and with the regulatory tweaks that have probably happened as we speak again, there is expectation that with the tweaks that have probably happened, asset quality pressures should probably remain stable or in fact start going down because of the strong credit underwriting that we've seen for a large part of the universe. And this will also probably abet a large part in terms of provisioning that a lot of these banks have probably done, therefore driving down the cost to income ratios. Last but not the least, I think the expectations with the rate cut that we've probably seen, expectations that there might be a couple of more rate cuts as we head into the next few months, might actually mean that NIMs might actually stabilize and improve going forward as well. And that probably might also indicate that stronger liability franchises might actually do well in the next few quarters as well. So I think we remain optimistic. I think the rating rankings for the entire sector look pretty decent. It's one of the strongest sectors in the strongest quadrants, as we put it, as far as earnings are concerned. And therefore, large leadership stocks, as we've always believed, as per our philosophy, stocks like an ICICI Bank, stock like Kotak Bank within the private names, State Bank of India, Bank of Baroda within the public sector names, might actually fare well over the next few quarters.
Mayuresh, do stay on. We need to slip into a mandatory break before close. But as we do that, here is some good news for all our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to our news, all the articles, financial world updates at your fingertips. So download the CNBC-TV18 app now from the Apple or the Google Play Store, or you could just scan the QR code on your screen.
The iconic line from Top Gun. Was there ever a moment, in that phase where you were creating this movie-going experience where your father maybe told you that, son, you're writing checks that your body can't cash?
He made me cost conscious. He made sure that I didn't spend that kind of capex, that there'll be no returns.
A lot of the scale has been driven by way of M&A and acquisitions, and of course Inox was the big one.
Yeah.
What would you say have been the non-negotiable?
I think non-negotiable right from the beginning was to stick to the fundamentals. And I was really privileged to have somebody like Renuka and Vishal Mahadevia, who's Warburg Pincus,
yeah.
and mentors like Sunil and Rajiv Singh and so many people. Fundamentals, unit level economics. So when I was doing organic growth as well, location has to be right, the rent has to be right, developer has to be good, development has to be good. That was organic. Inorganic also, am I acquiring something which is going to be value accretive or value destructive? Is it an ego, vanity acquisition, or is it something that is missing in the current portfolio and is going to add value?
GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%.
Okay, welcome back. There's about 6 minutes to go for market closing, and it's clearly a bank-led move. The Nifty is up 0.5%, but the Nifty Bank is up 1.5%. So that's the extent of outperformance that banks and financials have really seen today. And I mean, if it goes like this, the Bank Nifty will be first off the indices, which will basically get back to its previous highs. So, you know, wait for that as well in that sense. You know, PSUs, NBCC is something which stands out. It's got a very strong move, 7%, and very strong volumes as well. I think NBCC was part of Nimish's chatter list as well. So that has been doing well since the morning. EIL, actually there are a lot of these PSU names which are participating. Dredging Corp is another one which is about 8% higher. And all these have got volumes as well at this point. So GMDC is up 10%, another PSU name which is looking good. Anything stands out to you, Mayuresh?
So within the PSU pack, Prashant, I think our take is that PSU defense names might actually continue doing well. I think the only risk factor for these names is how they are able to execute. But apart from that, the revenue visibility in terms of their order books stands very, very solid. The robustness in terms of the margins at which these orders have been obtained will probably mean that the margin performance, if they're able to execute well, will continue at a good pace. And that will probably affect directly in terms of bottom line growth. So I think the earnings growth, where there is a lot of concern on how earnings will probably grow for certain pockets within the market, if PSU defense companies might execute well in the coming few quarters, I think the earnings growth sustainability argument probably would stay with them. So I think a few of the select shipbuilders, as an example, is something where our belief is that the rating rankings, institutional holding look extremely strong, and therefore a little bit more positive in the defense PSU space as we speak.
Okay, all right. Mayuresh, I wanted your view on some of these paint companies. They were big underperformers because you had a new large player that was coming into their space, and they underperformed in the last couple of years. But if I compare, Berger Paints, I think, is up close to around 15-20% in this year, which is much better than what the Nifty has done. You have Asian Paints as well that's pulled back. Remember, these stocks went through a period of big underperformance. And now you have the tailwind because crude oil prices are lower, and the hope is consumption picks up in the second half of the year. Your view on any of them?
So yeah, you're absolutely right, Nigel. I think the combination of the cocktail of these reasons that you're putting through, with crude prices coming down, titanium dioxide prices have come off quite significantly. So adjusting for inventories, probably for this quarter, if crude prices remain lower, the expectation is that a large part of their input cost, which is almost 20-25%, comes off quite significantly, which probably upsets their margins pretty decently. On the other hand, with the tax cuts that are expected to come through and start getting played through as we start this financial year, specifically, I think the second half of this financial year, where the expectation is that with a combination of good monsoons, rural consumption, urban consumption, and semi-urban consumption expected to come back roaring. I think a lot of these discretionary companies, paint companies as an example, as you put forward, footwear companies as you put forward, apparel makers, which are at the lower price range, that you're probably looking at, might actually start doing well. And that might actually reflect in terms of better volumes, better pricing at their behest, better margins because of the input cost deflation that we're probably seeing, and therefore better profitability as we head into the second half. So I think operating leverage will definitely play out if these factors stand out. And therefore, I think a base case argument is being made for paint companies, for footwear makers and apparel makers, or probably in that lower price range below 1,000 or 800 rupees.
Okay, all right. I think what we'll do is we'll just quickly wrap up things here. Mayuresh, stay with us. We're going to come back in a bit. So we'll end about 120 points higher, and that's a 0.5% gain. The Nifty Bank will end with 1.5% gain. The mid and the small cap indices will end with about 0.75%, 0.5% to 0.75% gain in that range. So this is good news overall for the markets and for the indices. In any case, I mean, India, the first large market, it happened already yesterday, but as of yesterday's close, the market had recouped, what it had lost in the post the 2nd of April. It was basically back at 1st April levels, pre-reciprocal, so-called reciprocal tariff levels. And I think we added some more today. So interesting to see how US trades later today, because I mean the mood was generally a little risk off, and those headlines, those China headlines at about 150 changed the sentiment around a little bit. US futures popped about 1% higher. Large cap stocks, IndusInd Bank, another 7% gain, so about 14-15% in the last two sessions. But Axis was up about 4% as well. Apart from that, outside of financials in the Nifty, ONGC, Trent, and there was something like Adani Ports, which was up and about. On the downside, there was Maruti and Tata Motors, which were lower, and Hindalco lost in today's session. Broader markets, lots of action. It was clearly, I mean, on the advances outnumbered declines by a big margin, but I'll just look at some news-led hits today. So Zydus Life was down 7%, Lupin was down about 4%. Both launched this drug at risk, and the court ruling out of the US is a little adverse. So they took a knock. And of course, the gas distribution companies, MGL and IGL, were the other two which came under some pressure. There were some other losers as well. Some hospital names like Fortis, Rainbow Hospitals, etc. But that's about it. But big list of mid-cap gainers that we had today.
Well, that's right. NBCC was up 7%. Indian Bank was up 5%. Bank of India was up another 4%. Union Bank as well did pretty well in today's trading session. So quite a few stocks that were gaining in the broader markets. You had a few more stocks. SMS Life Sciences, no volumes not very high out there. But you had Sami Hotels, That stock went home with a gain of around 12%. Cupid as well was up 11% in trade. JBM Auto firing away, up close to around 10% in trade today. And Walchand Nagar as well was up close to around 10% or thereabouts. So plenty of winners in the broader markets. That's the reason your portfolios would be feeling good for today. I'll tell you what, we'll wrap up on this edition of Closing Bell. You don't go anywhere. Market Forward comes up next.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second question, point about 20%, I really don't know because it's a, as you know, the DGTR process, the safeguard duty imposition process is a sort of a quasi-judicial process and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty.
मुंबई का जो सिंगल कार्ड है मुंबई 1, ये कार्ड हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार्ड के कारण मुंबई और एमएमआर रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में एमएमआर रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
Indian market defies global trends as it ends in the green, surges in the last hour of trade. The Nifty closes at 23,400. The Sensex ends near 77,000. Auto, pharma were the top laggards, while banks took the lead. In other asset classes, gold continues to climb, sets a new record as it touches $33 per ounce in international markets.
ICICI Lombard shares skid after it reports fourth quarter numbers, while shares of ICICI Prudential cheer in trade after reporting a good fourth quarter set of numbers.
Shares of City Gas Distribution Company stumble after the centre trims allocation of cheaper domestic gas under the APM mechanism. In other stock news today was Edison Bank. The stock gains after external auditors put the financial impact of the irregularities at 1,979 crore rupees, less than the earlier estimated sum. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear you up for the next trading day. I am Rima. With me is Nigel D'Souza. Nigel, pretty good day, right? It started flat, but by the end of it, at the day's high, and the Nifty closing at a 2-week high.
Well, the markets are in actually good form, because for the third straight session running, the close was at the day's high, and that's something that's very, very encouraging. So even in today's trading session, the Nifty's last tick actually was at the high point of the day. And that's something that the bulls will like very, very much. Remember, Asian markets were in a bit of a tizzy. They were mildly weaker in trade today. But in spite of that, the Nifty actually went home with a gain of close to around 100 points. The reason that the Nifty has been doing well and it's gained more than 1,000 points in just 3 sessions is because the Nifty Bank has found its form. And that's the one that's leading in the way. As we know that in yesterday's trading session, the FIs turned buyers. Maximum of their holding is in the banks and financial names. And it seems that valuations as well are in favor. And that's why the Nifty Bank now, well, that's close to around 2.5% away from its fresh all-time high, while the Nifty is close to around 10% away from its fresh all-time high. So that was the reason that, in fact, we did see both those two headline indices do well. But your portfolio will be feeling good because we had 3 stocks that were advancing for just 1 stock that was declining. So the breadth of the market was good. And that's the other data point that I'm telling you. Yesterday, I told you there were 400 stocks on the BSE that were in upper circuit. That means there were pending buy orders, but which could not get executed. That was the kind of appetite for some of those names. And in today's trading session as well, 350 stocks on the BSE were in upper circuit. All in all, a good trading session. India is outdoing what the globe is doing. And it seems the bulls feel that they are in control, at least in the near term. The next resistance will come in at 23,850, from where we did a U-turn the last time around.
Okay, and the BSE listed companies gained a market capitalization of about 3 lakh crore in today's up move, and markets also ending higher for the 3rd day in a row. The surge coming through in the last 1 hour of trade, 1.5 hour. Let's also tell you what we've lined up for you on our show today. We start with the top movers and shakers of the day with Vivek. The stocks of the day were Edison Bank, Zydus, Gensol. We'll get you the key reasons why these stocks were buzzing, and last but not the least, we'll delve into the key market events to watch tomorrow. But first up, it's over to Vivek now. He's at the big wall with the big stock movers. Vivek.
Well, thank you so much for that. Well, another session where you actually saw a very, very good session as far as the bulls were concerned. Advanced decline ratio, very strong, especially in the broader end of the market. Looking at the top movers, first up has to be the top Nifty gainer, Indian Bank. Well, yesterday the external agency audit was completed, so significant overhang was listed, lower than what the bank itself had anticipated. On the back of that, you did see almost a 7% uptick for Indian Bank today. The other set of stocks that moved significantly higher today was the entire PSU banking pack. Yesterday, you did see the private banks rally significantly, but the PSU banks, Indian Bank, Union Bank, all of these stocks were actually amongst the top gainers in today's trading session. The other set of stocks are, JBM Auto was one particular name from the broader end of the markets. Remember, sources told CNBC and our colleague Parikshit told us that the government is all set to launch a tender to procure close to 10,000 electric buses. And this JBM Auto is seen as one of the participants and maybe as a beneficiary stock. The markets clearly like that. Almost 10.5% higher for JBM Auto today. ICICI Prudential yesterday, results were moderately good, but CLSA went ahead and upgraded this particular stock. The stock ended higher by 3%. NTPC Green, this particular stock, after a while, saw a very strong trading session, good volumes over here as well, and one of the top gainers as far as the mid-cap index was concerned. And Swaraj Engine, you saw the results come midday. It was a good set of numbers from the company, and the stock, one of the top gainers. On the other hand, very few laggards, but has to be some of the pharma names, especially Zydus and even Lupin for that matter. A very large drug, Mirabegron, that particular drug actually saw negative legal case outcome. On the back of that, both of those stocks saw significant downticks. And, MGL was the other stock. All of the city gas distribution companies today were impacted by the fact that there was a negative development in terms of reduction as far as the APM gas allocation was concerned. MGL took both the brunt of the selling pressure. And lastly, Gensol Engineering, worries and woes as far as this particular name continues, ended at the lower circuit. The SEBI order has come in, interim order has come against both the company as well as its promoters.
Okay, all right. Thanks a lot for that, Vivek. Well, let's welcome our guest on the show. We have Mayuresh Joshi, Head of Equity Research at William O'Neill, and Shrikant Chauhan, the EVP at Kotak Securities. Hi, gentlemen. Thanks a lot for joining in. Well, Shrikant, you go first. Beautiful run on the markets. Do you think this time around we're good for more?
Afternoon, Nigel, Riba and Mayuresh. Yeah, absolutely. Like the way the market breadth is improving day by day. And the best part is that whenever the market is crossing its previous high, we are seeing good amount of strength in the, I'm going to say not only in mid cap, but also in small cap companies. So I am of the view that the markets are about to cross its previous highest levels of 23,800. And now the supports have shifted from 23,000 to 23,200 levels. So that should be the final stop loss for holding any long positions or creating any long positions even at current levels. And we can again see the levels of maybe 23,800 or 24,000 in the best case scenario. Bank Nifty is doing well. It is outperforming and it is doing much better than the Nifty. But if you see the Fin Nifty, it is already into all-time highs. So it clearly shows that the market is supporting or maybe it is gaining on those grounds where the domestics or maybe domestic macros are turning positive, like rate cut and all. So I am of the view that yes, we should look for adding some position if there is any correction in the market.
Okay, add on dips, wait for a correction and then go long. Mayuresh, broadly, how are you feeling about the markets now?
Afternoon, Rima. No, I think the sentiments have definitely improved. No two ways about it. But I think what the markets will now ideally do is track Q4 numbers. I think there is no great expectation, Rima, honestly, from Q4 numbers, except for a few pockets. Maybe there are a few agrochemical companies, more domestic-oriented sectors. The hope is that as we head into the first half of this financial year, with a lot of tailwinds that are expected to come through, with the tax cuts, with better monsoon, the expectations of consumption coming back very, very strongly, government capex continuing at a very, very good pace, earnings should largely bottom out, is what the street largely believes in the first half, and show signs of improvement as we head into the second half. So there is an earnings recovery around the corner as far as the street believe post Q4 numbers. And therefore, I think the market's probably a large part in terms of the correction or the bottom that we've probably seen, 21,600, 21,700 odd. I think unless there are structural changes that happen on the global macro ecosystem, I think that should largely probably hold. We might consolidate, there might be periodicity of volatility. But I think a few of the domestic-oriented sectors, in our opinion, where the ratings, rankings, relative strength is holding up, and where the earnings are holding up, might actually fare well over the next few months.
Okay, all right. Mayuresh, wanted your thoughts on the city gas distribution companies, because in today's trading session, they were under pressure. Sudarshan joins us to tell us why. Sud?
So most of the city gas companies have fallen trade today, especially Mahanagar Gas, which closed with a cut of almost 5%. This on the announcement of government that it has announced that there would be a reduction in the APM gas allocation in the range of 18 to 20%. Mind it, in last 1 year, the reduction has been almost 50%. In the beginning of 2024, APM gas allocation used to be in the range of 70 to 80%. Now, after yesterday's reduction, now it stands at 40%. So now we'll have to see if these city gas companies take a price hike, because as per CLSA, especially IGL and MGL may take a price increase of about around 60 paise if they want to pass on to the increased cost. Also, it believes that because now after the cut in the APM gas, it would be replaced by new well gas, and this is priced 20% higher. Jefferies believes that it would be difficult for city gas companies to pass on to the increased cost. Also for FY 26-27, it builds in flat EPS estimates for both IGL and MGL. But the main question remains, is the APM gas allocation cut done, or will we see more APM gas allocation? Because if we will see more allocation gas.
Thank you very much for that, Mayuresh. City gas distribution companies, you want to weigh in on the developments?
So, Rima, I think there has been a lot of to and fro, right, for all these stocks under consideration. And therefore, I think with whatever developments that are now happening, whether they'll be able to completely pass this through, I think that is a big question mark. And that remains a big circumspect in terms of the entire earnings scenario if this does not happen. So if it's not a complete pass-through, they obviously take a hit on the EBITDA, and therefore the EBITDA per SCM will probably also dwindle lower. Obviously, I think the expectations in terms of more geographical areas, the expectations in terms of addition of more players coming in. I think there is sufficient amount of scope happening here. But again, I think the basic argument in terms of the APM gas, which is at a lower price, not able to pass this to complete three, volumes probably being a little bit soft, and therefore EBITDA and EBITDA margins remaining softer might probably mean that earnings might remain circumspect as we speak. So I think wait and watch for us as far as CGD plays are concerned.
Okay, all right. Thanks for that, Mayuresh. Well, let's talk about IndusInd Bank. It was up yesterday. It was up another 7% today. This after the external audit put the financial impact of the irregularities at around 1,979 crore rupees. That was less than the earlier estimated 2,000 crore rupees. Ritu Singh joins us to tell us about the key developments. Ritu?
Well, a top-level shake-up could be on the cards at IndusInd Bank, with sources indicating at least 3 senior-level exits expected in the coming few months. Now, we've been given to understand that the CEO, along with the deputy CEO who is in charge of global markets, including the derivatives portfolio, are among the 3 executives that could be asked to step down because the regulator has expressed displeasure at the manner in which the entire issue was handled and the delay in disclosures. Now, while the board is already working on the CEO succession plan, we've also been given to understand that the regulator has asked the bank to submit the shortlisted candidates at least 4 to 6 months before the current CEO Sumant Katpalia's term ends in March next year. However, in its response to our story, the bank has denied receiving any such communication and did not comment on the management changes. Now, the bank has also received the external auditor PwC's report on the derivatives portfolio, which pegs the hit at 1,979 crores, which is broadly in line with the management's estimates as well as the street expectations. And we understand also around the regulator's preliminary assessment of the hit. Now, the bank had first pegged the adverse impact at 2.35% of its December net worth, which it has now revised down to 2.27% on a post-tax basis and will reflect it in its FY25 financials. So no nasty surprises on the financial front. Brokerages like Morgan Stanley say they will closely monitor the upcoming earnings for insights into the outlook on margin, growth and asset quality. Macquarie sees this as incrementally positive in the near term, while Citi says developments around the CEO transition will be closely monitored.
All right, thanks for that, Ritu. Shrikant, how is it looking on the charts? Remember, this was a stock because of that impact. It fell 25% in a single trading session. Now it's pulled back some of those losses, but it's a far cry away from that 900 rupee mark. What do you make of it?
Yeah, absolutely. It is bouncing back after eating the steepest and deepest sell-off in the previous month. But while looking at its technical pattern, I think it is now very close to the important resistance level of 810, where the stock has left its gap. In case if we see the stock is managing to sustain above the levels of 810, then we could see the levels of maybe 900. But I'm not expecting this stock to sustain above the levels of 900 so easily. So it's better if we try to reduce long positions between 800 to 900 levels.
Okay, reduce some long positions between 800 to 900. Thanks for that, Shrikant. Let's focus on a couple of pharma names. We had Zydus as well as Lupin. They were under pressure because they had a setback in trade today. Vinny joins us to explain all of that to us. Vinny?
Hi, absolutely. So a setback coming in for Lupin as well as Zydus because they've lost a case that was in the US federal court with the innovator, that is SLS Pharma. Now, this is for the drug that is called Myobetriq, that is the generic Myobecron, which is an important drug that comes in for both the companies because since the time they launched this product last year, which was at risk in Q1 FY25, they made sales of around $100 to $150 million in this 1 year itself, and that is an important drug coming in for the company. Now, what will happen because of this case? They will have to withdraw the product currently, that is a Myobetriq, where they're selling in whichever markets they're selling, and this is something that will impact the EPS of the company. Now, Systematics is highlighting that FY26 earnings will be impacted, and EPS impact for Zydus would be around in the range of 25 to 30%, while a 10 to 12% EPS impact could be seen on Lupin as well. Elara is saying that both Zydus as well as Lupin have launched this product in Q1 FY25, and now the possible options that they have going forward will be: one, they file a patent litigation going forward in the Court of Appeals. If it comes in their favor, well and good, but if it doesn't, then they may have to pay a penalty, and that penalty could be the amount of profit they've made in FY25 so far by selling the product. So any profit that they've made on that front would be the amount maybe that they would have to pay as penalty. So important that we'll keep an eye on this one going forward as well.
Got it. Okay, all right. Thanks a lot for that, Vinny. Well, Mayuresh, any view on the pharma names?
I think this is going to be detrimental as far as their earnings are concerned. But again, I think they've got a very strong pipeline, both these companies put together. But generally, I think our take is within the large names, we continue holding Sun Pharma in our global portfolios. Very strong pipeline that Sun Pharma probably possesses as we speak. A few of their drugs are in late stage 3 trials, which means it's a matter of time that they will get approval for the same. Some element of revenue exclusivity. Obviously, the headwind remains on what Trump can probably act upon in terms of the sectoral tariffs as far as pharma is concerned. But I don't think we are too perturbed with that. I think it's not something which can last too long, in our opinion. And therefore, I think leadership stocks like a Sun Pharma within the pharma name, the top pharma names, something like an Ajanta Pharma within the mid-cap space, their earnings might actually hold up in the next few quarters.
Okay, all right, gentlemen. Thanks a lot for joining in and helping us out with your take on a lot of these names. Looking forward to chatting up with you in the time to come. For the time being, though, I think we could slip into a short break. All right, let's focus on Gensol Engineering. The stock was at lower circuit today. They got a rap on the knuckles from the SEBI, the regulator SEBI. We have Yash who joins in to fill us in with more on that. Yash?
Well, Nigel, rap on the knuckle and a pretty hard one. SEBI has passed an interim order against Gensol Engineering and its promoters. Though it's an interim order, the charges which SEBI has spoken about are very, very serious at this point of time. As far as the order is concerned, what SEBI is saying is that both promoters, Anmol Jaggi and Puneet Jaggi, will be restrained from holding any KMP position or a director position at Gensol Engineering, which is the listed entity. Again, Gensol Engineering, both promoters can't deal into securities market directly or indirectly, and SEBI will conduct a forensic audit into the books of the company. 6 months after the committee has been formed, it will have to submit a report as far as what are the findings of this forensic audit, and the recent stock split that was announced, that will be put on hold. What are the allegations? The first one is that the funds which were raised from IRA, DA as well as PFC were for the purpose of acquiring 6,400 electric vehicles. SEBI found in its investigation that only about 4,704 electric vehicles were bought and about 262 crore rupees were unaccounted. In its further investigation, SEBI found that these funds which were unaccounted were used by the promoters of Gensol Engineering to put in their private entities, were given to their relatives, were used for personal purposes, and it has given a long list of things which, the manner in which these funds were used. Case in point, something like buying a golf set for 26 lakh, 3 lakh towards a travel trip, 17 lakh to spend at Titan, 8 lakh towards marketing agencies, 66 lakh towards foreign currency bills, so on and so forth. The second allegation is that multiple instances of funds going between, Gensol Engineering and its listed entities and private entities. Of course, there are charges of market manipulation, price manipulation of Gensol Engineering also, the private entities investing into their whole list of allegations, and hence the interim order right now. The investigation will proceed from this point of time, after which a final order will come out against the promoters and the company.
Thank you very much for that. We will slip into a very short break on that note. On the other side, we'll get you the key market events to watch tomorrow. Stay tuned. Welcome back. Wipro Q3 numbers are weaker than street expectations. The IT company has disappointed the street on its Q4 performance in terms of revenue and the next quarter's guidance. Now, here are the numbers. The company's top line has declined by 0.8% on a quarter-on-quarter basis. This is at the lower end of the company's guidance of -1% to +1% for the quarter. We know the reasons, right? There was macro uncertainty, as TCS pointed out. The decisions were being delayed. Some projects which they thought would have started, perhaps got paused. So towards the end of the quarter, when we spoke to the companies in January, things were fine. There were green shoots in discretionary spending, particularly in the banking sector. But things turned, the sentiment soured towards the end of the quarter. So from middle of March, we did see some impact of the macro uncertainty, and that perhaps has hurt Wipro. So Wipro's top line revenue has fallen by 0.8% on a quarter-on-quarter basis. Secondly, the Q1 guidance, that's the June quarter guidance, is also weaker than what the street would have liked. It's -3.5% to -1.5%. This is lower than expectations. Remember, we did highlight that while consensus expectations were, say, -1% to +1% or -1.5% to 0.5%, these estimates were set in the early part of April or towards the end of March. And things did, turn south after that. And therefore, the company's guidance may be worse than what the street was anticipating. And that's been the case. So -3.5% to -1.5% is the Q1 guidance, and that is disappointing. Where the company's done well is on two key accounts. One, margin defense. The company has held on to its margins at 17.5% for Q4, unchanged on a sequential basis, despite no growth in the top line, a decline in the top line. In fact, for the full year, the company has managed to grow its margins by 100 basis points. And secondly, the deal wins for the company have been strong. In fact, just in March, the company had announced a very large £500 million order win, so large deal wins under the new management of Srinivas Palya. So deal wins for the company are strong. The total TCV is inching towards 4 billion in the quarter. That's up sequentially and on a year-on-year basis. Even the large deal wins at 1.7 billion is up close to about 80% on a quarter-on-quarter basis. But I think the street would be disappointed by what is ahead. And forward-looking, we've got the Q1 guidance, and that's -3.5% to -1.5%. Sandeep Agarwal is now joining us. Sandeep, you were warning us that things are going to turn a bit ugly. The numbers are not going to look good. But for Wipro, give us your first take.
No, so, as expected, the numbers are a little weak than what was even estimated, as you rightly mentioned. So, but I think, the bigger challenge is the next quarter guidance, which is a sharp -3.5 to -1. That is something, much more worrisome. And as I was saying that, most of the companies are 70-80% business, which is consistent and annuity, but balance 20-30% you have to earn that, you have to win those deals during the year, and that will become questionable because that has large component of discretionary, and in such environment, expecting that clients will open up clearly will be a very tough task. So I think that is exactly what is reflecting in Wipro's interview. I think that there will be uncertain times, and as I always maintain that in case of tariff, you have some answer that you can pass on some cost, you can take on some cost, but where global economic growth is uncertain, how much it will fall, then obviously the customers will not spend what is not required or what is not immediate.
That seems to be playing out. We'll have to wait by for what the companies say on discretionary demand and tech budgets and projects. And are there any ramp downs or pauses that we're seeing? Prakash Diwan is also now joining in on the show. Prakash, what would the advice be now for shareholders holding Wipro shares?
So a couple of things that may sound contrarian, but the stock has anyways, reacted downwards since quite some time, along with all the other majors. And this was anticipated. It's just that the future looks starkly weak at -3.5 to the sigma. Our expectation was it would probably be -1.5 to 0.5% in that band, but this seems to be widening. But if the recovery seems to be imminent post the June quarter, and that of course will be heard from in the commentary, then things could look different. The way the stock Rima went into earnings today, earlier in the day, in spite of all these tailwinds which were negative, there is an expectation that discretionary spend could probably make a comeback in the second half of FY26. So if that were the case, then it's offering some value and you could keep adding on dips. But otherwise, there's nothing spectacular about the earnings that you would want to kind of straight away start adding IT and Wipro within that.
Sandeep, same question to you. Do you think we're going to see EPS downgrades based on the Q1 guidance? What would be the top questions that you would have for the management? And what does one do in terms of holding large IT stocks now?
No, I think, the question which has to be asked to management is obviously what their clients are saying. But I can tell you, with my 2 decades of experience in such environment, even clients don't tell clearly. They themselves don't have clarity to tell to the management. And in turn, how will management guide you anything? So I think there will be uncertainty for at least one more quarter before there is any clarity which emerges. I am more worried, on the global GDP growth rate cuts, because we have seen in the past whenever the global GDP gets cut or the numbers get cut, the challenges that the uncertainty increases, it becomes very difficult to deliver for the companies. So generally, this situation is more tougher than anything else.
Okay, gentlemen, thank you very much for joining in. We'll have the management addressing the media via the press conference. We'll listen in closely for what their clients are telling us, what the corporate behavior and action is, and we'll keep getting you more and more updates. Well, we'll wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that, because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they are laying out this new chessboard,
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Stocks tread with caution across the world as trade tensions continue to dent sentiment. Asian markets end largely lower. Europe opens with cuts. Wall Street futures point to a weak open. The Sensex and the Nifty gain for the third straight session. Bank stocks lead a late rally as Nifty moves closer to 23,500. Gold prices touch a record high as more and more investors shift towards safe haven buying. 10 grams of 24-carat gold costs around 95,000 rupees in India. China's Q1 GDP growth beats estimates at 5.4% amidst tariff worries. US President Donald Trump says the ball is in China's court to make a trade deal. China warns of grave consequences to the world economy and accuses the US of bullying. Steel Secretary Sandeep Pondrik does not expect imports to surge due to tariffs. He is hopeful of a decision on safeguard duty soon, adds there is no plan to merge state-owned steel makers. That's an exclusive. Wipro misses estimates in Q4. Revenue declines nearly 1% on a constant currency basis. Growth outlook remains weak as the company expects revenue to drop by as much as 3% in the next quarter as well. IndusInd Bank is likely to see the exit of 3 senior executives, including the CEO and his deputy, over delayed reporting of discrepancies in derivatives accounting. The stock rallies in trade after the bank discloses the negative impact of 1,979 crore rupees, which is lower than the earlier estimate. An apartment worth 50 crore rupees in Gurugram, a golf set worth 26 lakhs, credit card bills worth 33 lakhs. SEBI unearths how Gensol promoters Anmol Jaggi and Puneet Jaggi diverted funds allegedly for their personal use. Gensol shares remain under pressure, hitting the lower circuit in trade once again. The government is set to launch a tender to acquire 10,000 electric buses. Sources say the centre will extend a subsidy of 3,000 crore rupees with the maximum subsidy per vehicle capped at 35 lakh rupees. That's an exclusive. Mamaearth's parent company Honasa takes Hindustan Unilever to court over an advertisement for Lakme sunscreen. Honasa claims the Lakme ad is disparaging. HUL defends the ad. The Delhi High Court is likely to hear the case tomorrow. The top story this evening, the Chinese economy has been stimulated thanks to Beijing's stimulus measures since September last year. China's growth expanded at a faster pace than expected in the first 3 months of the year amidst tariff worries. First quarter GDP grew at 5.4% compared to expectations of a 5.1% growth rate. Global investment banks have recently cut their forecast for China's GDP growth for the year, which the Chinese government has pegged at 5%. Meanwhile, China's retail sales in March grew at the fastest pace since December of 23. Industrial activity output was also better than expected with a growth of 7.7%. But investors are treading with caution across the world as tariff tensions continue to dent sentiment. Shares in China closing mildly in the green after Q1 GDP growth was ahead of estimates. No such luck in Japan, South Korea and Hong Kong, where markets closed in the red. The Nikkei down 340 points and a 400-point drop there on the Hang Seng. And back home, the Sensex and the Nifty gained for the third day. The Sensex gained about 300 points and the Nifty gained over 100 points. Bank stocks are leading the charge today, 1.5% or 700 points higher there. We saw that late rally coming in. Prashant is standing by with the market wrap. Prashant, take us through what the trends are telling us about how our markets are likely to proceed.
Another strong session and outperformed Asia, outperformed what was happening around the world as well. Remember, the market here, as of yesterday's close, had already recouped levels where, or rather gotten back to levels pre-April 2nd, which is essentially when those reciprocal tariffs were imposed. And today we kind of outperformed a little bit more. Actually, there was a reason. The sharp moves higher came at about 1:50 p.m. on the back of some news headlines from wires, which essentially laid out some conditions, and it gave the first indication that China is ready for negotiations, provided a few conditions are met. US equity futures recovered, and I think we had a bit of a pop here as well. Otherwise, I mean, before that, it was largely meandering through the course of the day. Now, Nifty did 0.5% in terms of gains. The Nifty Bank was up 1.5%. So it was a clear leader, outperformer. Mid-cap and small-cap indices between 0.5% to 0.75%. So it was largely a financials-led move. I'll start with what was up on the Nifty. IndusInd Bank and Axis Bank stood out as far as gains are concerned. IndusInd 15% in the last 2 sessions now. ONGC, Trent and Adani Ports were some of the other names which did quite well. On the downside, Maruti and Tata Motors from the auto pack, and there was a Hindalco which was slightly weaker as well. Broader market advanced decline was positive, almost about 2.5 up for every one stock down. IREDA, big gains, JBM Auto, Electra, for the second day running. These stocks have done very well. AG's Logistics about 7-8%. GMDC, NTPC Green on very large volumes came up. Engineers India Limited, DOMS, Sterling Wilson Solar, Sami Hotels, and there was a Shelley Engineering which participated at the upside with some volumes. So there were more names, but this is the bulk of the big volumes that we saw. On the downside, mostly news related. So Zydus and Lupin were two names which sold off heavily. They'd both launched some drugs at risk. And of course, there was a court ruling which was adverse. MGL, IGL were lower. Coromandel was down. Hospital names like Fortis and Rainbow hospitals were lower. Sona Comstar and Sai Life. Some of these, of course, reversals after the sharp up move that we saw in terms of trade yesterday. But another solid day after a very, very good day yesterday. Back to you.
All right, Prashant, many thanks for joining us. Up next, an exclusive with Cabinet Minister in the Andhra Pradesh government, Nara Lokesh. A day after TCS was allotted 21 acres of land for just 99 paise. That and more when we return.
Someone who alleges to have been subject to any act of sexual harassment, but behaviors that
plays out in a way which plays to India's advantage. So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. You know, how many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst which is, I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain. In a sense, even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Well, the newsmaker, the Chandrababu Naidu-led Andhra Pradesh government has allotted over 21 acres of land to TCS in Visakhapatnam for a price of 99 paise. Yes, you heard that right. It's not a mistake. The IT bellwether will invest over 1,300 crore rupees to build a development centre. The press release from the Andhra Pradesh government cites the example of Tata Motors getting subsidised land in Sanand from the Gujarat government when Narendra Modi was the chief minister. We're now joined by Nara Lokesh, the Minister for HRD, IT, Electronics and Communications in the Andhra Pradesh government. He's also the chairman of the group of ministers for job creation in the state. Mr. Lokesh, many thanks for joining us here on CNBC-TV18. Appreciate your time. Let me start by asking you to elaborate on the terms of the deal that has been inked with TCS. The press release is short on details. Can you take us through how you arrived at this deal where TCS essentially takes the land for 99 paise and sets up a development centre in Vizag?
Just to be clear, Shireen, this is actually a sale of land at 99 paise. And this project of TCS is expected to create close to 12,000 IT jobs in Visakhapatnam, which is the IT capital in the state of Andhra Pradesh. So we're really excited to have TCS land finally in Visakhapatnam, and we're looking forward to inviting the other larger IT players also to come down and set their shop up in Visakhapatnam. Now, Visakhapatnam, it's not just about the land. We have amazing talent that's available. And if you look at it in the IT sector, people from Andhra Pradesh and Telangana, the Telugu-speaking people, have a very large role to play. So we have amazing talent pool. We have great infrastructure. As a state, we're willing to give land at a very subsidized price. And I keep jokingly telling people that if Goa were to marry Bangalore and have a child, that would be Visakhapatnam. So we have it all. And we believe that this could be the trigger for large investments coming to Visakhapatnam.
If I could unpack what you just said there, in your own words, you have it all as far as Visakhapatnam is concerned. You talked about the infrastructure, you talked about the talent pool. Why then did you feel that you needed to sell land to TCS? And once again, I'm pointing out now, as you just corrected us, that it's not leased. You've actually sold the land to TCS for 99 paise. You had all these compelling reasons that you yourself just articulated for us. Why did you then feel the need to sell the land for 99 paise to TCS?
Well, we need a catalyst, and we believe TCS is going to be the catalyst in our IT growth. And that's why we believe that we should give favorable terms to companies that are willing to bet on Visakhapatnam early on. And this is going to come about as a policy, in which we're going to encourage more and more IT companies to come and set up their shops in Visakhapatnam and give favorable terms for them too. And if you look at it as one of our whole promises to create 20 lakh jobs in the state of Andhra Pradesh, both in the private and the government sector. And the cornerstone of that is creating IT jobs. So we are not going to leave any stone unturned in terms of attracting investments.
Okay, so you said that TCS gets the first mover advantage, so to speak, and hence it's been able to get this deal done for 99 paise. Does this now not create a floor or a cap, so to speak, tomorrow if it was to be Infosys or HCL Tech or any other tech company that came your way, would you not have to offer them the same deal?
Well, I'm ready to do some deals and create jobs in Visakhapatnam. I think that's the singular focus that the government currently has.
But this is prized real estate that we're talking about, and you're not leasing, you are selling the land. So I come back again to the possibility of questions being raised, as has happened in the state of Andhra Pradesh previously as well, about under what policy these terms have been arrived at. How will you take forward these decisions? Because I would imagine you want to be mindful of discretionary power and discretionary decision making.
If you look at it, this is how Andhra Pradesh has always done business since the 90s. I mean, that's how we landed ISB in Hyderabad. That's how we got Microsoft to Hyderabad. And if you look at the work that we've done, in 2014, that's how we got Kia to Anantapur district. I mean, you have to take bold decisions, and these decisions have stood the test of time in politics. And if it's going to create jobs, I believe people will bless us with it. No second thought.
Yes, jobs, of course, are important, but you mentioned Microsoft and some other companies, and you said this is how Andhra Pradesh has always done business. But, were those deals done at 99 paise or anywhere close to that amount?
No, absolutely. I mean, if you look at the kind of incentive packages that were given to them, it was very favorable. To bring Kia to Anantapur district, we had to give a favorable incentive package, and we did it. And just because of that one decision, today the per capita income of that one district is among the top 4 in the state of Andhra Pradesh. So that's what makes Telugu Desam Party unique in the way it does things and the way it attracts investments to our state.
No, so I want to come back and labor a little bit more on this. So would it then be fair to assume that this deal, in a sense, becomes the floor for the IT services sector, or even outside of that? I mean, what about manufacturing companies, for instance? Because will you offer a manufacturing company that's looking to set up land at this price?
No, it depends on the kind of jobs that they're going to create.
So is it linked? So TCS 1,300 crores, 2,000 jobs. How did you arrive at this 99 paise?
It's 12,000 jobs.
12,000 jobs. How did you arrive at the 99 paise?
Because it's an IT company and it'll create higher order jobs for us, and we believe that IT sector should be promoted because the kind of impact it has on the larger ecosystem is massive. And that's how we arrived with that. And we believe that that's how every state should actually compete and attract. And we felt that giving land at this price is going to create a unique competitive advantage for the state of Andhra Pradesh to attract the next wave of IT jobs coming in.
Okay, you said that this is going to be part of an IT policy as well. So is that IT policy going to now take forward the decision that was cleared by the Andhra Pradesh government? Will the contours of the policy reflect this deal that's been done with TCS, or will it be different?
No, it'll be quite similar to what we've announced recently, and we expect to bring that policy to our next cabinet meeting, which is the end of this month.
Okay, and what about manufacturing? I go back again, whether manufacturing should expect similar deals and similar pricing from you?
We've already done it. We've showcased it. Look at the way we've landed ArcelorMittal to Andhra Pradesh. We got Premier Energy to come set up their solar panel manufacturing in Andhra Pradesh. And we got Kia in our last term to Andhra Pradesh. And we got few other companies now already lined up to invest in our state. So we are offering favorable terms to investors based on the kind of jobs that they're going to create. And, they're really excited to invest. Even in the solar renewable energy sector, recently Tata Power has made an announcement to deploy 7 gigawatts of renewable energy assets in Andhra Pradesh. We are here. We're here to move fast, and the speed of doing business is the new mantra for Andhra Pradesh.
The speed of doing business is the new mantra for Andhra Pradesh, as opposed to the ease of doing business, which was anyway promised. But, I want to go back to the linkages. You said it will depend on the kinds of investments a company commits to making. So is there a bare minimum in terms of the quantum of investments, in terms of job creation? If you can give us some idea of what this policy will encapsulate in terms of the minimum required investment as well as the minimum job creation committed or guaranteed.
The IT policy will have a minimum job creation of 500 jobs per acre of land allocated. So that's going to be the thumb rule by which we're going to go. Renewable energy has a completely different parameters on which we take decisions on. The compressed biogas project, which Reliance Industries has landed in Prakasam district, they're going to do 500 plants. That has a completely different policy under the integrated clean energy policy. So we have very, very sectoral specific policies that are already out there. And those policies will drive our incentive packages to the various companies. And it's very dependent on the type and quality of jobs that they're going to create in the state of Andhra Pradesh.
Okay, so sectoral packages and each will be different depending on the kind of investments committed as well as the job creation that will accrue on account of that. But if I could also ask you to articulate for us, what is the current land bank that the Andhra Pradesh government is sitting on? How much is being allocated for these different sectors at this point in time? How much are you allocating, for instance, for the IT sector to start with?
If you look at it, APIC has close to 1 lakh acres of land already under its possession, and we are in the process of identifying another 2 lakh acres to create MSME parks in every assembly constituency of the state, because MSMEs also create substantial part of jobs. So that's going to be very, very critical for us. And IT is all about Visakhapatnam, and of course, we keep this open to the investor who's willing to invest. They can choose Amravati, they can choose Tirupati. The option is left to them. And we have substantive land available in all these zones to allocate to the IT companies.
Okay, so 1 lakh acres under the Andhra Pradesh government's current land bank. Are you looking at acquiring more? Is the state of Andhra Pradesh looking at further land acquisition at this point in time?
See, more than land acquisition, we believe in the partnership model where the farmers are also part of this entire growth journey. It's called the land pooling. And this is something that we've showcased in our capital, which is Amravati. So we're looking at making the farmers part of this growth journey. So, we will take land from them and they'll get certain percentage of developed land back. And they can also enjoy the fruits of development. And this is going to be very, very important that wealth trickles down all the way to the bottom.
Okay. I also wanted to get a status check from you on some of the conversations that were underway when you were in Davos. You did meet with investors there who were looking at the possibility of setting up facilities in India and particularly in the state of Andhra Pradesh. Has anything moved forward on some of those conversations? I mean, TCS is one decision that's been done. Anything more that we can expect?
Well, in the next 100 days, there'll be quite a few announcements coming out from our conversations at Davos. It's across the logistics sector, in the IT sector, with private universities coming to set up shops, set up the schools rather in Andhra Pradesh. So there's a lot of excitement across sectors and we are ready.
Shipbuilding was another possible sector that you were hoping to draw in investment. Is there an update there as well?
I mean, it's I think at this juncture, I'll be speculating. So you should wait for announcement and you'll be the first person to know it from me.
Okay, we look forward to that. But, you know, if I may, how much of the announcement is linked to the competitive federalism that we are seeing? I mean, you know, you were part of 6 states pitching your story to foreign investors, to global investors in Davos. They're trying to get pretty much the same universe, the same catchment of companies to set up shop, whether it's in Telangana or Karnataka or even in the north in states like UP, etc. How much of these incentives or subsidies for industry that you're willing to put on the table has to do with the fact that it's a fairly competitive environment? Have you been pushed to offer these sweeteners to draw in investment?
See, we're no longer competing with other states. We're also competing with other countries. It's very important that we understand that. You know, Vietnam plays a very important role in electronics manufacturing. So an investor who's looking at to invest in this part of the world is going to compare countries and then compare states. So it's important that we compete at that level. And I believe that this is very good. Competition is always good, and we learn from each other as states. And you know, some states have specific strengths, and certain companies sort of go in that direction. And Andhra Pradesh has its own unique competitive advantage, and that's what we're showcasing at this juncture.
So would it be fair, I mean, you have, of course, listed out a bunch of sectors that you intend to focus on, renewable energy being one of them, electronics, EV manufacturing, oil and petrochemicals, where we've already seen an announcement coming in, food processing, you spoke about MSMEs as well, IT, ITES. Would it be fair to assume that at least for now, in the near term, that IT and ITES will perhaps get top priority in terms of attempting to draw in more investors and more investment?
I mean, our chief minister is an impatient politician. He wants things to be done yesterday. He's very clear that we need to attract investments across sectors. I'm part of the cabinet subcommittee. I'm the chair of the cabinet subcommittee to create 20 lakh jobs in Andhra Pradesh. So our goal is to create 20 lakh jobs across sectors. And we have a very thematic approach based on the districts where we want to create the entire ecosystem, including education, skills, and the whole 9 yards in that particular district. And with a very thematic based approach, we are now building the entire ecosystem. And we believe that we're going to attract investments across sectors. We've already done it. You know, ArcelorMittal is done. We're attracting investments in the pharma sector. Compressed biogas is one thing that's done really well. Renewable energy is done exceptionally well. TCS is a great announcement. You'll see more coming in the IT sector. So it's quite diverse in that sense. The kind of investment we're going to attract.
You know, you talked about Vietnam, and you said that this is not just competition between states, but competition with other countries. In light of the latest set of tariffs that have been imposed by the Trump administration and the escalation that we are seeing at this point in time as far as the trade war is concerned, how do you position the state of Andhra Pradesh? Are you actively going to be reaching out to investors, particularly in the ASEAN region, who may be looking for supply chain diversification? Are you going to be focusing on Europe as well? I mean, which are the areas, which are the markets that you intend to go after, given the opportunities that you just spoke of that have opened up?
I mean, if you look at it, you know, as soon as this government came into power, we revived our Economic Development Board, where we have vertical specialists and we also have country-focused specialists. So we appeal to the broader diaspora out there, and we're looking at, you know, attracting investments across sectors and across nations, and that's been our core strength. So we've had Japanese land here, we've had the Koreans being part of our ecosystem, our growth story. Electronics, we've seen a lot of Chinese companies already investing in that sector. So we have been attracting investments across board, and not only that, we're also excited about Indian companies investing in Andhra Pradesh. I think it's very unfair to just chase international companies, but there are a lot of Indian companies who are willing to bet big on states that are very progressive and proactive, and even companies within Andhra Pradesh. So while I chase new dollar, I'm also focused on ensuring that the existing companies do not have any problems. It's been an amazing journey. The cost of doing business is low. The cost of energy is low. So this is something that we're very, very focused on. So it's inward looking. We're looking at our investments within our country, and then we're of course looking at investments across countries.
Okay, I want to focus on Amravati because that has, of course, been the Chief Minister's passion project. And with the funds, the 65,000 crore rupee phase 1 funding in place, of course, things are moving on that front. But what about the debt burden, which is very, very significant? And of course, you've been talking about that, and of course, requiring central assistance has been part of the negotiations that you had with the BJP and with the Prime Minister. 3.7 lakh crore rupees of existing debt. How do you address that? How confident do you feel about being able to address that at this point in time?
Well, we have close to 10 lakh crores of debt as a state. Yes, we had a lot of huge pending payments. Those liabilities also inherited from the previous administration. But if you look at it from growth rate, we are already number 2 in the country. Our aspiration is to grow at 15% year on year to be a $2.4 trillion economy by 2047. So the only way we can achieve all this is by speed of doing business. And being out there and attracting investments. This is going to be very, very critical, and aligning all the ministries with that agenda of creating jobs. So with this singular focus, we believe that we can actually grow much faster than any other state. And that will enable us to recoup and deliver on our poll promises also to the people of Andhra Pradesh.
Well, along with the investment-related milestones that you're hoping to clock, there is an important milestone for the Chief Minister coming up. He's going to be turning 75. Can we expect any announcements to mark that milestone?
Well, it's one more birthday for him. He's a 25-year-old impatient Chief Minister who really wants to do good for the state and the nation. So it's just another day for him personally. And, every day is a new day, a new challenge for us. And we attract investments every day and on a daily basis. So that's what makes Andhra Pradesh and this government unique.
Is he a tough taskmaster?
Absolutely, he is. No second thoughts about it. And he expects all of us to run faster than him, which, is a big challenge for all of us. But it's exciting to work with him, and we learn a lot on a daily basis. And him challenging us, pushing us to edge, enables us to innovate. And he's one leader who's given absolute freedom to ministers to do what they can do best and show results. And he only holds us accountable to outcomes.
Well, we do wish him the very best as he marks that milestone. But I want to end by asking, you said that the IT policy is going to go to Cabinet by the end of the month. But some of the other sectoral policies that you spoke of, have those been approved by Cabinet already, or will some of those also require Cabinet approval?
All those policies have already received Cabinet approval.
So those are already in place. The IT policy is the only one that requires Cabinet approval.
IT policy is already in place. This particular decision that we have taken, which we want to extend to various other IT companies and GCCs who want to invest in Andhra Pradesh, this particular thing would be an amendment to the existing IT policy. And that would be part of our next cabinet meeting.
Okay, so that's an amendment, because that's what I was wondering, because you had talked about nominal pricing for the ITES sector when we had last spoken. So this is an amendment to an existing policy that you're now bringing about in light of the deal that's been done with TCS.
Exactly.
Now, Lokesh, always a pleasure. Many, many thanks for joining us and explaining the rationale behind the big announcement that came in from the Andhra Pradesh government. Selling over 21 acres of land to TCS to set up an IT hub in Vizag in the state of Andhra Pradesh, and an amendment being brought in to ensure that similar terms will be offered to other ITES companies that are looking to set up in the state. A pleasure speaking with you. Thanks very much for your time. We are going to take a break here on the CNBC-TV18 Newsmaker. We're back in a moment with more.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host Surabhi Upadhyay. Today we are putting the spotlight on loans. Now, why are we doing that? The RBI has begun its rate cut cycle and there are several cuts ahead if you go by what market pundits say. So is this a good time to perhaps take stock of all your borrowings and find ways of maybe even reducing your overall debt pie? How can a borrower take advantage of rate movements to reduce the cost of credit? And what are the key things to keep in mind in case you're thinking of taking a new loan? To talk about all of this, we have two experts with us. I have Prithvi Chandrasekhar, CEO of Consumer Finance at Incred Finance, right here with me in the studio. And Radhika Binani, Chief Product Officer at Paisa Bazaar, is also joining in to help us make smarter decisions when it comes to our borrowing. So Radhika and Prithvi, great to have you both on the program. Welcome in. Let me start with one basic question. In my preamble, I said that this is the starting of the rate cut cycle because that's what we keep hearing from experts. Would you agree that this would be a good time for maybe some debt house cleaning for all the borrowers out there? Radhika?
Yes, definitely. It's a good time to look at what our debts, how our debts add up. It's a spring cleaning time. The cut in repo rates is a good indicator for us to look inwards, look at our finances and take advantage of how do we end up saving money on the debts that we have taken.
Okay, all right. Prithvi, your opening thoughts on this rate cut cycle that's now begun?
Two thoughts, Surabhi. First is any time is a good time for debt consolidation. What we've seen over the last 5-10 years is a lot of retail borrowers in India have accumulated a large number of small ticket, high rate loans and bringing them together into a single umbrella with a longer tenure and a lower rate totally makes sense. If the repo rate cut triggers some of that, great. However, the word of caution I'd throw out there is forecasting interest rates is a very, very difficult business.
Sure.
There are lots of pros who've tried to build their careers doing that, and mostly they fail. So for our consumers, I would almost say don't bank on rates continuing to go down. It's hostage to many things that happen in the world around us, which are intrinsically unpredictable. But if you have a lot of small ticket, high rate loans, do consolidate it. You'll save a lot of money, improve your credit history, plenty of benefit to doing that. Just don't link that to, the rate cycle.
Fair enough, fair point, which is why I guess even Radhika is saying any time is a good time to do some spring cleaning when it comes to a lot of multiple loans that you might have accumulated. Now, I want to ask both of you a very simple phenomena. We all know that floating rate loans should automatically keep readjusting as, the RBI cuts rates. But in reality, in the practical sense, I've had friends and family members one day wake up and say, hey, apparently rates were cut last month or 2 months back, but I'm still paying this much on my home loan or this much on a personal loan. So this whole concept of very transparent, automatic, clear transmission, Radhika, is that a bit of a utopian concept?
I don't think so. As long as the external benchmarks are being benchmarked to in your loan document, it will be clearly outlined what is the interest rate linked to. As long as it's external benchmark, the rate transition is automatic. But whenever the interest reset times are outlined as per the loan document. So we need to be clear about when the loan document. So if the rate cut, say, for example, happened in, say, February, hypothetically, and the loan reset date could be June for that particular bank or that particular lender. So it will start happening from June onwards. It's not as if as soon as the RBI announces, the rate transmission will happen. However, as a consumer, I think it's best for us to be alert and not assume things are working as it should work. Can always check back with the bank and they would give you when is the next reset date and what is it likely to be. So that's one thing. Second is they can, if you believe that the transmission has not happened as per for the last few years, as per how the interest rates have moved, it's always okay to explore balance transfer options and figure out how much is the current interest rate that you will get if you were to make that a new loan. And there is always a cost save to have, especially in a long tenor loan and a high value loan like home loans. So so one should go back and check periodically also what's the interest rate revision that has happened.
No, absolutely. We need to be alert as consumers and customers ourselves to, make sure that we take the full advantage of a changing rate environment. On this, Prithvi, I want to ask you, let's explain the concept of external benchmark rates very clearly to our viewers. What loans are externally benchmarked, and then what happens to the fixed loan that I might have? What recourse can I take there?
So the benchmarks are typically with the repo rate in India or equivalents of the repo rate, and it's similar around the world. That's basically the rate at which commercial banks can borrow from the RBI. And that's an input cost for the banks.
Yeah.
So when that rate is cut, their cost of inputs, the bank's cost of inputs comes down.
Yeah.
And they can typically lend more at a lower rate. And conversely, when the RBI raises the repo rate, the banks tend to lend less and at a higher rate. Now, this is an ongoing process.
Yeah.
Central banks around the world are changing the benchmark actively to manage the economy.
Yeah.
Now, some loans are floating loans where the interest rate that you pay is linked to the repo rate or
So
an
that's
equivalent.
what I'm trying to understand, that for most of these floating rate loans, would that external benchmark be the repo itself, the RBI's repo rate, or do they follow some other external benchmarks? What's popular in the market?
The repo rate is the most common one.
Okay.
It's the most common one. The thought I'd share, though, is that most consumer loans in India are not floating.
Yeah.
And this is by design because right now the rates are falling. They can also rise. And across the cycle, fixed rates give the consumer predictability, which they tend to value. So right now, if you want to take advantage of the falling rate cycle, I would echo what Radhika said. Probably the best way of doing that is through a BT, which is a balance transfer,
Okay.
which you will get cheaper today than you would have got 6 months ago because of the falling rate environment, right? Rather than trying to just ride the rate cycle without any active, steps that you take to control the rate. Because personal loans, credit cards, most auto loans, a lot of small ticket mortgages, unsecured business loans, which are used by self-employed people, a lot of these are actually fixed rate loans. And that's for a good reason, which is it offers the consumer predictability. But that also means the transmission of the lower rates through the system happens much more slowly than you would intuitively expect.
Radhika, coming to you on this, so like you explained and like how Prithvi is explaining it, that for floating loans, your home loan or maybe your car loan, eventually, like you said, when the reset happens, you should get the advantage of the lower rate. The problem is high cost fixed loans. That's what Prithvi is saying. A lot of the consumer loans actually are fixed loans. So what should I as a borrower be doing if I realize that I'm sitting on a 12-13% high cost fixed loan?
First step is you go to your existing banker and ask what is the best way for me to manage at this point of time. Can I move from fixed to floating? Some lenders agree and some might not. The second step is to look at coming back to the basic again, which is balance transfer. You could look at marketplaces like ours where there are various lenders and look at what is the best rate which is getting offered for your credit profile and your income profile. And look at what are the options that you have and do a balance transfer. Weigh it against the processing fee and the money and the outstanding amount that you have. For example, if it's a 5-year car loan and you're already at 4 years plus, so the amount of processing fee plus the hassle of changing it might not be worth the amount you will be saving. But on the other hand, if it's a 20-year home loan and you've paid only 5 years and there is 15 years of repayment pending, so then definitely it makes a lot of financial sense to get the balance transfer going, because there is, again, you will be treated like a new consumer. So you'll have to do the entire processing of documentation again. But it's well worth it. And there are also balance transfer calculators for you to calculate what is the interest saving over the tenor, balance tenor. So it could run up to lakhs if you are talking about fixed versus floating, especially in a falling rate cycle. Plus also, I think while Prithvi talked about consumer loans being mostly fixed, but typically high value loans are mostly floating. So even in floating, because there there will be an interest cycle. So 20-year is a long period, so there will be interest cycles. So there is always opportunities for us to keep looking at how do we do the transfers intelligently to help you make save money, but at the same time balancing with the processing cost as well as the processing time and energy that you spend.
You know, since both of you are saying that balance transfer is a great tool to reduce, perhaps in many cases, maybe it can help you reduce your cost of borrowing. I want to get your sense on this whole concept of the balance transfer. And typically, you know, if there are any rules that apply. So Prithvi, is it that, let's say, maybe smaller banks who are looking for business or smaller NBFCs, can they be a good option for a balance transfer? Do they give cheaper rates, or is it big banks because they're big and size matters? I want to know if there's any method to the madness when you're out shopping for a better rate.
Typically, the biggest banks can offer the best rates because their cost of funds are lower. Typically, what happens is that the smaller, higher price loans are from smaller organizations, NBFCs or smaller banks. And the consolidation happens to a big bank. But there are hundreds of exceptions, right? I mean, if you're transferring to a Tata Capital or an Aditya Birla Capital, you could actually get a bank-like loan.
Because they're giant NBFCs.
They're giants anyway.
I
mean, they're actually NBFCs, but they're bigger than many banks in the country.
True.
So it's not a generalization saying, you know, that the BT out will happen to a bank, but the bigger organizations with a lower cost of funds are typically the destinations of the BT.
Got it. Radhika, very quickly, before we take a break, your take on the same thing. If I have to shop around for a smarter loan and do a balance transfer, then do any house rules apply?
Yeah, like Prithvi said, the rules, you make it on the go. But yes, basically the brand names don't play much. It's not a bank versus any other organization. Yes, the larger banks and larger organizations will help you get better deals on the loan. So you'll have to look out for what is the size of loan they're offering, what is the interest rate, of course, because like sometimes the NBFCs could have a slightly higher interest rate than a bank. So you have to look at size of loan you're getting, the interest rate, the processing times, and the processing fee, which is this one. These are the 4 things which you look at and compare and then take the best bet.
All right. Sounds very, very logical. We do have to take a quick break on that note. We come back on the other side and then we talk about people who want to take a fresh loan right now. Maybe a new house, maybe a new car, maybe some big ticket, spends in terms of home improvement. So how should they go about it? We'll discuss it on the other side.
Let's talk money. Who gives you a head start to your trading day? Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m. Let's Talk Money.
Welcome back. This week we're talking about how you as borrowers can benefit from the fact that the RBI has once again started cutting interest rates, and the expectation is that the rate cut cycle should see at least a couple more cuts come through. So, of course, we've got both Radhika as well as Prithvi right here with us, and we're carrying on the conversation. Now let's talk about people who want to take fresh loans. And, you know, typically when we talk about a rate cut cycle, people get a little, you know, invigorated to think about whether now I should buy a car, maybe, you know, take the plunge, buy that house. So how should one go about it? And, you know, what would your suggestion or advice be, Radhika?
Firstly, the tail cannot wag the dog. So you need to buy, if it is in your financial plan to have a house or a car, is when you should start thinking about buying that. It's not because it cannot be triggered by interest rate cycles. So in that sense, assuming that it's part of your larger financial plan, that you want to be a homeowner, you should consider that.
Sometimes, Radhika, I take your point. I take your point completely. I was just saying sometimes, you know, the fence sitters, sometimes when they start seeing the headlines on big rate cuts, something that you've been avoiding or you've been sitting on the fence, at times it kind of, you know, can be a trigger. That's where I was coming from. But please continue.
Yeah, thanks. So home loan is a 20-year kind of an investment. Typically, the average, you take the loan for 20 years. So at 20 years, invariably, there will be 2 or 3 credit cycles. Not many people can predict, but there would be eventually 2 to 3 credit cycles in a 20-year period. So you definitely cannot time the market, because you'll have to go through those 2-3 cycles irrespective of where you start. So in that sense, you would get opportunities to be able to balance transfer if the interest rates go down. And similarly, when the interest rates are going up, your loan will get repriced. So as long as home loan is concerned, there is never, as in the home loan rate cut is not going to be a trigger. You should continue with your plans of buying a house. And if you're sitting on the fence, it's a good time to start buying the house, as long as it's part of your larger financial plan. Now coming to shorter term loans like a car loan. So car loan, definitely, if you're a fence sitting and you believe that car loan makes sense because it's a depreciating asset compared to a home loan. So if it makes sense and it's only because of the home loan you're trying to optimize, I think car loans you could start exploring, and later you can reprice it. You can go in for a floating rate and you can reprice it in case it's going to bottom out further. You could net, the point is you can't time it. We are not economists. We cannot time it. Like Prithvi had mentioned in the past, people try to predict but end up not being able to do that. So, but since it's a floating rate, you have the advantage of repricing, balance transfers, looking at marketplaces and being able to take the right decision at different points of time. And it's fairly transparent. It is a good time to start off in case you are sitting on the fence, and it's part of your larger financial plan.
Okay, absolutely makes perfect sense. Now let's talk about the whole balance transfer concept, because both our guests touched upon it, and that could be a great way to lower your overall cost of borrowings, perhaps get rid of certain, legacy loans on which you're still paying high interest rates. So Prithvi, basic question here is, remind us of the big categories where the rate of interest tends to be fixed. Like you said, most personal loans, it's fixed. What are the other loans where you might be stuck with a higher cost old loan, which may now need to be sort of relooked at?
The type of loan is actually not the key. The real question is, is it a fixed rate loan or is it a floating loan?
Mm-hmm.
And you could have fixed rate and floating loans in pretty much any product.
Sure.
So you could, personal loans, credit cards, consumer durable, they're almost always fixed.
Yeah.
But something like a mortgage, there are several fixed mortgages and there are several floating ones as well.
Yes.
Or similarly for car loans or auto loans, they're in the middle.
Okay.
Now, if you've got debt which is on a fixed pricing schedule, now is a great time to basically take a bigger loan at a lower rate.
Okay.
Ideally using both the reducing repo rate and your now much stronger credit history to get a big pot of money, use it to settle and close all these small loans.
Okay.
And pay a much smaller EMI over a longer tenure and save yourself some money.
So give us an example of that. And, are such loans easily available? Because if I go to the lender and I tell them I have 5 outstanding loans, 7 lakhs here, 10 lakhs here, 4 lakhs here and there, and then I want to consolidate all into one loan. First of all, what kind of a loan will that be? This big consolidation loan. And again, what could be the rates of interest? What could be the processing charges? What all should I keep in mind when I'm looking at consolidating all my debt into a lower price loan?
It's a great question. Typically, it's a unsecured loan. It's a bigger unsecured loan.
Okay.
In principle, it could even be a secured loan.
Okay.
When I worked in other countries, I've seen, basically home equity being a way of borrowing at a low cost and using home equity to close off a lot of, higher priced loans like credit card debt. I don't think that cycle is as well oiled yet in India as it needs to be. But things like the repo rate cut we've just seen could actually trigger that.
Radhika, very quickly, we're running out of time. Same question to you. What loans should I look for if I want to consolidate a lot of my higher cost debt? And overall, what are the things to keep in mind when I'm doing this sort of a consolidation / balance transfer?
Yeah, I think Prithvi covered it in detail, but one aspect which we are seeing and also could encourage consumers is making your assets work for you. So over time, people have accumulated, say, gold, mutual funds, and they have a car, or even they might have a property. So taking a loan against any of your secured your assets, converting them into a secured loan is a very smart way of getting yourself a loan which can use to repay your other high value loans, because typically secured loans are the interest rates are much lower. You can get at least 50 to 70% of loan to value. So if your property value is 20 lakhs, you could get up to 14 lakhs of loan. Or even if you have gold for 5 lakhs, you could mortgage it and get around 3.5 lakhs of loan. So making your assets work for you taking a secured loan is one smart strategy of debt consolidation. What also it helps you, it's an additional supplementary benefit, is that in your credit profile, your mix of unsecured and secured loans improves. So if a person has more secured loans than unsecured, your credit score improves, and that's a great plus for consumers. The strategy is not known to many, but I think now with people investing in stock markets and having that portfolio, loan against mutual funds, all of that is coming up, and there is demand which is coming up, which we can see on our platform.
Absolutely, and that's a great strategy. Thank you for sharing that. Those are the ways. Take a secured loan against assets and pay off a lot of the old high-cost debt. Radhika, very quickly, last 30 seconds left. Now, recap for us the checklist, the hygiene elements that we should always check before deciding to take that loan. It could be any loan.
The amount of loan which you want to what you are getting, interest rate, processing time, processing fee, and accessibility post-loan, the post-loan serviceability. These are the 5 things which you can check. Additionally, one small point, it's almost like a hack. When you're taking a home loan, go with a larger bank, because the property will be scrutinized and you can be sure that property you're buying is of great value. So that's just a hack.
Okay, absolutely. Another great piece of advice, that you can have a clean title. You can reasonably have a peaceful night's sleep if the bank has done the due diligence for you. Well, thanks very much, Radhika and Prithvi. This is a very helpful conversation, and hopefully our viewers will make use of it to improve their overall debt profile. Thank you for watching. Well, we're out of time on this edition of Let's Talk Money. Keep sending us your feedback, comments and queries. See you again next week.
Let's Talk Money.
Hello and welcome. You're watching News Center. I'm Parikshit Luthra. Market regulator SEBI has barred Gensol Engineering's promoters Anmol Jaggi and Puneet Jaggi from the securities market and from being directors on the board. SEBI has ordered a forensic audit accusing the company of fund diversion, round-tripping and breaching trading rules. The SEBI's interim order revealed that the promoters raised money for the company but instead allegedly used it for personal purposes and in the process misled investors. Anmol and Puneet Jaggi, the founders of Gensol Engineering, a company focused on solar energy and EV leasing, are also the founders of electric cab service Blue Smart. As per SEBI's allegations, a part of the funds raised to buy electric vehicles was transferred to private entities of the promoters. SEBI discovered that 26 lakh rupees was spent on a golf set, 3 lakh rupees on a trip, 66 lakh rupees on foreign currency, and 33 lakh rupees on an American Express card bill. SEBI also flagged instances of market manipulation where 10 crore rupees was round-tripped from Gensol Engineering to subscribe to its preferential issue. Remember, this is an interim order by SEBI and a forensic audit could unearth more details of the money trail. Meanwhile, Blue Smart has halted its cab hailing services in Delhi, NCR and Bengaluru after SEBI's order. Joining me now is Hetal Dalal, President and CEO at Institutional Investor Advisory Services. We'll also be joined by J.N. Gupta, founder at the Stakeholders Empowerment Services. Hetal, if I can begin with you. From the SEBI order, it's clear that the Gensol promoters were using the company as their personal piggy bank. What was the biggest red flag for you and the biggest question for the promoters?
I think the fact that the company had related party transactions and so many of these is inherently a warning signal to start with, right? The fundamental question, even when you look at all the resolutions which have been passed for the company and the transactions, the annual report, the question you have to ask is why is the company supporting so many group companies? You know, from saying that there is this whole set of promoter companies to which it is providing guarantees and fund support, to the extent of saying that, you know, if Blue Smart is a separate fleet operator, why does the company need to buy and, you know, become a lease operator for that fleet operator? There's no reason really for all of this to happen. So essentially the balance sheet of the listed company is being leveraged for all the excesses for the promoter as well as, you know, supporting Blue Smart, which is clearly also a promoter-driven company. So I think just having so many related party transactions, asking, you know, this is essentially a red flag in terms of just asking why should so much of support be given to parent companies. I think the other piece when you look at it is really cash flows. When you look at the company's growth, really you have to figure out whether it's finally resulting in cash. Cash is really king. And while the company is showing increasing revenues, increasing profits, is it really showing you that degree of cash flow also which is getting generated from the business? And if you look at Gensol's numbers, you're not terribly convinced that the operating cash flow is so strong for you to think that the growth is that real. I think the third thing, of course, is looking at the promoters' backgrounds, what have they accomplished in the past and why have they listed this particular company. And fourth, also the shareholding. You know, where promoters are losing equity, you look at it when the promoter shareholding from March 2020 to now, there's been a significant drop from about 70% to almost become half. And the kind of promoter pledges of the pledges of that equity, right? So the promoters pledging equity and consistently the pledge quantum is increasing. That is indeed a warning signal in terms of why is the shareholding being pledged and can this therefore be a result of change in control? And if the equity is being pledged, there is clearly debt being taken. So where is the money going? Is the promoter taking money for their own personal capacity? Is it being used in the company? And at the end of the day, where is the money being used, even if it is being raised? So I think some of these things are very clear, simple red flags that investors could have picked up very early on in the story before, and is also clearly getting pointed out in far more granular detail in the SEBI order.
Right. But Hetal, one, of course, is a clear lapse of governance procedures. But at the same time, what about the responsibilities of the board, of the independent directors? Currently, SEBI has taken some action against the promoters of the company. What more do you expect?
No, I think there is very clearly layers of failure, if you ask me. You know, from the audit committee failing in terms of being able to capture some of these issues and be able to ask the right questions. You know, addressing issues around support to group companies, also this whole leasing to Blue Smart. All of these are not really the ordinary course of business for a company which is essentially in the EPC for solar projects. So I think the audit committee failure, it does exist. The second failure will be for the auditors. Why is it that so much of round tripping is happening? The auditors haven't managed to catch it for so many years. So I think these would be the two critical failures that you would see from a governance standpoint: the audit committee, the board, and also the auditors.
Right. Mr. Gupta, thank you so much for joining us as well. What do you expect SEBI to do next? Now, this is a very detailed investigation that has happened over the course of the last 1 year. There was a complaint that was received in June, or probably before that, last year, and then an investigation followed. There have been visits to their so-called manufacturing facilities as well, and in the order, it is well stated that when the officers visited these particular sites, there was no manufacturing actually going on. There were no bills for electricity as well. What do you expect SEBI to do now? And do you feel that this could also result in other investigations around round-tripping of funds, about maybe money laundering as well?
Thank you. The issue is very clear that if you are having a thief or a person who is wanting to commit fraud, it is very difficult to stop the fraud ab initio because you don't know which direction you will go. But the fact that this fraud has taken place, this tipping has taken place, you can't put the blame only on the promoters only. The promoters could not have done anything unless entire team of the finance department was with them. Because the moment some bills are coming, some things are going to the thing, you have to have a backup of a contract and you understand that what is the contract. So the issue is very clear. Frauds will continue unless until you start catching people who are part of the chain. As Hital has very rightly said, that audit committee, auditors, board, everybody, see what happens when you put a board, when you ask independent directors, you feel that independent directors are much more capable than the people who are managing the company so that their wisdom can be used. Now, when you say independent director turn around and say, how can we do, what we can do if this is happening, then let us not have a board or let us not have an audit committee if the frauds have to happen. Having said that, it is not a case that all 1,000 companies or 5,000 companies, this will be there. But again, the issue is that if this is happening in 10 companies or 20 companies, it is a serious issue. The other point is very simple, as you have been showing the round tipping and something. Everything is possible to be changed because the merchant banker who is doing preferential offer would certainly know from where the money is coming. If you look at many preferential offer, not of the big company, but a small company, you will find that they have been putting money, which is much more than what dividend they would have earned from the company or what they would have earned from the selling the share. Unfortunately, we are not able to trace what is the origin of fund and what is the destination of fund. This is one part. The second thing is this, the issue is, if you look at the shareholding pattern, hardly there is any institutional investor. Everything the promoters have been able to palm off, they have been palming off to retail investor. So my issue is very simple. Surveillance of SEBI should also be very, very focused on such companies where, although institutional is absent, but the share prices are rising, the performance is superlative and something. Imagine a situation where all the people who got lot of wisdom, 40 mutual funds, 10 insurance companies, hundreds of FIIs, and a company is giving superlative performance, profit multiplying from 1 to 240 times, and nobody is willing to invest. So there is something wrong somewhere. So we will have to be a bit step further than these promoters. Now the issue is that the promoter buying some 100 crore, 50 crore apartment for themselves. It's an issue where you have not earned the money, but you want to live in luxury on the borrowed or public money. And fraud of giving IRDA or PFC letter, I think this is a criminal case and this they should be proceeded against. But I would say, please put in loop company secretary, CFO, accounts department, audit committee, board, and statutory auditor and secretary, all. Don't do anything, at least call them for investigation so that message goes round that if you are part of this whole game, one day SEBI is going to call you. It is not necessarily
That's
you
an important
punish
point,
them,
sir.
but call them.
Right, right. Hetal, if I could come to you, what is the lesson in all of this? Of course, for retail investors to be more vigilant, but on the other hand, we do see some level of scrutiny with regard to companies which were startups, recently got listed. There seem to be governance lapses, and many observers say that your intent may not be wrong, but you are in a rush. You are ignoring governance norms in the process. Do you see that happening across companies? Is that something that your organization is watching out very clearly for?
So look, I think to paint the entire market with one incident, I think is unfair. You will see governance failures across markets independent of how developed they are. So this is clearly, one has to use some of these examples sort of in moderation. But when you look at governance failures, see, this is essentially fraud, right? If the promoter has an intent to defraud the investors or defraud the lenders, then that's just intent. But when you look at broadly from a governance perspective, we did an analysis a couple of years ago to look at the governance of companies which are recently listed 3 years and prior, with 3 years of listing experience, and those which have been listed for a much longer time, the BSE 100. And clearly, we found that the quality of governance for newly listed companies, there's a significant difference between those at BSE 100, which are mature businesses, which have been through the cycles for a long period of time, vis-a-vis those which are newly listed. And that's a function of the fact that when you look at companies which are newly listed, they're still understanding the whole game of public market investors and what it means in terms of their own expectations. So their governance structures are still nascent and not necessarily tested. Are they always bad? I think that's too much of a broad brush to use. But to be fair, when you look at well-governed companies, what we typically see are three commonalities. One is a fairly diverse board, not just from a gender perspective, but also from a skill set perspective. Second is a very high degree of independence of the board, right? So board independence levels are high. So it's not about your regulatory checkbox of saying 33% independent directors or 50% independent directors, but by and large, you'll find almost 80% of the directors on the board are independent. And the third thing you find is a very large institutional ownership. Now, you may argue the chicken and egg, does the company attract more institutional ownership because it is well governed, or do institutional investors bring in better governance or compel better governance? That's indeed a question which we can keep sort of toying with. But these are the three broad commonalities that you see for well-governed companies. And therefore, when you look from an investor's perspective, if you're trying to figure out and you don't have a great understanding of what these companies are, but whether they're well-governed, I think some of these things are good checkboxes to have, and it gives you a certain degree of a higher degree of comfort. Of course, quality of the board is something you must look at in terms of what is the experience, how, where do all these promoters, where all these independent directors come from. And some of these background checks need to be done. But by and large, when you look at the comparability, this is really what you see between companies which are recently listed vis-a-vis those which have been listed for a very long time.
Right. That's an important point, and that's a lesson for retail investors as well. But Mr. Gupta, what would be your view, and what can the company now do? Of course, there is a legal recourse that the promoters can take. There may be more action. But what are some of the checks and balances or corrective measures that the company can take immediately as well, according to you?
See, first of all, I will come to the point Hetal said, that board people in the board experience something, and I will take you to ILFS. ILFS had probably the best possible board, but there was a mess there. So it is not a guarantee that if you have a board which is good will be there, because it depends upon how the board is performing. And performance is not guaranteed just by the name. That is one. The second thing is this. I will say with the full responsibility that it is an unfortunate situation in our country that legal system is such that even after finding all this, we are talking about that the promoters have a legal recourse to do something after forging and taking company for a ride. That is one very, very sad part, because of that only we are not able to move to a governance standard which will give comfort to all investors. Having said that, the next course of action would be that further investigation, forensic audit has been ordered, and then SEBI should find out who else are also responsible for this mess. It is not promoters are the beneficiary, but who has allowed them or who has facilitated their benefit. Then we will find out who are the more people to there. Next is how to stop this. I have no clue how to stop it unless until everybody starts playing its role. See, the lawmakers can at the most provide the law. They can provide the check post. But if the check post people are sleeping, then what do you happen? Or if the check post people are in connivance, what do you do? So the issue is very clear. The laws are made, they have to be enforced very strictly, and the courts have to be seized of one issue. When issues like this come, don't look SEBI as a litigator. Look at millions of victims who are there as a litigator.
That's an important point. My final question, sir, very briefly, what is the message that SEBI should send out with this case, according to you?
See, the SEBI should have sent out very simple message that we mean business. We will not let you go. We will not let you go scot-free. And we will go after anybody or everybody who has been part of this mess.
Right. Thank you so much, sir, for joining us. And thank you very much to Hetal as well for those important views. Clearly, lots of lessons there for companies, listed companies and retail investors as well, when they and when actually they should sit up and take view and take stock of such situations. We're taking a break, but coming up on the other side, the Supreme Court grills the government over the recently passed Waqf Amendment Bill as it begins hearing a slew of petitions opposing the new legislation. Details in just a bit.
The president has been quite clear they must follow federal law. He also wants to see Harvard apologize, and Harvard should apologize for the egregious anti-Semitism that took place on their college campus against Jewish American students. There were professors who said that he had engaged in discriminatory behavior against Jewish students. Of course, you had the former president of the university saying bullying and harassment depends on the context. You also had an encampment on Harvard Yard that we all saw play out before the cameras. The university failed to impose formal discipline on any students for this anti-Semitic conduct violations, including the occupation of a campus building and the disruption of classes with bullhorns.
Shifting focus now to the commodities market, gold prices touched a record high as more and more investors shift towards safe haven buying. The yellow metal crossed the $3,300 an ounce mark for the first time. In the domestic market, 10 grams of 24-carat gold costs around 95,000 rupees. In the last 4 months, gold prices have surged 25%. Manisha Gupta is here with more on the gold rally.
It's bulls in absolute control when it comes to gold prices, and we've seen a one-way rally since the time this year has started, and we've seen an all-time high above $3,300 an ounce. Now, for the Indian markets, the prices have crossed above 95,000 rupees per 10 grams. We are just 5,000 rupees away from a lakh rupees per 10 grams of a price on exchanges there. So very, very strong, heady momentum on the higher side in case of gold there. We are up by 26% in this year for gold prices, and this is above 28% of gains that we saw in the previous year as well. Well, the chart that comes up on your screen tells you on how we have been in the past many years. I've taken month of April as on the higher side here. So when you look at the last year until now, the last 12 months, the $1,000 per ounce of a rally that we've seen in prices has perhaps been the fastest gain that gold prices have ever seen in any year. So this has been a very, very strong gain. We are nearly 40% on the higher side till time here, and the markets are anticipating higher highs from here. The reason for that is because you still have a lot of uncertainty in the global markets. The tariff concerns. Tariff can lead to recession concerns. We also are looking at very strong buying in the Indian and the international markets when it comes to investment in gold. The physical jewelry demand, of course, has gone down a bit. Also, when you look at from 2000 to 2025, the 25 years that is, the gold prices only have given you 2 years of negative return. The rest of the years, gold has rewarded you well. Apart from that, the US debt, the world debt on the higher side also has been supportive for gold. You also have safe haven buying on the back of geopolitical tensions. The dollar index trading below 100 now have been supportive factors as well. And the markets do believe that going forward, we are in uncharted territories, but the momentum is still on the higher side. Should you short at these levels? Maybe no. A correction should be coming? Well, yes, but not at these current levels. So when you look at various banks and brokerages, they have been upping their forecast in sense of gold. Goldman Sachs now talks about $3,700 an ounce on the higher side. Deutsche Bank also has put out $3,700 of a level. Bank of America talks about $3,350. Citi and UBS are talking about $3,500 an ounce, which is still $200 away from here, higher from here. And then, of course, you have De Beers, Swiss Asia Capital, all putting out very, very bullish cues from here. Well, the markets believe that these levels are achievable if the tariffs remain where they are. The interest rate cuts is what the street is anticipating right now. So most of the fundamentals factors are supportive. Even if US and China do sit together and negotiate on the tariffs there, markets believe that would shave off perhaps $200 to $250 an ounce from here on. But $3,000, $3,200, even in that case, seem like a strong support at this point.
Thanks, Manisha, for joining us. Now, the Supreme Court began hearing petitions filed against the Waqf Amendment Bill. The court grilled the government and even proposed to stay parts of the new legislation. The apex court questioned why people practicing other religions should be part of the Waqf board. The court asked if the government will allow Muslims to be part of the Hindu religious trusts. Ashwin Kumar is here with more on the first day of hearing and some scathing observations by the top court.
Well, an important day in the life of the newly passed Waqf Amendment Act, the Supreme Court contemplating a partial stay of various provisions of this very same act, which till very recently was making headlines in the Parliament. Now, what are the aspects that the Supreme Court is thinking about? Well, one of the concerns that has been voiced by the Supreme Court is the discontinuation of Waqf by user. This was a legal doctrine which was available in the earlier version of the Waqf Act, which basically said that a property that's being used for a religious or charitable purposes over an extended period of time can be recognized as Waqf. However, this has been discontinued under the new act. Now, this was cited as a major concern by the petitioners and also by the apex court. The Supreme Court, in fact, questioned the centre how it could turn the clock back and seek a registration of properties which were built hundreds of years back. In fact, the Supreme Court cited the example of the famous Jama Masjid in Delhi, saying that it was built hundreds of years back. There was no concept of registration, and therefore for now, in 2025, for the centre to insist on some formal registration to recognize a property as Waqf would be impossible to do, would be impossible to perform. And this was a question that was posed to the centre, and it is on the back of this that the Supreme Court observed that it is contemplating, it is thinking of passing an interim order that any property that's been declared to be a Waqf property will continue to be so and will not be denotified under the new act. That was one. The second is with respect to the presence of non-Muslim in Waqf Council as well as Waqf boards. Now, this new 2025 Act essentially provides for presence of non-Muslims as well as a part of the Central Council as well as of the state boards as well. Now, this is something that the apex court frowned upon. The Supreme Court said that most Hindu endowments that the Supreme Court is aware of are in fact managed by Hindus themselves. That in fact, even asking a very pointed question of the centre, that is the centre willing to put on record that it will allow Muslims to be a part of the managing committee of Hindu endowments? No answer fell from the centre, and therefore the next observation that fell from the apex court is that it is considering a partial stay of the provisions with respect to continuation of non-Muslims on the council. It said that it is thinking of passing orders that outside of the ex officio members, none of the other members will be non-Muslim. So these are considerations as of this stage. No final orders, no interim orders have been passed. The Supreme Court, we understand, will resume hearing in this case tomorrow at 2 p.m.
Right. Thank you very much, Ashmit, for joining us. Chief Justice of India, Sanjeev Khanna, has named Justice B.R. Gavai as his successor. Justice Khanna wrote to the government proposing the name of Justice Gavai. Chief Justice Khanna is set to retire on the 13th of May and Justice Gavai is expected to take oath on the 14th of May. Moving on to the real estate sector, Trump Organization's licensed partner in India, Tribeca Developers and Smart World Developers, are bringing the second Trump Towers in Gurugram at a cost of 2,200 crore rupees. Gurugram is the only city outside North America to have two Trump residential projects. Timsi Jaipuria caught up with Kalpesh Mehta of Tribeca Developers and Pankaj Bansal of Smart World Developers to find out more about the 52-storied towers.
This is actually a very exciting announcement because Gurgaon is the only city in the world outside of North America where there is a second Trump residential project being announced. And there's multiple reasons for that. The first one being the first project that we launched in 2018 was incredibly successful. It is widely regarded as being the best project in Gurgaon. People who bought with us back then have more than doubled their money, and the product has been extremely well received. The Trump Organization is very happy with the delivery. And over the last 7 or 8 years, the M3M/Smart World, Tribeca, and Trump partnership has turned more into a friendship. And that's why they took this decision to do a second project in Gurgaon with us. As far as the details are concerned, it's 2 towers, about 52 stories tall. We'll have 3 and 4 bedroom apartments ranging from 3,000 square feet to about 5,000 square feet.
When we talk about other towers, as you said, we already seen the first tower getting now close to delivery. By when do you plan to deliver, and what is the current status of other projects in India?
Sure. This project we should get delivered in a couple of weeks, I think, Pankaj. The Trump Towers in Pune is already delivered. The Trump in Mumbai is already delivered. This is almost delivered. And in Calcutta, we're delivering by June. So the first lot of 4 projects is already delivered. A month ago, we announced a 5th one, and today is the 6th one.
What are your investment plans for next 2 years?
We're looking across, between Trump and Tribeca, I think we'll do, last year we closed about 2,000 crores of revenue. This year the target's close to 4,000 crores. Investment-wise, I think we're looking at about 2,000 crores of investment this year.
Any plans for listing? Because we are seeing a lot of real estate players coming on board and listing, getting in IPOs. Any plans on that?
So I think, yeah, that's an exciting journey which we're planning for. The merchant bankers are already on board. So we'll be hitting the market by 27, 28, and we'll list Smart World.
And what would be the portfolio size by then? Any estimates, or what would be your revenue by then?
So total revenue by then, with sold and unsold put together, would be about 32,000 crores, with an area under development of 18 million square feet. And this will precisely be so 90% of the business will be in Gurgaon and 10% of the business would be in Noida.
When you talk about IPO, any amount that you've decided on? How much do you plan to raise from the markets?
Not yet. So I think we are pretty cash rich. So we are zero debt as we speak. So there is no intent of raising much money from the market. But yeah, the idea is to make company very, very high on corporate governance, high on transparency, and high on delivery. So that's the whole intent of moving into the IPO world.
What about this particular project, the second Trump Towers? How are they priced? And what is the size? Are you looking at any further expansion? Are you looking at a phase 2 of the project?
No, there's just one phase. So these are 2 towers standing 200 meters tall, 50 story. There are 3 sizes which we have in this tower, which is 3,000, 4,000, 5,000 square feet. The price, all-in price to the buyer, which we are offering, which is a very, very great price as we speak in today's market conditions, is about 27,000 rupees a square feet for the buyer, which makes a minimum investment of 8 crores, goes up to 12 crores. So we have about 300 odd units. And I think the response which we have received so far is tremendous for the first one. The second one also, we're expecting that will be done with the sales of 50% of the project within, say, 2 to 3 weeks from now.
When we talk about Trump residencies, any special USP that we'll see in this particular project?
After the success of the first one, the pressure on us was very, very high to deliver something even, bigger and even more jaw-dropping. So you will see it soon, but a couple of things I can announce today. We're doing India's first aquarium bar. Right? You see that abroad. but it's a pretty massive aquarium in a bar and a restaurant. And there's a few other jaw-dropping amenities that we'll be releasing in the coming days.
All right, so Gurugram set to get a second Trump-named residential project. That's all we have time for. Thank you for watching News Center. Goodbye.
The per capita consumption in the country now is more than 100 kgs per person, and it has been seen with respect to other countries that when a country goes at this level of 100 kgs per capita consumption, then the elasticity with respect to GDP growth rate increases. So till now it is 1.2, 1.4. Now I expect that the elasticity will be more than 1.5. So even if with that, if you see our GDP growth rate around 6.5 or so, then the steel consumption should grow about 10%.
It's wonderful to be back here to talk about the triple bottom line, which is the 3 Ps that we intend to focus on today: people, planet, and profit. Perhaps the last one is the easiest to sort of get a conclusive view on from the gentlemen who are here with us on this panel. But I want to take off from where the minister left the conversation. And he was absolutely right. Very often what tends to happen at conferences like this is that there is a lot of lament about state of affairs, where we find ourselves, what the road ahead looks like, but very often that doesn't actually translate into action. So we will, of course, do the chinta and the charcha, but hopefully at the end of this conversation we should have an execution roadmap on how we intend to tackle the 3 Ps, people, planet, and profit, as far as India's tourism opportunity and tourism industry is concerned. You know, what we also want to talk about is the fact that it's a story of contradictions. On one hand, we talk about the fact that India has so much potential. This is a low-hanging fruit as far as the multiplier impact that this industry can create for the economy. We still don't do anywhere close to the kind of numbers that our neighbors, for instance, do, even within the region. So what holds us back? And on the other hand, when we talk about some areas where we have seen rapid move to commercialize and open up the tourism sector, there are concerns about whether that is sustainable or not, and how we've actually allowed these spaces to be over-commercialized. So to find that balance is also going to be very, very important as we move forward. But without further ado, we have all stakeholders. As we talk about sustainability, I also hope we bring in the aspect of inclusivity as well, and I hope the next time we have this panel, there are more women on this panel as well, excluding me. So I hope we do have inclusivity and sustainability
sustainability as part of the agenda going forward. But Mr. Billa, let me start by asking you, because as the Minister said, it has to be an ownership approach that's driven by the political leadership, by government, not just in terms of the decisions that you make, but also the money that you intend to spend. This budget actually put the focus on the tourism sector. We did see some specific measures that have been long-standing demands of the industry getting taken care of to some extent. Can you now give me a status check on where things stand as far as this fiscal year is concerned? But more importantly, as you look at the opportunity, as you look at the potential of this sector, what do you intend to prioritize now?
Okay. So let's start with the problem statement. What is the problem statement today? The issue is that today demand is outstripping supply. Because for the past 10 years, we've been the fastest growing large economy that has put money in the pockets of people. Youngsters are traveling much more aspirationally. And if you look at the destinations that we've had, we've probably, except with the exception of 4 or 5 destinations, most of the tourist destinations, we've not developed any over the past 50, 60 years. So what the situation that we have today is that most of our tourist destinations are getting overcrowded, are getting filled up to capacity. The second problem statement is who is there to manage these destinations? Because we have governance at the national level, we have governance at the state level. At the destination, who is putting on the thinking cap to say that how do we manage this destination in a way that the tourist experience is great and it's also great for the host community? Yeah. So, but this is not something that can be driven by a fiat. And as the Minister said, this will have to be done collectively, is something that we need to do. But from a policy perspective, we need to give the right nudge and the framework to ensure that this works. So in the current year's budget, there are two, things which have been clearly spelt out. The first is to reward destinations based upon the performance. Yeah. So essentially the idea that we have in mind is that we need to run a challenge. We need to ask the states to nominate a couple of destinations, and then we will set these benchmarks across sustainability, across cleanliness, hygiene, safety, security. And then we will have different levels, and each time they cross a level, there is a reward which is there for them. Because today when we talk about sustainability, we all get together, go there, we clean up the place, and then 3 months later it's the same story, right? How to bring it within a programmatic framework over the few years. The second thing that you will see in the budget is that there is a commitment to develop 50 new destinations, in which the state governments will be a part of it and the industry will also be a part of it. And this is much required to decongest the existing destinations. Like as Deep has pointed out in his presentation, if you're not going to make India compelling to domestic travelers, they're just going to be going somewhere else. So these are some frameworks within which we are working now.
So if I could pick up on the second aspect, because this was a promise made in the budget that you intend to identify 50 destinations. Have talks begun with state governments, on identifying these cities, on identifying these destinations? Have talks begun with industry? Because this is going to be a tripartite arrangement.
Correct. So informal consultations have started, but what we are now making are the guidelines, the first cut guidelines, which will then have to be shown to the states and to the industry. But this year, hopefully, we think at least the first set of the 50 destinations should be identified and good to go.
Okay, first set of 50 destinations, hopefully by the end of this year. We look forward to hearing more from you on that, and I'll come back to you in just a second. But Mr. Bakai, I want to understand from you, this supply-demand mismatch is something that we've spoken about ad nauseum, but as we look at going from the 2.6 million rooms to over 4 million rooms, and to do it sustainably, not just from an infrastructure point of view, but addressing some of the other challenges and concerns that Mr. Billa highlighted there. How prepared is industry? How conscious is industry? What is it going to cost us?
I'm going to lighten the mood a little bit.
Okay, please do.
While it's a green topic, it's not very peppy. And I have a small anecdote. I was food and beverage manager at a large hotel, and I said to the chef one afternoon, "Chef, I'm going to go home for lunch and come back." And he said, "Why would you go home for lunch? We always have lunch here in the hotel." I said, I have an upset tummy. I'm not feeling so well. "Oh, no." He said, "Don't worry. We'll do the khichdi for you here." So the khichdi came, and the chef who made it, he said, "Food and beverage manager, throw in the ghee, throw in the dry fruits." I had the khichdi, I was down for 3 days. Now, it highlights a very, very strong socio-cultural aspect, where at the moment, the belief is, if you arrive somewhere in life, if you have money in your pocket, you have the right to waste. And a lot of it percolates in our hotels, within our hotels, because we have this concept of VIPs. We've inherited it for a long, long time, and we have some select VIPs. if Shirin Bhan were to stay in a hotel like this or anywhere else, there would be plenty of signs saying, put a card on the pillow, we won't change your linen. Hang up your towel, we won't change it. But you walk out of the room, in 5 minutes, I promise you, everything will be changed. Now, and it's a serious issue because we need more and more education, pushing in more and more in that area, saying, hey guys, we are communicating a certain culture. Let's not assume that because he's paying high money for luxury, he wants to waste. And in any case, we're giving the person the option to change or not to change. So I think that's one part that needs to change. Secondly, if we have to move anywhere effectively, rather than just talking in these sessions, we need a certain benchmark or a certain date by which we say, give it 6 months, a year, 2 years, 3 years from today, we will not have, for example, single-use plastic in our hotels. We can talk about the larger community and what we do with municipalities, etc., etc., etc. But my thing is, what can I do within my walls?
Yeah.
And that needs to come from the state. That needs to come with a mandate saying, hey guys, you have so much time, get your act together. And when we do that, today we're talking bottled plants are extremely expensive, and they are. Package solutions are expensive. We were living with Coca-Cola glass bottles for centuries, for decades. Now, if you say to all the Pepsis and the Coca-Colas, hey guys, no more plastic now. You've got 2 years to get your act together. I promise you they'll come back with answers that are feasible and practical. But somebody needs to set the ball rolling. And I think as hoteliers go, as private industry goes, we are more than happy to put our money where our mouth is.
Okay, so a couple of things there, and then since you've given me the license to pep things up, let me continue with that. So are you saying industry is getting its act together, has got its act together, is nowhere close to getting its act together?
I think there's somewhere in the middle. There's good intent. There's a lot of lip service. And there are things that we're doing wrong because of the lip service. I'll give you an example. A lot of us are using, in the fanciest of hotels, wooden stir sticks. The only thing that stir up is your frustration. That stir stick cannot stir sugar in a cup of tea. They're wooden. The more expensive the hotel, the fancier the packaging. They're packaged in beautiful glass wraps, paper wraps and things like that. They cost a bomb. They're not more efficient or sustainable than a teaspoon with stainless steel. We're doing it because someone put it on their website and said it's a great thing to do, so chalo, sustainable. It is not sustainable. So I think we need to use common sense as we go along all the place. So industry is right at the beginning, 2 out of 10.
2 out of 10.
Yeah.
Okay, that's a good place to start. Anil Chadda, I'm going to get to you now. 2 on 10 is Mr. Bakaya's verdict at this point in time in terms of how industry is faring on the sustainability roadmap. Are you close to that number? Are you better than that number?
One thing we've learned in hospitality is that never argue with the senior either. So I don't want to get into the number game of 2 of 10 or 5 of 10, but I have a small view here is that I think every time we discuss this topic, we are pointing the finger at somebody else, right? I think it's a very collaborative effort. Number one is the organization that you work for. What are your steps that you're taking in? And I'll take 2 minutes to just tell you what we have done at ITC Hotels, because our DNA stems from ITC, and the triple bottom line philosophy is something that we learned and inherited. 23 of our hotels are LEED Platinum certified. World's first 12 hotels belong to ITC Hotels who are LEED Water Zero certified. We have 8 hotels which are LEED Zero Carbon certified. So there's a lot of effort that we have put in building those hotels. In the existing hotels, the plant and machinery, how we could convert that. How do you convert a lot of gas and charcoal and diesel into electricity and convert that into renewable energy is something that you take great pride on. So today when you stay in all these hotels, the LEED Zero Carbon hotels, you get a certificate that you stayed in a LEED Zero Carbon certificate. There's a lot of chatter definitely around every article that you read, and I think there was a great study done by one of the companies, Bain & Company, which said that India is one of those countries where the understanding of sustainability has risen almost 65%. There's a consumer who's talking of sustainability. He may not be wanting to pay you an extra dollar on that, but certainly the movement has begun on that front. So that is part of the organization. And then when you develop these things, why is it that the mayor of Indore is spoken about everywhere? How he went around cleaning the entire society, what he could govern. I think if all of us could do what we could do in our circle, things can be definitely much more faster. And the 2 can definitely become a 5, and eventually you will start giving many more examples of Indore when tourists come into the city.
Thank you very much for, by the way, sharing, and congratulations to you at ITC. And I think the Minister pointed that out as well, that it is important for us to also showcase some of our success stories and hopefully create a little bit of peer pressure as well. But, it comes back to the profit question as well, Anil. When you talk about setting up all of these plants and so on and so forth that you were able to do, what does that mean in terms of investments? What does it mean in terms of capex? Because the ROI question is a question that will have to be answered by hoteliers, by investors as well.
So we were having this breakfast session in the morning, and this is what my belief is also, that I think the knowledge is limited. Now we manage a lot of hotels across the country, and to make an owner understand the return on capital, what you install today, whether you invest in the right boiler, it will pay you back in 2 years. You invest in renewable energy, it will pay you back in 6 years. So there are so many, there's something called an atmospheric water generator, which we've installed in one of our hotels. It takes care of 50% of my drinking water. No, but you need to invest in that particular machine. It's not just because you need to, because you're a sustainable company. It's a need of the hour. And the returns are very much there. So there are people available in every organization. There's a handbook being released today by Mr. Kachru. I think there's a lot of learning which can be shared with a lot of people, and to make them aware that it is not the thing to do, but it is the best thing to do economically also, financially as well.
And Mr. Billa, I want to come back to you because, for ITC, they have deep pockets. They're able to generate the kind of cash that is required to be funneled into, some of the practices that Anil spoke of. But when we talk about India's tourism sector, it's deeply fragmented. It's just about consolidating into some sort of an organized structure at this point in time. Is the government looking at also providing some sort of viability gap funding schemes, etc., for industry to make this transition, whether it is to green energy or to any of these other sustainable practices?
So I think there are 2 parts to it. One is the sustainability that you can achieve by means of technology. And he has just said that how the technology pays for itself. And in several cases, I think we have now, tried and tested technologies which are able to make market, sense as well. So the second is that how do we work with communities to, cast the net wider and create a sustainable ecosystem around it, which is linked to the tourism ecosystem. So that is something that is there. So there are some states who are already working, like Kerala, who have said that all our incentives and subsidies are linked to your achievement on the responsible tourism index. Okay. So that is one way forward. The government of India essentially takes a position of advocacy, and I think there are several states who are now following up on that line. But I think the position now is that it is not about, incentivizing or giving money to do this, but it is more about how do we create something, because if anything, if Kerala, and having worked for several years at Kerala Tourism, if one thing that it has proved is that being responsible and sustainable is not an additional cost burden. It actually positions you in the market better. Today, Kerala is a very expensive destination, but it still rocks because all things being equal, as consumers, we will always choose something that is responsible, that is sustainable, and that is fair.
Gaurav, let me come to you. Let's start with the success story, if there are any that you'd like to share with us. And again, to take that point forward of where you believe industry finds itself today, and if it's 2 or 5 or whatever the number may be, what do you believe the key constraints are? What do you believe the key deterrents are from moving up that ladder?
So I'm actually going to be far more benevolent. I'm going to rate this industry at 5. Given the kind of constraints...
5 is benevolent, is it?
It's pretty benevolent at this moment in time. I think the amount of constraints that we operate within needs to be looked into and lauded as far as the sector is concerned. And to a large extent, why don't we mainstream conversations around sustainability in this particular sector is on account of the fact that 90% of this particular sector is unorganized.
Yes.
And the materiality that the organized part of the sector brings to fore is very limited. Okay. Having said that, I think 1 or 2 things that went very well for us was firstly the fact that it became mandatory for us to disclose certain amount of data on account of SEBI. I think it forced most of the large players to actually go back, put in place a very structured approach towards sustainability. And I think that was a very big challenge that we had. Everybody actually spoke of sustainability. To a large extent, it was lip service that was being provided. I think when we went back and committed to certain targets, and we did that about 3 years back, and we came out with a framework called Pathya, we actually had very audacious targets that were given to us without really understanding the implications. We realized them subsequently to our own peril. But we went out and we actually said by 2030, this is what we are going to do. At the same time, fortunately for us, because we belong to a much larger conglomerate, we had to align our priorities with long-term targets of the Tata Group. And one of the targets that I'd like to speak about as part of the larger framework called Alingana, and we are a sub-framework of that called Pathya, is to be net zero by 2045. And that's a very, very audacious target. We realized, while like most of us, we've already done disclosures on Scope 1 and Scope 2, we realized that in order for us to actually start very seriously mulling over Scope 3, we were not ready. The other fact was that the group office actually imposed upon us that your long-term targets cannot be decided by your agenda given your age. So if I have 5 years, I start putting all my targets 5 years from today. We were forced to actually start using a very structured approach, and we are mulling whether we should go in for science-based target initiative, which actually provides a glide path from now to till 2045 to be net zero. And you have to disclose that data on an annual basis. If you don't achieve it in that particular year, they recalibrate your targets. Now, this is something that will force you to actually allocate your resources and plan your resources accordingly. I think that is where there has to be a cohesion between industry leadership and people who deliver sustainability at the shop floor level. So I think this is something that we are very proud of. We've started to put these blocks together. We started our own understanding of what sustainability means has actually undergone a huge transformation. The second part of sustainability that often tends to get ignored or undervalued is the social part of it. We realize that it's not enough for you to actually create a little department called the Sustainability Department and give it to the HR head as a second hat to wear. We realized that you needed to create a cultural transformation within the organization, or let's say, for a lack of a better word, a critical mass in terms of number of people who could actually take this movement forward. And 3 years back, we launched Pathya. We went to the world at large talking about it. And I think it's been able to gain some kind of traction. The third that I'm personally very, very proud of is the fact that we continued in a very traditional way, building skilling and thereby adding capacity within this sector for all of us, not necessarily for ISCL, through 56 physical skilling centers in India. Starting right from Kupwara, where we have 20 people getting trained, to let's say Assam, where we have 400 kids getting trained every year. So I think these are some of the success stories we've had. And let's see, many more will come out of this session. So we'll blatantly copy them.
And there's absolutely no shame in that. I think that is the idea. Why reinvent the wheel? If somebody is doing something and you've got a playbook that's ready and a template that's working, then might as well go ahead with that. But thank you for also being candid about the fact that, you know, the transition takes time and it isn't an easy one. But I think the point that you're highlighting is that will we continue to see this divergence where the organized sector grows in a certain way, but the lion's share of India's tourism industry is not the organized sector, it's the unorganized sector. So where does the onus then lie on to ensure that the unorganized sector also grows sustainably? You know, who wields the stick? Who holds out the carriage? Is it going to be a role that industry, organized players like you can play? Perhaps the government, of course, will have its part. But to stir things up, and I know from our previous conversations, Patu Keswani is the stirrer. He's quite the stirrer. So Patu, are you 2, 5, 7? Where are you on the barometer?
So energy I define in India as a pizza. Okay, it's got 12 slices. 2 slices go to the farmer. Free. Because, you know, after all, 45% of India's population and about 15% of GDP lies there. That's the big social problem in our country. So they must get free power. Then there are us. We are voters. So we take another 3 slices. But here, you will get it cheap because you vote. So you will get energy at, say, 2/3 of what it should be. Then there are the thugs who steal energy, who, you know, manipulate meters. So they take another slice away. Now we've eaten roughly half this pizza and paid for 1/8 or 1/10 of this pizza. Now we've got the other half of the pizza. We've got another 3 slices going to manufacturing, but we want to encourage manufacturing. It's employment. So there is an industrial tariff rate, which is also about 70% of what it should be. That leaves us. See, we consume 3 slices, but we must pay for 10. Now I'm talking perverse incentive. This is the political economy in this country. How the hell do you think a power-intensive export business would succeed in India? It'd be dead. So unless we clear, and that's what I like, by the way, about this government, is they're trying to clean out perverse incentives. We are trying to become less, there's a saying, good economics leads to good politics. And I'm starting to see that happen. So when that happens, one of the common things, one of the benefits will be, you're going to find the cost of energy today, the rate of appreciation of the cost of energy, fossil-based, is going to be far more than the cost of
renewable.
No, risk-free capital plus inflation. So when that happens, then any investment I make today in renewable, the thesis is on current cost of energy versus current investment. But if I look at the trend line of the rate of growth of energy cost, and funnily enough, if inflation is coming down in India, that part of the bucket which is energy is not. It's actually growing very fast. So this is where I see the future happening. It will be rational. Now, how does the government come in? Simple. Where do you want to bring change? You said a nice thing, carrot or stick. So you have to think about it from that perspective. Make it painful for me or beneficial for me. And change will happen. So whether it's energy, you're talking 5 on 10, 2 on 10, well, Ajay is not my senior. Maybe I'm his senior. So I'll say, I don't agree. I think there are, hotels in India which are 9 on 10. And then there are minus 5 on 10. Okay, so that's how we average 2, 5 or 2 or whatever.
So clearly, ladies and gentlemen, as you see here from this panel, demand is at this point in time, and we have to be careful and mindful of the fact that we could perhaps we don't want to see a cardiac arrest anytime, but that we always need to be mindful of that. But demand at this point in time looks strong. The industry is feeling confident, but there is a capacity constraint. There is a capacity issue that requires urgent attention. It requires urgent intervention, and we've spoken about some of the ways of being able to do that as we address the triple P paradigm of being able to generate jobs, which means provide the people opportunity and to do it mindfully and sustainably for the planet, and ensure that it is sensible from a profit perspective as well. Thank you very, very much for joining us here this morning. Appreciate your time. Thank you very much, ladies and gentlemen.
DGTR has recommended 12% safeguard duty on certain products and with caps on prices of those products. That recommendation is under examination in the government. I think in very near future a final decision will be taken on that. On your second point about 20%, I really don't know, because it's a, as you know, the DGTR process, the safeguard duty imposition process, is a sort of a quasi-judicial process, and DGTR has heard everyone, asked for objections, and after that they have recommended this safeguard duty. I don't see any reason for the rumors about 20% safeguard duty.
Well, the newsmaker, the Chandrababu Naidu-led Andhra Pradesh government has allotted over 21 acres of land to TCS in Visakhapatnam for a price of 99 paise. Yes, you heard that right. It's not a mistake. The IT bellwether will invest over 1,300 crore rupees to build a development centre. The press release from the Andhra Pradesh government cites the example of Tata Motors getting subsidised land in Sanand from the Gujarat government when Narendra Modi was the chief minister. We're now joined by Nara Lokesh, the Minister for HRD, IT, Electronics and Communications in the Andhra Pradesh government. He's also the chairman of the group of ministers for job creation in the state. Mr. Lokesh, many thanks for joining us here on CNBC-TV18. Appreciate your time. Let me start by asking you to elaborate on the terms of the deal that has been inked with TCS. The press release is short on details. Can you take us through how you arrived at this deal where TCS essentially takes the land for 99 paise and sets up a development centre in Vizag?
Just to be clear, Shireen, this is actually a sale of land at 99 paise. And this project of TCS is expected to create close to 12,000 IT jobs in Visakhapatnam, which is the IT capital in the state of Andhra Pradesh. So we're really excited to have TCS land finally in Visakhapatnam, and we're looking forward to inviting the other larger IT players also to come down and set the shop up in Visakhapatnam. Now, Visakhapatnam, it's not just about the land. We have amazing talent that's available. And if you look at it in the IT sector, people from Andhra Pradesh and Telangana, the Telugu-speaking people, have a very large role to play. So we have amazing talent pool. We have great infrastructure. As a state, we're willing to give land at a very subsidized price. And I keep jokingly telling people that if Goa were to marry Bangalore and have a child, that would be Visakhapatnam. So we have it all. And we believe that this could be the trigger for large investments coming to Visakhapatnam.
You know, if I could unpack what you just said there, in your own words, you have it all as far as Visakhapatnam is concerned. You talked about the infrastructure, you talked about the talent pool. Why then did you feel that you needed to sell land to TCS? And once again, I'm pointing out now, as you just corrected us, that it's not leased. You've actually sold the land to TCS for 99 paise. You had all these compelling reasons that you yourself just articulated for us. Why did you then feel the need to sell the land for 99 paise to TCS?
Well, we need a catalyst, and we believe TCS is going to be the catalyst in our IT growth. And that's why we believe that we should give favorable terms to companies that are willing to bet on Visakhapatnam early on. And this is going to come about as a policy, in which we're going to encourage more and more IT companies to come and set up their shops in Visakhapatnam and give favorable terms for them too. And if you look at it as one of our whole promises to create 20 lakh jobs in the state of Andhra Pradesh, both in the private and the government sector. And the cornerstone of that is creating IT jobs. So we are not going to leave any stone unturned in terms of attracting investments.
Okay, so you said that TCS gets the first mover advantage, so to speak, and hence it's been able to get this deal done for 99 paise. Does this now not create a floor or a cap, so to speak, tomorrow if it was to be Infosys or HCL Tech or any other tech company that came your way, would you not have to offer them the same deal?
Well, I'm ready to do some deals and create jobs in Visakhapatnam. I think that's the singular focus that the government currently has.
But this is prized real estate that we're talking about, and you're not leasing, you are selling the land. So I come back again to the possibility of questions being raised, as has happened in the state of Andhra Pradesh previously as well, about under what policy these terms have been arrived at. How will you take forward these decisions? Because I would imagine you want to be mindful of discretionary power and discretionary decision making.
Well, if you look at it, this is how Andhra Pradesh has always done business since the 90s. I mean, that's how we landed ISB in Hyderabad. That's how we got Microsoft to Hyderabad. And if you look at the work that we've done, in 2014, that's how we got Kia to Anantapur district. I mean, you have to take bold decisions, and these decisions have stood the test of time in politics. And if it's going to create jobs, I believe people will bless us with it. No second thought.
Yes, jobs, of course, are important, but you mentioned Microsoft and some other companies, and you said this is how Andhra Pradesh has always done business. But, were those deals done at 99 paise or anywhere close to that amount?
No, absolutely. I mean, if you look at the kind of incentive packages that were given to them, it was very favorable. To bring Kia to Anantapur district, we had to give a favorable incentive package, and we did it. And just because of that one decision, today the per capita income of that one district is among the top 4 in the state of Andhra Pradesh. So that's what makes Telugu Desam Party unique in the way it does things and the way it attracts investments to our state.
No, so I want to come back and labor a little bit more on this. So would it then be fair to assume that this deal, in a sense, becomes the floor for the IT services sector, or even outside of that? I mean, what about manufacturing companies, for instance? Because will you offer a manufacturing company that's looking to set up land at this price?
Well, it depends on the kind of jobs that they're going to create.
So is it linked? So TCS 1,300 crores, 2,000 jobs. How did you arrive at this 99 paise?
It's 12,000 jobs.
12,000 jobs. How did you arrive at the 99 paise?
Because it's an IT company and it'll create higher order jobs for us, and we believe that IT sector should be promoted because the kind of impact it has on the larger ecosystem is massive. And that's how we arrived with that. And we believe that that's how every state should actually compete and attract. And we felt that giving land at this price is going to create a unique competitive advantage for the state of Andhra Pradesh to attract the next wave of IT jobs coming in.
Of the policy reflect this deal that's been done with TCS, or will it be different?
No, it'll be quite similar to what we've announced recently. And we expect to bring that policy to our next cabinet meeting, which is the end of this month.
Okay. And what about manufacturing? I go back again, whether manufacturing should expect similar deals and similar pricing from you?
We've already done it. We've showcased it. Look at the way we've landed ArcelorMittal to Andhra Pradesh. We got Premier Energy to come set up their solar panel manufacturing in Andhra Pradesh. And we got Kia in our last term to Andhra Pradesh. And we got few other companies now already lined up to invest in our state. So we are offering favorable terms to investors based on the kind of jobs that they're going to create. And, they're really excited to invest. Even in the solar renewable energy sector, recently Tata Power has made an announcement to deploy 7 gigawatts of renewable energy assets in Andhra Pradesh. We are here. We're here to move fast, and the speed of doing business is the new mantra for Andhra Pradesh.
The speed of doing business is the new mantra for Andhra Pradesh, as opposed to the ease of doing business, which was anyway promised. But, I want to go back to the linkages. You said it will depend on the kinds of investments a company commits to making. So is there a bare minimum in terms of the quantum of investments, in terms of job creation? If you can give us some idea of what this policy will encapsulate in terms of the minimum required investment as well as the minimum job creation committed or guaranteed.
The IT policy will have a minimum job creation of 500 jobs per acre of land allocated. So that's going to be the thumb rule by which we're going to go. Renewable energy has a completely different parameters on which we take decisions on. The compressed biogas project, which Reliance Industries has landed in Prakasam district, they're going to do 500 plants. That has a completely different policy under the integrated clean energy policy. So we have very, very sectoral specific policies that are already out there. And those policies will drive our incentive packages to the various companies. And it's very dependent on the type and quality of jobs that they're going to create in the state of Andhra Pradesh.
Okay, so sectoral packages, and each will be different depending on the kind of investments committed as well as the job creation that will accrue on account of that. But if I could also ask you to articulate for us, what is the current land bank that the Andhra Pradesh government is sitting on? How much is being allocated for these different sectors at this point in time? How much are you allocating, for instance, for the IT sector to start with?
If you look at it, APIC has close to 1 lakh acres of land already under its possession, and we are in the process of identifying another 2 lakh acres to create MSME parks in every assembly constituency of the state, because MSMEs also create substantial part of jobs. So that's going to be very, very critical for us. And IT is all about Visakhapatnam. And of course, we keep this open to the investor who's willing to invest. They can choose Amravati, they can choose Tirupati. The option is left to them. And we have substantive land available in all these zones to allocate to the IT companies.
Okay, so 1 lakh acres under the Andhra Pradesh government's current land bank. Are you looking at acquiring more? Is the state of Andhra Pradesh looking at further land acquisition at this point in time?
See, more than land acquisition, we believe in the partnership model where the farmers are also part of this entire growth journey. It's called the land pooling. And this is something that we've showcased in our capital, which is Amravati. So we're looking at making the farmers part of this growth journey. So, we will take land from them and they'll get certain percentage of developed land back. And they can also enjoy the fruits of development. And this is going to be very, very important that wealth trickles down all the way to the bottom.
Okay. I also wanted to get a status check from you on some of the conversations that were underway when you were in Davos. You did meet with investors there who were looking at the possibility of setting up facilities in India and particularly in the state of Andhra Pradesh. Has anything moved forward on some of those conversations? I mean, TCS is one decision that's been done. Anything more that we can expect?
Well, in the next 100 days, there'll be quite a few announcements coming out from our conversations at Davos. It's across the logistics sector, in the IT sector, with private universities coming to set up shops, set up the schools rather in Andhra Pradesh. So there's a lot of excitement across sectors and we are ready.
Shipbuilding was another possible sector that you were hoping to draw in investment. Is there an update there as well?
I think at this juncture, I'll be speculating. So you should wait for an announcement and you'll be the first person to know it from me.
Okay, we look forward to that. But, if I may, how much of the announcement is linked to the competitive federalism that we are seeing? I mean, you were part of 6 states pitching your story to foreign investors, to global investors in Davos. They're trying to get pretty much the same universe, the same catchment of companies to set up shop, whether it's in Telangana or Karnataka or even in the north in states like UP, etc. How much of these incentives or subsidies for industry that you're willing to put on the table has to do with the fact that it's a fairly competitive environment? Have you been pushed to offer these sweeteners to draw in investment?
See, we're no longer competing with other states. We're also competing with other countries. It's very important that we understand that. Vietnam plays a very important role in electronics manufacturing. So an investor who's looking at to invest in this part of the world is going to compare countries and then compare states. So it's important that we compete at that level. And I believe that this is very good. Competition is always good and we learn from each other as states. And, some states have specific strengths and certain companies sort of go in that direction. And Andhra Pradesh has its own unique competitive advantage. And that's what we're showcasing at this juncture.
So would it be fair? I mean, you have, of course, listed out a bunch of sectors that you intend to focus on, renewable energy being one of them, electronics, EV manufacturing, oil and petrochemicals, where we've already seen an announcement coming in, food processing. You spoke about MSMEs as well, IT, ITES. Would it be fair to assume that at least for now, in the near term, that IT and ITES will perhaps get top priority in terms of attempting to draw in more investors and more investment?
Our chief minister is an impatient politician. He wants things to be done yesterday. He's very clear that we need to attract investments across sectors. I'm part of the cabinet subcommittee. I'm the chair of the cabinet subcommittee to create 20 lakh jobs in Andhra Pradesh. So our goal is to create 20 lakh jobs across sectors. And we have a very thematic approach based on the districts where we want to create the entire ecosystem, including education, skills, and the whole 9 yards in that particular district. And with a very thematic based approach, we are now building the entire ecosystem. And we believe that we're going to attract investments across sectors. We've already done it. ArcelorMittal is done. We're attracting investments in the pharma sector. Compressed biogas is one thing that's done really well. Renewable energy is done exceptionally well. TCS is a great announcement. You'll see more coming in the IT sector. So it's quite diverse in that sense.
मुंबई का जो सिंगल कार है मुंबई 1, ये कार हम जल्दी ही लॉन्च करने वाले हैं। इसमें जो इसका आर्किटेक्चर है वो अगले 1 महीने में हम लोग पूरा कर लेंगे। इस सिंगल कार के कारण मुंबई और MMR रीजन में जितने पब्लिक ट्रांसपोर्ट है वो सिंगल टिकट पर कोई भी व्यक्ति जर्नी कर पाएगा। उसमें वो जो हमारी सबअर्बन रेलवे है, लोकल ट्रेन, हमारी मेट्रो, हमारी मोनो और हमारी जो ये बस सिस्टम है, बेस्ट हो या थाने की हो या और कहीं की भी हो, ये सबको इंटीग्रेट करके एक ही टिकट में MMR रीजन में आप ट्रैवल कर पाएंगे। एक प्रकार से एंड टू एंड कनेक्टिविटी ये ट्रैवलर को मिलेगी। ऐसा इसका जो आर्किटेक्चर है उसको 1 महीने में पूरा करके उसके बाद उसको हम लॉन्च करेंगे मुंबई 1।
In light of the latest set of tariffs that have been imposed by the Trump administration and the escalation that we are seeing at this point in time as far as the trade war is concerned, how do you position the state of Andhra Pradesh? Are you actively going to be reaching out to investors, particularly in the ASEAN region, who may be looking for supply chain diversification? Are you going to be focusing on Europe as well? I mean, which are the areas, which are the markets that you intend to go after, given the opportunities that you just spoke of that have opened up?
If you look at it, as soon as this government came into power, we revived our Economic Development Board, where we have vertical specialists and we also have country-focused specialists. So we appeal to the broader diaspora out there, and we're looking at attracting investments across sectors and across nations, and that's been our core strength. So we've had Japanese land here, we've had the Koreans being part of our ecosystem, our growth story. Electronics, we've seen a lot of Chinese companies already investing in that sector. So we have been attracting investments across board, and not only that, we're also excited about Indian companies investing in Andhra Pradesh. I think it's very unfair to just chase international companies, but there are a lot of Indian companies who are willing to bet big on states that are very progressive and proactive, and even companies within Andhra Pradesh. So while I chase new dollar, I'm also focused on ensuring that the existing companies do not have any problems. It's been an amazing journey. The cost of doing business is low. The cost of energy is low. So this is something that we're very, very focused on. So it's inward looking. We're looking at our investments within our country, and then we're of course looking at investments across countries.
Okay, I want to focus on Amravati because that has, of course, been the Chief Minister's passion project. And with the funds, the 65,000 crore rupee phase 1 funding in place, of course, things are moving on that front. But what about the debt burden, which is very, very significant? And of course, you've been talking about that, and of course, requiring central assistance has been part of the negotiations that you had with the BJP and with the Prime Minister. How do you address that? How confident do you feel about being able to address that at this point in time?
Well, we have close to 10 lakh crores of debt as a state. Yes, we had a lot of huge pending payments. Those liabilities also inherited from the previous administration. But if you look at it from growth rate, we are already number 2 in the country. Our aspiration is to grow at 15% year on year to be a $2.4 trillion economy by 2047. So the only way we can achieve all this is by speed of doing business. And being out there and attracting investments. This is going to be very, very critical, and aligning all the ministries with that agenda of creating jobs. So with this singular focus, we believe that we can actually grow much faster than any other state. And that will enable us to recoup and deliver on our poll promises also to the people of Andhra Pradesh.
Well, along with the investment-related milestones that you're hoping to clock, there is an important milestone for the Chief Minister coming up. He's going to be turning 75. Can we expect any announcements to mark that milestone?
Well, it's one one more birthday for him. He's a 25-year-old impatient chief minister who really wants to do good for the state and the nation. So it's just another day for him personally. And every day is a new day, a new challenge for us, and we attract investments every day and on a daily basis. So that's what makes Andhra Pradesh and this government unique.
Is he a tough taskmaster?
Absolutely, he is. No second thoughts about it. And he expects all of us to run faster than him, which is a big challenge for all of us. But it's exciting to work with him. And we learn a lot on a daily basis. And him challenging us, pushing us to edge, enables us to innovate. And he's one leader who's given absolute freedom to ministers to do what they can do best and show results. And he only holds us accountable to outcomes.
Well, we do wish him the very best as he marks that milestone. But I want to end by asking, you said the IT policy is going to go to Cabinet by the end of the month. But some of the other sectoral policies that you spoke of, have those been approved by Cabinet already, or will some of those also require Cabinet approval?
All those policies have already received Cabinet approval.
So
those are
already in place. The IT policy is the only one that requires Cabinet approval.
IT policy is already in place. This particular decision that we have taken, which we want to extend to various other IT companies and GCCs who want to invest in Andhra Pradesh, this particular thing would be an amendment to the existing IT policy. And that would be part of our next Cabinet meeting.
Okay, so that's an amendment, because that's what I was wondering, because you had talked about nominal pricing for the ITES sector when we had last spoken. So this is an amendment to an existing policy that you're now bringing about in light of the deal that's been done with TCS.
Exactly.
Nara Lokesh, always a pleasure. Many, many thanks for joining us and explaining the rationale behind the big announcement that came in from the Andhra Pradesh government. Selling over 21 acres of land to TCS to set up an IT hub in Vizag in the state of Andhra Pradesh, and an amendment being brought in to ensure that similar terms will be offered to other ITES companies that are looking to set up in the state. A pleasure speaking with you. Thanks very much for your time. We are going to take a break here on the CNBC-TV18 Newsmaker. We're back in a moment with more.
Welcome back. Cognizant India CMD Rajesh Warrier says that his organization is offering courses to educate employees on the unconscious bias that women face at workplaces. Speaking to Rachna Dhanrajani on the sidelines of the Mumbai chapter of Future Female Forward, Warrier said that having allies and sponsors at every stage is crucial for women's career growth. Take a look.
While at an industry, IT sector has done largely well. We have NASSCOM report says we have about 36% women in workforce. Cognizant has close to 40% women in workforce. But when you look at it across the industry, the percentage of women really starts dropping towards the leadership as you go up the leadership ladder. And there are many reasons for that. One of them you just alluded to, which is when there is a family event, for example, women having a child after maternity, it's very difficult to come back and just get back into workforce. Right? So what is really required is you need a bunch of flexible policies that allow women to, for example, work part-time, after the maternity leave is over, start coming back to work, but work part-time or work remotely and so on. So there is a bunch of initiative which is required, which is around flexible policies. The second thing that is really required is to counter things like unconscious bias. Unconscious bias is something that happens across the organizations. It's a global phenomena. You assume certain things because you're dealing with a woman, right? And I think rooting out unconscious bias is very important. In Cognizant, for example, we have courses which actually educate people about unconscious bias, which most people don't even realize, right? So we have courses around inclusion, we have courses around unconscious bias, we have courses around allyship, which brings me to the third point, which is around allyship and sponsorship. At every point in a person's career, it's important to have allies who help you through situations where you need some help. You have sponsors who help you through situations where you need help. So actively having an allyship program or a sponsorship program is extremely important to help women tide through situations where which might cause them to drop off from a career and instead continue their career and so on. So there is a bunch of things that can be done to help increase the number of women in leadership, and these are well-known things which needs to be executed, and hopefully as these get executed we will have more women in leadership.
From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us, with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies, because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Besant has already said that we will, the first 4 deals we sign are with allies, and he used the word, we didn't, which was UK, Japan, Korea and India. I was very intrigued to hear that, because they've always said we want to bring things onshore, we want to bring things near shore, which is Mexico and others, and then we want people which are friend shore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they are laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage.
Hello and welcome to Startup Street. I'm Arundhati Ramanan and these are the top headlines from the startup world. Mamaearth's parent company Honasa takes Hindustan Unilever to court over an advertisement for Lakme's sunscreen. Honasa claims the Lakme ad is disparaging. HUL defends the ad. Delhi High Court likely to hear the case tomorrow. IPO-bound off-business and industrial goods and services procurement platform raises 100 crore rupees from Cornerstone Ventures. The proceeds will be used to drive digital adoption and make finance accessible for small and medium enterprises. Drone startup Garuda Aerospace secures 100 crore rupees in Series B funding round from venture capitalists. This at a valuation of $250 million. Funds will be used to scale production facility and fast-track the completion of R&D and testing center dedicated to advanced defense drone design. Magma, a B2B industrial solutions provider, closes a $5 million Series A funding round led by Capriya Ventures. This operationally profitable startup is currently growing at a 250 crore rupee revenue run rate and aims to scale this even further. Alphabet's Google faces £5 billion lawsuit in the UK over alleged abuse of dominant market position in the online search industry. The lawsuit claims Google abused its position to restrict competing search engines and made itself the only viable destination for online search advertising. Those were the headlines from the startup world. Now to a legal battle that has played out between Honasa and HUL. Mamaearth's parent company, Honasa, has taken Hindustan Unilever to court over an advertisement for Lakme's sunscreen. Shilpa Ranipeta is here with all of those details on this legal battle. Shilpa, take us through what's going on.
Well, there's an SPF war that's brewing between HUL and Honasa Consumer, and this is a day after Honasa actually sued HUL in the Delhi High Court. Now, HUL, which is the latest, has moved to the Bombay High Court against Honasa Consumer, alleging brand disparagement in an ad for the Dermaco sunscreen. Now, HUL alleges that a recent Dermaco billboard directly targets its Lakme ad, quoting, and hey Lakme, congratulations on finally getting SPF 50 in vivo tested. Welcome to the Dermaco standard. Now, HUL is seeking a court directive to restrain Honasa from further brand disparagement. Now, this comes close on the heels of Honasa's case against HUL in the Delhi High Court over a Lakme campaign which features an SPF lie detector test, which claims that some SPF sunscreens actually offer as little as SPF 20 protection. Now, Honasa alleges that the unnamed product that shown in the ad actually resembles the Dermaco sunscreen, and it has sought the ad's takedown, calling it misleading and damaging to its brand. Now, the Delhi High Court has noted that the Lakme ad appears to be disparaging on the face of it and has sought HUL's response. Now, that matter will be heard next on the 17th of April. Now, notably, India currently lacks a clear regulatory framework for SPF testing. There's no watchdog verifying the product claims. Now, HUL maintains that Lakme has followed the in vivo SPF testing, which is considered the global gold standard since 2015, and says that independent lab test results show that several brands, including some of the online bestsellers, fall short on their claims. Now, the two legal battles, Honasa's in the Delhi High Court and HUL's in the Bombay High Court, underscore an intensifying competition in India's 2,000 crore sunscreen market, and it will be interesting to see how this plays out. Back to you.
Absolutely, Shilpa. Many thanks for taking us through those details. Now, one of the many casualties of the volatile market has been India's IPO market, which witnessed a slowdown in recent times. As per Prime database, 144 IPOs worth 1.47 lakh crore rupees are put on hold. Rachna Dhanrajani is here with a list of IPOs that have hit a pause button. Rachna?
That's right. India's IPO timeline has hit a major roadblock. A staggering 144 companies with public issue plans worth 1.47 lakh rupees are currently on hold. Of these, 67 firms are waiting for SEBI's nod to go ahead. This is according to data from Prime database. But the slowdown is not just on paper. It's visible in the numbers as well. January and February saw just 16,000 crore rupees raised from 10 main board IPOs. That's a sharp 37% decline from the previous month, December 2024. And in March, the IPO market came to a complete standstill. Not a single main board issue was launched. This reflects the deep freeze gripping India's primary markets. Several high-profile names have either delayed or scaled back their IPO plans, citing market conditions, valuation concerns and regulatory delays. Start with Ather Energy, as we've been reporting for weeks now that the electric two-wheeler maker had initially aimed for a 4,000 crore rupee IPO. But that number has now been revised down to roughly 3,000 crore rupees. Its valuation has also taken a significant hit from initial 20,000 crore, then revised again, and now it's again at 12,800 crore rupees. That's what we're told by our sources. Ather has already filed 2 updated DRHPs, pushing the timeline for the launch to finally end of this month. Urban Company is also in wait-and-watch mode. The platform, which was targeting a $2 to $3 billion valuation and hoped to raise about 3,000 crore rupees via the IPO, has now taken a 80% cut in its issue and now aims to raise about 500 crore rupees. The timeline, however, seems to be on track for Urban Company. Another much-anticipated one is Milky Mist. The dairy major is moving forward with its IPO plans and has aimed to raise about 2,000 crore rupees by the end of this year, backed by 50 crore rupees in profits that they made in FY24. The company is also working on pre-IPO funding round to shore up investor confidence amid the current volatility and ahead of their launch, of course. But then there's LG Electronics India. Its massive 15,000 crore offer for sale, once expected to be one of the largest consumer IPOs in the Indian market, has now been shelved. Sources have said that the delay is due to global macroeconomic uncertainties and shifting investor sentiment, both of which have prompted the company to rethink its timing. As per sources, JSW Cement too has pushed its 4,000 crore rupee IPO to July now. Zepto, that has been much spoken about in the IPO circles, but is now in process of adding more domestic names to its cap table and is so conducting pre-IPO rounds. It also has valuation concerns that we've seen amid the volatility, but it is now expected to finally go ahead with its IPO in Q3 of this year. According to sources, even Tata Capital, whose 15,000 crore rupee IPO was widely anticipated, has decided to delay its listing plans amid the tepid market environment. Put together, these delays point to a broader malaise in India's primary markets. Regulatory bottlenecks, concerns over inflated valuations and volatile global cues have made companies cautious about going public. SEBI's tighter scrutiny under the Market Infrastructure Institutions framework is also slowing down this process. For entities like NSDL, which is still working through regulatory approvals until there's greater clarity on interest rates, macroeconomic stability and investor appetite, India's IPO pipeline, which was once flush with momentum, may continue to remain on ice, but we will be keeping an eye out for the same.
All right, Rachna, thank you so much for taking us through all of those details on what's brewing today. We have with us Magma, which is an industrial B2B solutions provider and has just raised $5 million in a Series A round led by Capriya Ventures with backing from big names like General Catalyst and ASEAN Venture Lab. Now, the company is setting its sights on becoming the go-to operating system for factories across India. And joining me now to discuss their growth plans is Neil Thakkar, the founder of Magma. Neil, thank you so much for taking time out and being here with us on Startup Street. You know, before we get to the fundraise, right, if you could sort of take us through the key differentiators that position Magma as a category-defining industrial solutions provider in India, and, you know, what are your key offerings?
Yeah, thanks, Arundhati, first of all, for having me. You know, it's wonderful to be here. To give you a sense, you know, Magma is a end-to-end industrial solutions provider. We serve factories and we provide them with a wide range of critical manufacturing solutions, ranging from their pre-production to post-production offerings. So we take a pretty integrated approach compared to incumbents in the space. You know, one of the overarching theses for us has been that a lot has been talked about China plus one and shift of manufacturing from China to India, but very little has been talked about whether these factories in India are actually ready. And precisely what Magma is about is getting these factories ready. So we've built a suite of critical solutions, and, you know, to give you a sense of our offerings, you know, we have a pre-production offering where we provide customized raw material solutions to factories. We have a green energy and biomaterials business where we actually serve day-to-day energy requirements for a factory. We have a waste management business where we help factories liquidate their waste, we recycle it. So if you think about our offerings, you know, right from input to output, we've created an ecosystem play, really ensuring that, you know, we become the integrated solution partner for our factories.
Sure. And, you know, if you could quickly tell us, how will you use this $5 million Series A funding? You know, you're looking to allocate it across backward integration, tech development, and your core factory offerings?
Yeah, absolutely. Look, this is our third raise in the past 3 years. The company is 3 years old, and this marks our third raise. We've raised $3.3 million before in the past from notable investors like General Catalyst, Axion, Way, as legendary institutional investors. And we're so excited and lucky to be welcoming Capria Ventures, another global marquee institutional investor on the cap table with this round. In terms of the proceeds of the funds, right? What we've been mindful is building a proven playbook. So this round is particularly very strategic for the company because we don't want to invest this capital in experimentation. We want to invest in proven playbook. So we're going to be deploying major portion of the capital in building that robust infrastructure around it. And of course, with that backward integration model, it's something that I mentioned is Magma's best kept secret. We like to own the entire value chain. We like to optimize every step of the value chain. And what that means is that, we want to partner with, without going into the specific, tens of captive facilities working for us.
Sure.
And yeah.
Yeah. And, you have over 250 industrial clients already on board, right? So how does Magma plan to deepen your client relationship and increase wallet share across your existing customer base?
Yeah, look, our approach is pretty straightforward. Every offering that you take from Magma at least gives us a double-digit % share in the wallet. So the more we can, milk margins from the same customer, deepen our wallet share. I mean, when we talk about the 250 industrial customers, right? We've already, got validated by replicating our playbook with industrial conglomerates like Reliance, Arvind. So when we talk about the long tail SMEs, right, it's really about building a funnel, giving them what they need day to day, and then kind of cross-selling and upselling the other offerings, which will help us expand the wallet share.
All right. And given that Magma is operationally profitable, how does the company plan to maintain this profitability while scaling aggressively to reach 1,000 crore rupees in revenue run rate?
Yeah, absolutely. Look, we've been, pretty optimistic on that number. Hopefully soon enough we achieve that, maybe in the next 18 to 24 months. When we talk about growth, right? Look, we've multiplied the company on a scale of millions of dollars. When you look at the last 24 months, we've just grown, and we're going to continue multiplying. I believe we're one of the fastest growing industrial and supply chain enablement startups in the country right now. So we're going to continue doubling down on growth. Of course, not just top line. From an economics point of view, Arundhati, we take a very bottoms up approach. Today, 70% of our business is already at double-digit margins, right? So when you talk about B2B, it's often viewed as a low-margin business, but we want to do that with the right rotation of working capital. When Deloitte did our financial and tax diligence, they noted a 18-day working capital cycle. So we're willing to, just stick to that. And for that, the simple thing we always tell ourselves is we want to be critical for factories. So if we continue expanding our offerings, which are critical for them, naturally we're going to see the top line and bottom line pan out as we expect it to.
All right. And in 30 seconds, if you could tell us what's the expansion plan, any new regions that you're looking at entering?
Yeah, Rajasthan, Maharashtra, Andhra Pradesh, these are three particular regions where we're going to start expanding. Of course, we're, building a playbook there because, how our playbook in Gujarat was that, we were using our green energy business and then kind of building our funnel and then cross-selling and upselling our high margin offerings. So we're going to be building a playbook across these three. Secondly, of course, we want to ramp up our manufacturing capabilities. Today, we have 8 captive facilities working with us. Hopefully, by the end of this calendar year, we are targeting to scale that over to 20 manufacturing capabilities, and this fundraise is just definitely going to allow us for that. And lastly, invest in tech, invest in team. This is a company that's taken a tech first approach since day one.
Sure.
Even yeah.
All right, Neil. Thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this venture going forward.
Thank you so much. It's a pleasure.
Moving on, Gurugram-based cross-border startup Zindis has raised $10 million in a Series A round led by 314 Capital and Oreos Venture Partners. The company, which helps Indian SMEs expand globally, plans to onboard 10,000 businesses and hit $200 million in GMV over the next 18 months. With bold moves into markets like the US, UK and the Middle East, Zindis is building a global trade engine tailored for India's exporters. So how do they plan to scale this vision? Joining me now to discuss this further is Saurabh Goel, the CEO and co-founder of Zindis. Saurabh, thank you so much for taking time out and being here with us, on Startup Street. If you could start by telling us what are the core challenges in global trade that Zindus is solving for, especially for the Indian SMEs, and how does the Zindus One platform differentiate itself from other global logistics and compliance solutions?
Sure. Arundhati, first, thanks for, of course, having me here. Great to be here speaking to you. And I think, thematically, right, you were just talking to another startup about how it is the right time for India to build exports. And a lot of small, medium-sized businesses in India have had very limited exposure to doing exports. And, even when they've done it, right, it's not been the most efficient way. Number of hurdles on the way, from shipping to figuring out product compliance, to trade compliance, needing legal entities in destination markets, local fulfillment, taxation, duties, and also in today's context, right, with so much changes happening in the regulatory sort of framework, right, small, medium-sized businesses struggle to put all of this together into what I call a modern day tech silk route, right, to be able to operate efficiently. And eventually, right, that leads to sort of, denial of market access, increased costs, and essentially means that you're not able to sort of perform to potential, right? So simply put, right, at Zindus One, we try to bring all of this into a single operating system for global exports to allow small, medium-sized businesses to operate like large businesses with the same efficiencies. In some ways we say like Alibaba and Amazon, and be able to sort of go to the world and sort of win in international markets.
Right, and you've raised this $10 million in a Series A round. If you could sort of explain to us how you plan to allocate the capital across product development, market expansion, and customer acquisition.
Sure. So the last 2 years, we largely spent time building the India into the US corridor. Over the last couple of months, we just launched into UK. So one of the things that we will do is we will rapidly expand geographic reach for Indian small businesses, medium-sized businesses. So we're looking to sort of open up Canada, Europe, Middle East, Australia as sort of markets. We're looking to deepen the product stack from shipping via air and ocean, trade compliance, product compliance, local fulfillment in destination markets, ability to run merchant on record solutions, local fulfillment returns, etc. And of course, integration into hundreds of marketplaces around the world, both B2B, B2C, so that startups and Indian startups, Indian small, medium-sized businesses can expand at pace as the world opens up an opportunity for sort of global trade to get reordered with everything that's sort of happening, right? So that's the second piece that we will do. The third piece that we're sort of looking to do is that today we've served about 1,000 businesses, right? So the next 18 months, our goal is to take this to 10,000 businesses. Today we're at about a $30 million GMV run rate. We plan to expand this to about a $200 million GMV run rate. So basically, right, if you sort of put it together, geographic expansion, product depth, more number of customers, and then of course leading to higher sort of wallet share and more GMV running through the platform.
Right, you just pointed out about how you want to take your GMV from current levels to $200 million within the next 12 to 18 months. Are you on track to do this? Can you take us through the kind of targets you hope to hit by the end of this year and what you're currently making?
Sure. So like you said, right, we're at about $30 million GMV run rate right now. So the customers who work with us, right, we find very high core retention stickiness on those customers. So as we expand corridors, we know that many of our customers work across corridors, and we expect to gain that wallet share just basis the level of trust, relationship, repeatability, stickiness that we see. So there's just a growth in GMV by serving the same customers across corridors. That's one. And two, of course, as we take the sort of number of customers from the current 1,000 to 10,000 with a very proven playbook where we sort of starting to add 150, 200 customers per month and sort of ramping that up at a very, very aggressive rate now. We feel very confident that maybe by the end of this year, we will probably be close to about 100 million GMV run rate, and in another 6 to 8 months from there, we should be at about a 200 million GMV run rate. So essentially, we should be able to grow this 5 to 6 times over the next 18 months.
So looking to grow 5 to 6 times in the next 18 months. But if you could sort of explain to us, how do you see the current geopolitical tensions that are happening around the world, right? How do you see that impacting the business? What's the kind of opportunity or challenge that you see here?
Sure. So I was traveling last week, met a lot of people around the region as well, who are sort of deeply into cross-border manufacturing, supply chains, etc. I particularly see this as a window of opportunity for India, right? So global trade is fairly sticky, right? Supply chains are very well entrenched, right? So when geopolitical non-trade reasons upset supply chains, right? Or reorder supply chains. I think there's an opportunity to sort of move at pace. So that is one thing that I see for India particularly, right? Two, for many years, people have been talking about China plus one as a story, and it has been happening at a certain rate. With the amount of uncertainty and volatility, I believe a lot of people will now accelerate that change to be a multi-country sourcing entity, right? And that should play to sort of India's advantage. In certain cases, some of the Southeast Asian competitors from a manufacturing standpoint, I think in certain cases, probably India was at a tariff disadvantage. I think as we are seeing this play out, we should be at a tariff neutrality, if not better. That should sort of play to India's advantage as well. And lastly, right, like I said, one of the things that you need a very tech-driven future future shock-proof supply chain. And that is what Zindus One offers, right? Because we have the ability to allow you to configure your business to optimize on what the sort of environment is. Yeah.
So you see an opportunity here for India, especially in this space. All right, Saurabh, thank you so much for taking time out and being here with us on Startup Street, but we're completely out of time and we wish you all the best going forward.
Thank you. Thanks a lot, Anandati.
On that note, it is time for us to head into a short break. But coming up next, Bluestone seeks to raise 2,500 crore rupees through its IPO. Conversation with Gaurav Singh Kushwaha, the founder and CEO of Bluestone. On the other side, stay tuned.
So the way this is playing out, I think, look, US is a $80,000 per capita economy. We are a $3,000 per capita economy. There are very, very few things which are going to land from the US into the Indian market which we can afford to buy. Our market really doesn't have that depth. So optically, it looks very scary when you say, oh, Harley Davidson is charged 100%. How many will you sell? You sell like 5,000 BYD cars over here. You sell like 15,000 Mercedes cars of all varieties over here. So it's not like this market is going to get flooded or has the ability to absorb that. But to kickstart an economic cycle, like it happened with Southeast Asia and China, unless you create a catalyst, which is I create capacity which goes to the West and gives those workers the income to then kickstart local consumption, that's how you got export, investment and domestic consumption aligned up. Today we are in that holding range of 6% GDP growth, because why does an Indian industrialist want to invest? Because the consumption is still very, very feeble. And that consumption is feeble because unfortunately there are no great job creation happening. And we've gone from the $100,000 IT services jobs of the 1990s to maybe a $15,000 Zomato rider today. Nothing wrong, we have to create all these jobs, but we've gone down the value chain. In a sense, even IT went down to GCCs. It's not gone up to making IT products and technology and ownership of IP. But that cannot come until you're part of an ecosystem where you're learning and then you can start making your own product. Because we were just not in any of these global supply chains for so long.
Welcome back. You're still with us on Startup Street. Bluestone is preparing to raise 2,500 crore rupees through its upcoming IPO. As the company gears up for its public debut, it's also expanding its offline footprint while maintaining a strong digital presence. In a chat with Gaurav Singh Kushwaha, the founder and CEO of Bluestone, my colleague Aishwarya Anand speaks to him about the planned use of IPO funds and the company's strategy to drive profitability ahead of its listing. Take a look.
One big milestone for you is very, very near, where you're planning to go for an IPO. You're planning to raise 2,500 crores via your IPO. So I want to understand, where do you plan on allocating that fund? And what are the plans on that front? And also another thing that I wanted to ask you is, there's a recent report by Stride Ventures which came that a lot of companies are now raising pre-IPO money. So that market in India is opening. You've been one of those. So if you could shed some light that, how does that help a startup, strengthen their balance sheet?
Sure. So in terms of use of capital, as mentioned in the DRHP, a large chunk of it is towards the working capital. Our business requires a lot of inventory, gold, diamonds and so on. So as we ramp up our store presence, as we reach out to more and more cities and towns in the country, we'll need more capital to open more stores and to have more inventory in those stores. About the pre-IPO round, so last year we took couple of pre-IPO rounds, and the idea there was to make sure that the company is well funded as we go towards the IPO, so that the growth, all the growth plans, all the other capital allocation plans that we have, do not wait for IPO. That was number one. Number two was that we have been around for around 10-11 years and we have been venture funded. Many of our investors had joined the cap table 10-11 years back and so on. And post-IPO there are lock-ins, etc. And many of our investors are not comfortable in the public markets. So the idea was to kind of shift that cap table or swap that cap table and get investors who are more appropriate and more ready for public markets.
You spoke about the expansion of stores, right? So help me understand, how many stores do you have currently, and what are the plans of expanding those by the end of this year, if we can talk about that? And currently, what is the kind of revenue mix you're getting via your online channel, because that's your primary sales for primary source of sales. So what's the kind of revenue mix is through online and offline?
Our store count at the end of December of 2024 was close to 255, and this year also, this financial year also, we have expanded very rapidly. Intention is, so if you look at India, it's a very big country. If you look at some of the other jewelry brands like Tanishq, like CaratLane, etc., Malabar, etc., the number of stores that they have are significantly more than what we have. And our stores being a relatively smaller format and relatively smaller catchment, I think there's scope of opening significantly more stores, and there are lots and lots of cities that we can go to. Majority of our customers and majority of our sales originate online to the tune of almost 80 to 90%. Now, given the nature of the category, given that the price points are high, given that this is a category where a customer is not looking for convenience, they are looking for experience.
Correct.
Right? So after spending several weeks online, a lot of these consumers then actually go to stores with a short list of product already done. Then they look at those products and more products offline, and then they purchase.
To get the look and the feel,
of that.
Product. Correct.
So majority of the invoices hence happen in stores.
Are you using quick commerce platforms as a sales channel, or do you plan on getting onboarded? Are there challenges there? If you could shed some light on that.
Sure. So in the past, around some of the events like Valentine's and Dhanteras, we tried the quick commerce platforms with some limited SKUs. What we realized is that products like, or very basic products like coins, etc., they can potentially be sold there. But when it comes to buying proper jewelry, I think people are looking for a much better experience.
They're looking for a much better.
Yeah, and also quick commerce typically works where the demand is very concentrated. In this particular case, for the same design, I won't have a very concentrated design. Right? The lifestyle category, jewelry category is fundamentally such that different people would want to flaunt different designs.
Correct.
And not everyone in the same catchment would want the same SKU.
Yeah.
Right? So SKU planning, merchandising planning is not something which works naturally for quick commerce.
Bluestone has been able to, grow its operating revenues by 64%, whereas you've also narrowed down your losses by 12%. So before you hit the public markets, what are the efforts that you're putting in to ensure that you turn profitable?
In the last 5 years, we have ramped up the stores very, very rapidly. And stores take time to mature. As they grow year over year, they show growth. And typically then what happens is if I look at the business mix right now, if I look at the store mix right now, I see a lot of operating leverage where the cost is already baked in the P&L. But the true revenue potential is, most of the stores are still far from their true revenue potential.
Correct.
So as they reach closer to that, and I think a lot of that operating leverage will kind of unlock, and the profitability will come from there. So I'm saying I see some signs of it naturally happening.
Yeah.
And as more and more stores start moving towards that direction, I think at an overall level also profitability.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
na 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 na
we have with us a very special guest, Union Commerce Minister, Shri Piyush Goyal ji. Piyush ji, good evening. Welcome to Rising Bharat. It's Wednesday. Trump tariffs have kicked in. Markets are volatile. Recession fears loom. What is India's strategy, sir?
Thank you, Palki. Thank you, Palki. I think we've all seen the way Prime Minister Modi has deftly managed the entire situation. He was very cognizant of the impending possibilities. He was first off the block in building back his old friendship and relationship with President Trump. They both jointly declared that the US and India are trusted partners, and we will work towards a bilateral